Okay, let us start with the joint products and byproducts, and then we have to complete the service costing, standard costing, marginal costing, budgetary control. Totally 5 topics. Okay, now first, joint products and byproducts. Let us understand what we are understanding from this chapter. In process costing, we have seen that process wise how to apportion the cost between completed and uncompleted loss. That is what we did it in the process costing. When it comes to joint products and byproducts, the main focus is how to apportion the joint cost between the multiple products. So please understand, whenever the company is doing the process, all the processes will not give the same type of product. There are some processes which give multiple products as output. The best example is, I can show you the picture. The best example is when the company is into the manufacturing of the output from the crude oil. Repeat this. So, getting output from the crude oil. Crude oil is the input. From the by giving crude oil input, we are getting petroleum gas, petrol, kerosene, diesel, industrial oil. All these things are the output. That means we're doing one single process, but we're getting multiple products as output. In these kind of situations, we can apply the concept called the joint products and byproducts. So in previous chapter process costing, I told you that the output should be similar, only one type of output. Then only we can apply the process costing. When there is a multiple products as output, then we have to apply the joint products and byproducts. Are you able to identify the difference between process costing and joint product byproducts? Actually, this topic is an extension. It is an extension to the process costing. So here the main objective is, you listen to me. In this process, what is the input? Crude oil. Apart from that, direct wages will be incurred, direct expense will be incurred, overheads will be incurred. If you make a total of all these things, can I call it as joint cost? Why I given the name called a joint cost? Because to get the joint products as output, we're incurring the cost. The process which is giving multiple products as output, is called a joint process. So first we need to understand what is joint cost, what is joint process, what is joint cost, and what is byproducts. So first we need to understand this. Let us understand this. Let me take one example to understand that. See here, this is the joint process. Why I am calling it a joint process means, it is giving product A and product B. Two products are getting out as the output. So that I am calling it as the joint process. To operate this joint process, I have to give the input of material, input of labor, input of overheads. If you make a total of these things, that is called as the joint cost. If you make a total of the cost, that is called as the joint cost. So the product A and product B are the joint products. So now we need to understand difference between joint product and byproduct. What is joint product means? The product which has the ability to recover the apportioned cost. The products which has the ability to recover the cost and which has the significant market value. The product which has the significant market value will be called as the joint products. The product which does not have the ability to recover the cost, which does not have the significant market value, those product is called the byproduct. I can give you one more example. Suppose if you look at here, just as an example, if you look at here, this is the sugarcane mission. When they're crushing the sugarcane, two things will get as the output. One is juice and one more thing is molasses. Molasses does not have the ready market. But juice has the ready market. So in this case, what is the joint product means? Juice, because juice can generate the revenue and it can recover the cost. Whereas molasses cannot generate the revenue. It requires some further processing to generate the revenue. Are you understand? So molasses is called the byproduct. Suppose if you take one more example, if you look at here, cow, when you feed the cow, it will give two things as output. One is cow dung and one more thing is milk. Milk is a joint product. It can generate the revenue. Cow dung is a byproduct. Are you understanding? All of you. So this is the difference between joint product and byproduct. Now the target is this joint cost whatever we incur. The joint cost whatever we incurred, that we need to apportion between product A and product B. There are different methods to do that. Number one, physical units method. So as I told you, the target is to apportion the joint cost. Apportion the joint cost between joint products. Are you understanding? All of you. So the target is whatever the joint cost that we incur, that we need to apportion between product A and product B. How to do that means on the base of physical units produced. That is number one. Number two, on the base of contribution margin method. There is one more method called as the contribution margin method. Number three, constant gross margin method. Constant gross margin method. Number four, sales value method. These are the four different methods which helps to apportion the joint cost. Under sale value method, we have three methods. Sale value at split off. Sale value at split off point method. B. In short form, we'll call it as sale value at split off point. Sale value at split off point. SPASP. One more method called as the NRV method. NRV stands for net realizable value method. NRV stands for net realizable value method. And one more thing, sale value after further processing. In short, we call it as SPAFP. Sale value after further processing. These are the different methods to apportion the joint cost. As I told you, the objective is to apportion the joint cost. These are the different methods to apportion the joint cost. When I say physical units method, how we are going to do that? Product A, 10,000 kgs is the output. Product B, 8,000 kgs is the output. What is the proportion? 10:8, or can I call it a 5:4? So this is the proportion to apportion the joint cost. That is called physical units method. Are you understanding? Next, one more method is contribution margin method. What is this contribution margin method? Method means the moment you look at the contribution, it is about sales minus variable cost. Are understanding? Sometimes what they'll do, this joint cost, they'll classify into two, variable cost and fixed cost. This variable cost will be apportioned based on units. Units is the base to apportion the variable cost. When it comes to fixed cost, it will be apportioned based on contribution, because contribution helps to recover the fixed cost. So please understand, when they given the classification of joint cost into variable cost and fixed cost, variable cost apportioned based on the units and fixed cost apportioned based on the contribution. That is called the contribution margin method. Are understanding? Next, one more method called the constant gross margin method. One more method is constant gross margin method. What is this constant gross margin method means? As I told you, product A, product B. According to this method, the GPR should be same for both. That is called constant gross margin method. How it can be same? First, what we need to do? For both the products, take the totals. Total of sales. Reduce the cost of goods sold. We'll get gross profit. Using gross profit and sales, calculate the GPR. Take the total first. Take the total of all the products. Suppose product A, product B, product C is there. Take the total of all the three products. Sales. Take the cost. And if sales minus cost of goods sold, we'll get the gross profit. Are understanding? So gross profit divided by sales, we'll get GPR. This is the GPR of the total. Now what we need to do? Take product price. Product A, product B, product C. So first take sales minus GPR. We'll get cost of goods sold. From the cost of goods sold, reduce the further processing cost. We'll get the joint cost. In this chapter, whenever I say cost of goods sold, it is a sum of joint cost and further processing cost. It is a sum of joint cost and further processing cost. Are you understanding? All of you. So this is how we are going to do the constant gross margin method. At last, we have one more method called the sale value method. So here I am taking two things. Sale value at split off point. Listen. Sale value at split off point. Sale value after further processing. What is the meaning of that? Look at the picture. This is the split off point. Correct? This is the split off point where the two products get bifurcated. Product A, product B. Now what happened? Product A, when it comes to product A, it can be sold at split off point or after further processing. Are you understanding? So this product A can be further processed by incurring some further processing cost. This product A will convert it to product X. As how we convert butter into ghee by further processing by applying the heat. Same way product A can be converted to product X by doing some further processing. Same way product B, by doing further processing or by incurring further processing cost, we can convert into product Y. Product A and B are at split off point. Product X and Y after further processing. Product A price might be 10 rupees. Product X price might be 20 rupees. This is the price at split off point. This is the price after further processing. Are you understanding? Into number of units, you get the sale value at split off point, sale value after further processing. All of you clear? Now, then what is NRV? NRV equal to sale value after further processing minus further processing cost. Sale value after further processing minus further processing cost. We'll get NRV, net realizable value. Out of these three, this is the first one, this is the second one, and this is the third one. Second one is NRV. Out of these three, which is most appropriate method to apportion the joint cost means sale value at split off point. That's the first preferable method. Next is NRV. Next is sale price after further processing. If you want to prepare the cost sheet, for joint products and byproducts, how to do that means first we'll take particulars amount. Under particulars we'll take joint cost. That is the first primary cost incurred. Then we'll add the further processing cost. We'll be getting cost of goods sold. Are you understanding? We'll be okay. Or else I can tell you that we'll be getting cost of production. Then adjust opening stock of finished goods less closing stock of finished goods. We'll be getting cost of goods sold. Add admin overheads. General. Add selling and distribution overheads. We'll get cost of sales. Add profit. We'll be getting sales. Here the classification is joint cost and further processing cost. Joint cost means the cost which is incurred to operate the joint process. Further processing cost means after getting the output, whatever the extra cost incurred to further process, that is called the further processing. To produce ghee, what is the material? To produce ghee, what is the basic material? Base material. What is the base material? From where you will get the ghee? Milk. Milk is the base material. This milk gets converted to butter, and then butter gets converted to ghee. Are you understanding? So that means butter is the product at split off point. Ghee is the product after further processing. Are you understanding? Whatever the cost incurred to get the butter is the joint cost. Whatever the cost incurred to get the ghee is called as the further processing cost. Are you able to interlink with the concept? All of you. So if you make a total, we'll get the total cost of production of ghee. And then adjust the opening finished goods, closing finished goods. We'll get cost of goods sold. Add admin overhead, selling and distribution, we'll get cost of sales. Add profit, we'll get the sales. Clear? All of you? Now, if you want to evaluate butter, should I take further processing cost also? No. Further processing cost belongs to ghee. When you want to evaluate butter, take only joint cost. Don't take the further processing cost. That means product at split off point. Listen. Look at this picture, you'll understand better. This is the butter and this is the ghee. When you want to evaluate butter, take only joint cost. When you want to evaluate ghee, joint cost plus further processing cost. All of you clear? That means sale value at split off point. Sale value at split off point means joint cost plus profit. Sale value after further processing cost means joint cost plus further processing cost plus profit. Are you understanding? All of you clear? Okay. So this is about the apportionment of joint cost. This is the first core thing in this chapter. Apart from this, there is one more thing called the whether to further process or not to further process. As I told you, we have the price at split off point. We have the price after further process. Should I sell at 10 rupees or should I sell at 20 rupees? Okay. Now let me take an example to understand this. The discussion is whether to further process or not. That is the discussion. How to decide that? Let me take an example. Sugarcane juice. Sugarcane fresh juice. Rupees 20. at spit off point without any ingredient, without adding any. This is a plain juice. This is the plain juice. Now what happened? He is further processing this by adding some ginger, pepper powder, lemon, all these things will be added. Correct? Now let me take an example. Further processing. The cost what he incurred is 5 rupees. The cost what he incurred for the further processing is 5 rupees. Lemon, ginger, all these things. After further processing, the same glass of juice, he is selling at 30 rupees. He is selling at 30. This is called further processed juice. This is called further processed juice. Now tell me the point. Should the person has to further process the juice or not to further process the juice? Should or not to further? We should or we should not further process? We should, because by further processing, what is the increase in revenue? Rupees 10. What is the increase in cost? 5 rupees. What is the increase in profit? 5 rupees. We have to go for further processing. Are you understanding? How to decide? That means take the increase in revenue, take the increase in cost, take the increase in profit. Suppose instead of 5 it is 15. Should we further process? No. Increase revenue is 10. Increase cost is 15. Loss of 5 rupees. We should not further process. This is how we need to decide whether to further process or not to further process. All of you clear about this? So these are the only two concepts in the entire chapter. Throughout the topic, what we are going to discuss is whether to, how to apportion the joint cost. That's the number one. Number two, whether to further process or not to further process. When it comes to apportionment of joint cost, I discuss the methods. Now the point is, sometimes they won't specify the name of the method. Then you have to go by the sale value method. Sale value method is the most appropriate method to apportion the joint cost. In the sale value method also, the first preferable method is sale value at split off point. That's the most appropriate method to apportion the joint cost. Sale value at split off point. Are you understanding? Next method is after sale value at split off point. If the sale value at split off point is not given, then NRV. Then sale value after further process. Are you understanding? What is the formula for NRV? Net realizable value. NRV equal to sale value after further processing minus further processing cost. Sale value after further processing minus further processing cost. That is the formula for NRV. Clear? Okay, now let us do questions based on this. Look at this. Inorganic chemicals purchases salt and process it into more refined products such as caustic soda. So they are purchasing the salt. And refined. They're processing that and further converting into a caustic soda, chlorine, PVC. So salt is the raw material. They are producing caustic soda, chlorine, and PVC. In the month of July, inorganic chemicals purchased salt for rupees 40,000. Can I call it as raw material cost? All of you. Conversion cost 60,000. Can you tell me what do you mean by conversion cost? Labor and overheads. Labor and overheads is the conversion. What is conversion cost? Cost incurred to convert raw material into finished goods. Conversion cost means cost incurred to convert raw material into finished goods. So that conversion cost includes labor and overheads 60,000 were incurred up to the split off point. Up to the split off point. These are the cost incurred up to the split off point. That means before split off point, whatever the cost incurred is the joint cost. After split off point, whatever the cost incurred is a further processing cost. Next, up to the split off point, at which time two saleable products were produced. Chlorine can be further processed into PVC. This is very important thing here. Chlorine can be further processed into PVC. So what is happening? Actually, they are producing only two products. When you look at the first line, caustic soda, chlorine, and PVC, we think that there is three joint products. It is not three, only two. This chlorine only converted to PVC. That means chlorine is further processing. Are you understanding? So let us understand this paragraph. Let me take an example. This is the joint process. We are getting two products. One is caustic soda and one more thing is chlorine. This chlorine further processed into PVC. Have you understand this? All of you? Now, joint process. How much is the joint cost incurred means material 40,000, conversion cost 60,000. Total joint cost incurred is 1 lakh. Clear? Now, in July, production and sales information is as follows. When it comes to production, caustic soda 1200 tons, total quantity sold. Is there any closing stock? No, 0. Sold at what price? 50. Selling price per ton 50. Next, chlorine 800. there is no sales. Why? Chlorine get converted to PVC. They are not selling chlorine. They are converting chlorine into PVC and then they are selling in the market. 800 tons of chlorine consumed. How many tons of PVC produced? 500 tons. 300 tons is loss. They didn't specify anything regarding the 300 tons. We'll take it as loss. Are understanding? When it comes to PVC, 500 tons. Sales is how many tons? 500 tons. What is the closing stock? 0. So there is no stock in this question. Are understanding? So then what is happening? Caustic soda 1200 tons produced, chlorine 800 tons produced, converted to 500 tons of PVC. And they given the price of caustic soda. What is the price of caustic soda? 50. What is the price of PVC? 200. So caustic soda price is 50. PVC price is 200. All of you clear? Next. All 800 tons of chlorine were further processed at an incremental cost of 20,000 to yield 500 tons of PVC. There was no beginning ending inventories of caustic soda, chlorine, PVC in July. So they just mentioned there is no stock. Now tell me, what is the further processing cost of converting chlorine into PVC? 20,000. The further processing cost is 20,000 to convert 800 tons of chlorine into 500 tons of PVC. Okay, next. There is an active market for chlorine. For chlorine also have the active market. Inorganic chemicals could have sold it in July. July production of chlorine at 75 per ton. So chlorine price is how much? Rupees 75. It can be sold at 75, but they didn't sell. They didn't sell. They can sell at 75. That is what they mean to say. Now tell me, sale price at split off point of chlorine. Chlorine 75. Caustic soda 50. This 200 rupees is called as what? What is the name for the 200 rupees? Sale price after further processing. Are you understanding? Okay. Now look at the requirement. Show how joint cost of 1 lakh would be apportioned between caustic soda, chlorine, and each of the following methods: sale value of split off point, physical units method, estimated NRV value method. There are asking 3 methods. Are you understanding? How much is the joint cost? 1 lakh. First, sale value at split off point. Caustic soda, chlorine. Caustic soda, how many tons produced? 1200 tons. Sold at what price? 50. Chlorine, how many tons produced? 800 tons. Sold at what price? 75. Please calculate the value. This comes to 60,000. This comes to 60,000. What is the proportion? 1:1. So how much will be given to caustic soda? 50,000. How much will be apportioned to chlorine? 50,000. The same calculation given here. Look at this. 60,000, 60,000, 50,000, 50,000. 1 lakh. Have you understand this? All of you. Next. Second method is physical units method. How many units of caustic soda produced? 1200. How many units of chlorine? 800. Can you tell me the proportion? 3:2. 3:2. I understand. Now tell me how much will be given to caustic soda? How much will be given to chlorine? Are you understanding? I am just apportioning on the base of 3:2. Clear? Now look at here. 3:2. 60,000, 40,000. Clear? Last method. What is the last method? Net realizable value method. So how to calculate NRV? NRV equal to sale value after further processing minus further processing cost. First, caustic soda. What is the sale value after further processing means? It will be 60,000 only. Because there is no further processing. Whatever the price is split off point, they will take the equal price after further processing also. Are you understanding? Okay. Minus, what is the further processing cost? 0. We are not further processing only. Are you understanding? So NRV comes to 60,000. Are you understanding? All of you. So what is NRV? Sale value after further processing minus further processing cost. After further processing it is 60,000 only. Minus 0. 60,000. All of you clear? Now, when it comes to chlorine, after further processing, it converted to what? PVC. How many tons? 500 tons. At what rate? 200 rupees. Value comes to 1 lakh. Minus further processing cost is 20,000, which comes to 80,000. Now, what is the proportion? 3:4. Are you understanding? Okay. Now, in the proportion of 3:4, look at here. They taken sale value 60,000. Sale value 1 lakh. Further processing cost 0, 20,000, 60,000, 80,000. What is the proportion? 3:4. In the proportion 42,857, 57,143. All of you clear till now? Understand? This is how we need to apportion the joint cost. Clear? Next. Look at the second requirement. Lifetime swimming pool products offers to purchase 800 tons of chlorine in August at 75 per ton. This sale of chlorine would mean that no PVC would be produced in August. So please understand, there is a company called the Lifetime Swimming Pool Products offer to purchase the chlorine. Now we are further processing chlorine into PVC. But now at this Lifetime Swimming Pool Products, what they're telling, we are going to purchase the chlorine at what price? 75. Now if they're purchasing at 75, 800 tons, we are going to sell at 75. How much it comes to? 60,000. Are you understanding? They mentioned that this sale of chlorine would mean that no PVC can be produced. If you sell the chlorine, how can you produce the PVC? To produce the PVC, chlorine is the base. So if you sell it to the Lifetime Swimming Pool Products, we cannot produce the PVC. Okay, now explain how the acceptance of this offer for the month of August will affect the operating income. If suppose company accept, how it is going to affect the operating income? That is what the question. Are you understanding? So how to answer this means simple. It is the question based on the further process or not to further process. Are you understanding? If you further process, it will be PVC. If you further process, it will be PVC. If you don't further process, it will be chlorine. Now tell me, what is the sale value of chlorine? 60,000. What is the sale value of PVC? 1 lakh. 500 tons into 200. Here it is 800 tons into 75. Are you understanding? Minus. Okay. Minus joint cost. Let me take the joint cost. What is the joint cost according to sale value split of point method? 50,000, 50,000. That is the most appropriate method. Are you understanding? We'll take 50,000, 50,000. Next, minus further processing cost. In case of chlorine, if you sell the chlorine, will there be any further processing cost? 0. Chlorine is the split off point. Chlorine is a split off point. No further processing cost. Whereas PVC has the further processing cost. How much? 20,000. So if you reduce this, how much is the profit here? 10,000. How much is the profit here? 30,000. Are you understanding? So if you sell chlorine, 10,000. If you sell PVC, 30,000. That means if the company accept the order, if the company accept the offer of the Lifetime Swimming Pool Products, they're going to sell the chlorine. How much profit they can make? 10,000. They stop at selling PVC. How much profit lost? 30,000. 30,000. 30,000. What is the net amount lost? 20,000. So they are asking that what offer of month of August would affect the operating income is? Yes, it will affect the operating income. Increase or decrease? Decrease by how much? 20,000. That is the answer. Are you understanding? Instead of doing like this, in the study material, what they given? They given how much is the increase in revenue? 40,000. So no, actually decrease in revenue. It's not increase. From PVC we are converting to chlorine, na? From PVC we are converting to chlorine. By converting to chlorine, decrease in revenue. How much? 40,000. Now 50,000, 50,000. No change. 20,000 becomes 0. What is the decrease in cost? 20,000. So what is the decrease in net decrease in revenue? 20,000. That is the decrease in profit. Are you understanding? So look at here. What they given? Incremental revenue from further processing of chlorine into PVC 40,000. Incremental cost 20,000. Incremental operating income from further processing 20,000. The operating income of inorganic chemicals will be reduced by 20,000 in August if he sells 800 tons of chlorine to Lifetime Swimming Pool Products instead of further processing into PVC. Okay, they consider only incremental model only. By increasing 20,000 will increase. If you don't do the further processing, that will be decreased by 20,000. That's what they answered. You can present like this. Nothing wrong in that. You can present in the total approach model or you can present in the incremental approach model. Both you will get the marks. Are you understanding? All of you? Okay? Now. Look at the practical question number 1. In your material, practical question number 1. Very, very important question. Many times asked in the examination. Look at the question. Sun Moon Limited produces and sells the following products Product A, B, C, D, E. 5 products are there. They given the units. Selling price at split off point given. Selling price after further processing given. Okay. Now, if you observe the selling price after further processing, one product does not have the further processing. Can you tell me which product is that? D. D does not have the further processing. That means initially at present what is happening? A, B, C, E sold after further processing. D will be selling at split off point. Okay, now look at the question. Raw material cost 35,90,000 and other manufacturing expenses cost 5,47,000 in the manufacturing process, which are absorbed on the products on the basis of their net realizable value method. So look at this. They given raw material cost 35,90,000 and then other manufacturing cost, other manufacturing expenses, which includes wages, which includes factory overheads, which include direct expenses, together comes to 5,47,000. Are you understanding? All of you? No. In the manufacturing process, which are absorbed onto the product. This is the cost. These are the two costs which will be absorbed to the products. On the basis of which method? NRV, net realizable value method. So 35,90,000, 5,47,000, 35,90,000 plus 5,47,000 will get the joint cost. This joint cost should be apportioned between how many products? 5. A, B, C, D, E. And we have to apportion between 5 products. Using which method? NRV. How to calculate NRV? Sale value after further processing minus further processing cost. Are you understanding? Okay, no. After apportioning that, they are asking the further processing cost of A, B, C, and E are 12,50,000, 1,50,000, 50,000, 1,50,000 respectively. Fixed cost is 4,73,000. Are you understanding? So please understand, here they given the fixed cost. That means these two cost elements are variable cost, which are charging it to the products. Are you understanding? All of you? Okay? Now, you are required to you are required to prepare the following in respect of the coming year. You are required to prepare the following in respect of the coming year. First, statement showing income forecast of the company, assuming that none of its products are to be further processed. No product has been further processed. That means all the products selling at split off point. Are understanding? Now what we'll do? We'll take sale value at split off point minus joint cost minus. That's all. See, we are taking at split off point now. When you're taking a split off point, we'll take sale value at split off point minus joint cost. Are understanding? We'll be getting contribution minus fixed cost. We'll be getting profit. All of you clear about this? See, there are two costs. One is joint cost, one is further processing cost. Joint cost will be incurred until split off point. After split off point, further processing cost will be incurred. When you take sales at split off point, we have to consider only joint cost. Yeah. Okay. When we are taking sales at split off point, we have to consider only joint cost. Are understanding? So sales minus joint cost will get contribution minus fixed cost will be getting profit. Okay, now look at the solution. Apportionment of joint cost on the base of NRV. First we need to do this. We need to apportion the joint cost. How much is the joint cost? 35,90,000 plus 5,47,000. How much you will get? 41,37,000. Are you understanding? 41,37,000. That should be apportioned between 5 products A, B, C, D, E on the basis of NRV method. Clear? Now look at here. So they taken sales first. So here NRV, we already discussed the formula. Sale value after further processing minus further processing cost. When it comes to A, how many units? 2 lakh units at what price? 25. We have to take, you can write here sale value after further processing. This is the sale value after further processing. Are you understanding? So they given the sale price here 25, 17, 12, 20. When it comes to D, we are going to take it as 10. Even after further processing, we'll assume it is 10 only because there is no further processing. There is no value addition. The price will be same. Are you understanding? So 25, 17, 12, 10, 20 products is 2,30,000, 25,000, 20,000, 75,000. So accordingly, they calculate the sales here. 17, 12, 10, 20. They calculate sales. Minus further processing cost or post separation cost. One more name for the further processing cost is post separation cost. Are you understanding? Now, in the that is given in the question. If you look at the question, that is given in the question. 12,50,000, 1,50,000, 50,000, 0, 1,50,000. We are getting NRV 59,10,000. Now we have to apportion the joint cost 41,37,000. Are you understanding? Now, how to do this? 41,37,000 into, or else we divide with 59,10,000. The amount of A, NRV of A is 37,50,000. So 41,37,000 divided by 59,10,000, you will get 0.80, I think so. 0.7, 0.70. Are you understanding? Into 37,50,000. You will be getting 26,25,000. Same way, 3,60,000 into 0.7, 2,52,000. Are you following? Okay, next 2,50,000 into 0.7, 1,75,000. 2 lakhs into 0.7, 1,40,000. 13,50,000 into 0.7, 9,45,000. So we calculate we have apportioned the joint cost. Now what we need to do? They are asking to calculate the operating income. Look at here. They are asking to calculate the income forecast of the company if all the products sold at split off point. What is the sale price at split off point? 17, 13, 8, 10, 14. Okay, so here they taken sale price at split off point. Here they taken sale price split off point. Everything has been taken sale price at split off point, and then they taken the total. Are you understanding? Minus apportioned cost. Just now we apportion the cost. If we reduce that, we'll be getting contribution. We'll be getting contribution. Less fixed cost. 4,73,000. We'll be getting profit 6,30,000. All of you clear? Okay. Same way, if you look at the second requirement, they are asking statement showing income forecast of the company, assuming that product A, B, C, E are processed further. A, B, C, and E. What about D? Selling at split off point. Are you understanding? Now, so by taking that, what they did? Look at here. Income forecast of the company assuming product A, B, C, E are processed further. Now what happened? We'll take sale value after further processing minus joint cost minus further processing cost. We'll get contribution. Sorry, this is the total cost. Okay. We'll get contribution minus fixed cost. We'll get the profit. All of you understanding? Okay. Now, at last, what they asked? Can you suggest any other production plan whereby company can maximize its profits? If yes, then submit a statement of income forecast arising out of the adoption of the plan. So what they are asking, can you suggest any other plan? So how to answer that means listen. Look at here. What is the contribution of A? 7,75,000. Here, what is the contribution of A? 11,25,000. At split off point, 7,75,000. After further processing, 11,25,000. Should we further process sell at split off point? Further process. We have to further process. Are understanding? When it comes to B, at split off point, 1,38,000. After further processing, 1,08,000. Should we sell at split off point or further processing? Split off point. At split off point, we are getting 1,38,000. After further processing, 1,08,000. Why to further process? You sell at split off point. But at present, they are selling after further processing. Are you understanding? By doing this, can you tell me, by selling at split off point, how much extra profit they'll make? 30,000. They can make the extra profit of 30,000. At present, they're making 1,08,000. If they sell at split off point, they'll make 1,38,000. So 30,000 extra profit. Are you understanding? At present, they're selling after further processing. Now we are going to recommend to sell at split off point. By doing that recommendation, profit is going to increase by 30,000. Clear? Next. After further processing, 75,000. At split off point, 25,000. Which is better? After further processing is better. Next. 60,000, 60,000. So anyhow, they are selling at split off point only. We'll continue with the split off point. Next. 1,05,000. 4,05,000. Which is better? Further processing. So the strategy is B and D at split off point, A, C, E after further process. This is a new strategy. What is the old strategy? A, B, C and F after, sorry, A, B, C and E after further process, D at split off point. Now we are recommending B and D at split off point. Are you understanding? Okay, now. So that is the session. This is the paragraph belongs to that. Using that again we are preparing the income statement. How much is the extra profit here? 30,000. Earlier we were making 13 lakhs. Earlier we were making 13 lakhs. Now how much you are making? 13 lakh 30,000. That 30,000 extra because of the B. All of you clear on this? So this is about the joint products and byproducts. Clear? Okay. Let us start with the chapter called the service costing. Let us start with the chapter called service costing. So please understand, this is the only chapter which is in relation to service. Remaining all the chapters are related to manufacturing organizations. All the chapters are related to manufacturing organizations. This is the only chapter relating to the service costing. Are you understanding? Now, the first point is product costing versus service costing. Let us understand the difference. When it comes to service costing, the first point is no stock. Correct? In case of service costing, there will be no stock. No need to evaluate the stock. All of you clear? Next. Second point, the major cost. Major cost is labor and admin overheads. The major cost of the service department is labor and admin overheads. When it comes to manufacturing companies, manufacturing cost is major. In case of manufacturing company, manufacturing cost is major amount. But when it comes to service costing, labor and administration overheads is the major cost. And one more thing, calculation of cost of composite cost object. Calculation of cost of composite cost object. Normally in manufacturing companies will calculate cost per unit, cost per bottle, cost per pen, cost per camera, cost per light. They will calculate for one unit. Whereas here we are going to calculate for the composite cost object. We are going to calculate for the composite cost object. Are you understanding? Sir, what is this composite cost object? Means taking two factors at a time. Taking two factors at a time is the composite cost object. I'll give you the example. Ton kilometers. How to calculate ton kilometers? Number of tons into number of kilometers. Ton kilometers. Number of tons into number of kilometers. Are you understanding? So ton is one factor, kilometers is another factor. I'm taking both. Ton kilometers. Are you understanding? Same way, passenger miles. Can you tell me how to calculate this? Number of passengers into number of miles. Can you tell me patient days? How to calculate this? Number of patients into number of days. Can you tell me room days? How to calculate room days? Number of rooms into number of days. Like this we can take multiple examples. So these are the some examples for the composite cost object. It depends upon the situation given in the question. Are you understanding? What they'll do? They'll give the transportation business of the passenger transportation business details. Let me take an example, VRL. VRL logistics. I mean VRL company. If you take the VRL company, they're into the passenger transport also. Transportation of the passengers also. Can you tell me for the VRL passenger transportation company, what all the expenses that can be possible? Just guess it out. Just guess what are the expenses? Fuel cost, insurance of the bus, driver and conductor salaries, repairs and maintenance, tire cost, depreciation of the vehicle. Are you understanding? So like that, multiple expenses will be there. We'll take all the expenses. Listen. We'll take all the expenses. This entire expenses, whatever they incurred. Let me take an example. Bus number KA059347. Bus number KA059347. This is the bus which is traveling between Bangalore and Mangalore. This is the bus which is traveling between Bangalore and Mangalore. Now target is to fix the price. Fix the ticket price. How to fix the ticket price means first take KA 059347 total value, total expenses for 1 year time. Are you understanding? So we'll take for 1 year time. Well, as we discussed, depreciation, insurance, garage rent, repairs and maintenance, the tire cost, all these things will be taken total. We'll get the total cost incurred plus profit expectation of the VRL. They may expect 20%, 25%, 10%. For the cost, if you add the profit, we'll get the total revenue that need to be generated. This revenue they need to calculate from where? From passengers. So total revenue divided by number of passengers. Do you think that all the passengers travel from Bangalore to Mangalore? In between there will be boarding and dropping will be there. Are you understanding? So one more factor that need to be considered is kilometers. See, if everyone is traveling from Bangalore to Mangalore, no confusion. Directly you can take number of passengers. But the problem here is some of the passengers will dropping down in middle of the journey and boarding in middle of the journey. So the price will vary. Are you understanding? That means one of the factor is number of passengers. One more factor is number of kilometers traveled. So I have to take two factors. One is passengers and one more thing is kilometers. So that we are calling it a passenger kilometers. Are you understanding? All of you. So here the cost determinant is two factors. One is passengers and one more thing is kilometers. So take the passenger kilometers. Number of passengers into number of kilometers. Are you understanding? We'll get the passenger kilometers. Let me take an example. Total revenue expectation is 1 lakh. Just example. Example 1 lakh. Divided by passenger kilometers is 10,000. So can you tell me, revenue collection, ticket fare per passenger per kilometer, 10 rupees per passenger per kilometer. Are you understanding? 10 rupees per passenger per kilometer. Now what we'll do? 10 rupees per passenger per kilometer. I am the one traveling from Bangalore to Mangalore. Totally distance is 600 kilometers. Approximately. I don't know the exact kilometer. Okay, 600 kilometers. So how much they'll charge to me? 600 into 10, 6,000 rupees. Costly ticket, very costly ticket. Okay, 6,000 rupees is the fare. I am traveling for 600 kilometers, one passenger. So 600 into 10, 6,000. If someone is traveling only for 20 kilometers, then 20 kilometers into 10, 200 rupees. Like this, they're going to fix the prices. Every service is like this only. That this topic is all about fixing the price of the service, calculation of price of the service, or arriving at the cost of the service. If they are asking you cost of the service, take the total cost divided by number of cost objects. Generally, we'll go by the composite cost object. In case of hospitals, patient days, bed days. In case of boarding and lodging, room days. In case of transportation business, passenger kilometers or passenger miles. If they're transporting the goods, ton miles. Are you understanding, all of you? So it depends upon what is the information given in the question. Nothing else. So it's all. And one more thing, the most confusing thing in this chapter is they'll try to confuse with the period. Sometimes they'll give you per year. Some of the information per month. Convert this per month into per annum. There are questions where you have to calculate only one trip. See, sometimes what they'll do, they'll give the entire information. Trip information, one trip information. But they'll not mention you how many days in a month they're operating. They'll not give you how many months they're operating. If nothing has been stated, take only one trip cost and one trip revenue divided by number of passengers in the trip, a number of tons carried in the trip. So look at the question. That's the confusing point in this question. Just read the question and identify the period first. Shall we do it for the per annum, or we need to do it for the per month, or we need to do it for per trip? There is a question which we need to solve based on per trip. Because in that question they given the details of the trip, but they didn't mention how many days in a month or how many months in a year. Are you understanding? So first read the question, identify the period first. To what period we need to do the calculations. If they given the periods per month, 6 months, 1 month, I am recommending you always go by the per annum. It's better to go by the per annum. Sometimes they specify the period in the question. In the question only they'll state, please calculate the cost statement for the per month. If that be there, no confusion. Are you understanding, all of you? Okay, so this is the major thing about the service costing. There is much information. It's very simple chapter. Take the total of all the cost elements divided by cost object. Clear? Yeah. Illustration 4 in your book. Okay. Look at the question. SMC is a public school having 5 buses, each plying in different directions for the transport of its school students. In a view of the larger number of students availing of the bus service, the buses work 2 shifts daily, both in the morning and in the afternoon. The buses are garaged in the school. The workload of the students has been so arranged that in the morning, first trip picks up the senior students, and the second trip, plying an hour later, picks up the junior students. Similarly, in the afternoon, the first trip takes the junior students, and an hour later, the second trip takes the senior students home. The distance traveled by each bus one way is 8 kilometers. The student works 25 days in a month and remains closed. Sorry, the school works 25 days in a month and remains closed for vacation May, June, and December. Bus fee, however, is payable by the students for all the 12 months in a year. These are the details given. Let us understand this paragraph. This question is about school bus service. This question is about school bus service. First of all, tell me one bus is making how many trips in a day? 4 trips. First it is picking the senior student. Then it is picking the junior students. 2 trips. See, it will start from school. It will start from the, see, buses are garaged in school. Buses are garaged in school. So let me take an example. This is the school. In the morning, it will go and pick the senior students. And then it will go and pick the junior students. 2 trips were in the morning. And in the evening, first it will drop the junior students. Then it will drop the senior students. Again 2 trips in the evening. Are you understanding? 2 trips, 4 trips. 4 trips in a day. 4 trips. Trip means going and coming back. Around. Are you understanding? The school bus is doing 4 trips in a day. Clear? Now, if you look at here, how much distance it is traveling? 8 kilometers. Can you tell me kilometers per trip? Kilometers per trip. One way is 8. Per trip, 16. Are you understanding? The bus has to go and pick the students and come back. So going 8 kilometers, coming back 8 kilometers. Totally 16 kilometers. Are you understanding? Next. The school is working for how many days in a month? 25 days. How many months in a year? 9 months. 12 months. But working for how many months? 9 months. Because May, June, December has been closed because of vacations. Are you understand? But fees will be payable for 12 months. A full year. Are you understanding? So, 25 days in a month, 25 days in a month, 9 months in a year is the working period. Whereas the school fee will be paid for all the 12 months. Clear till now? All of you? Next. The details of expenses per year. They given the yearly information. Driver salary 4,500 per month per driver. Cleaner salary 3,500 per month. Salary payable for all the 12 months. Sometimes what happens, we will have the confusion. Will we pay the salary for 9 months or 12 months? They clarified that they will pay for the 12 months. Even there is no work. The school is paying the salaries to the driver and cleaner. Are understanding? Now, driver, how many drivers are there? 5 drivers for 5 buses. 5 drivers for the 5 buses. How many cleaners are there? Only one who is taking care of all the 5 buses. Are you understanding? Okay, now. Top of the question they given having 5 buses. The school is having total how many buses? 5 buses. For 5 buses, 5 drivers, but only 1 cleaner. Clear? Next. 1 cleaner employed for all the 5 buses. Only 1 cleaner has been employed for all the 5 buses. Next. License fee, taxes, etc. 8,600 per bus per annum. That is the license fee. Per bus. This is per bus. Be careful. Per bus per annum. Next. Insurance. 10,000 rupees per bus per annum. Repairs and maintenance. 35,000 per bus per annum. Purchase price of the bus 15 lakhs. Life of each bus 12 years. Scrap value of the bus at the end of the life 3 lakhs. Can you tell me these 3 details helps to calculate what? Depreciation. Understanding? Diesel cost 45 rupees per liter. Each bus gives an average mileage of 4 kilometers per liter diesel. These 2 information helps to calculate the diesel cost. Per liter how much? 45 rupees. I think this is the question somewhere in 2010 or 8, 6. 45 rupees diesel when at the time only, no? Okay. Now diesel cost is 45 rupees. And then they given mileage. How many kilometers it can travel? 4 kilometers by having 1 liter. Okay, next. Seating capacity of each bus is how many students? 50 students. Based on this information, tell me one bus is giving service for how many students? 100. Senior batch, junior batch. Are you understanding? Senior batch of 50, junior batch of 50. Here they can see the seating capacity is fully occupied. The seating capacity is fully occupied. Clear? Now, students picked up and dropped within a range of 4 kilometers of distance from the school are charged half fare. 50% of the students traveling in each trip are in this category. Let us understand this. See, total distance traveled by bus is how many kilometers? 8 kilometers. Total distance from school to end point is 8 kilometers. Are understanding? Now they classified this into 2 categories. That is how they given in the question. We are not doing this. Given in the question, they classified into. Let me take this is the school. Let me take this is the school. So up to 4 kilometers. Up to 4 kilometers in one category. Beyond 4 kilometers in another category. Are understanding? So up to 4 kilometers. Beyond 4 kilometers. Clear? Here they mention, see, up to range up to 4 kilometers, distance from school charge half fare, and 50% of the students traveling each trip are in this category. Okay, so what they mean to say, up to 4 kilometers is one category, beyond 4 kilometers is another category. Now what they mention, one bus is giving service to the 100 students. Out of 100 students, what percentage of students are in the category of up to 4 kilometers means 50%. So 100 students will be classified into up to 4, beyond 4. Up to 4, 50%. How many students? 50. Beyond 4, how many students? 50. Are you understanding? Should I repeat this? Okay, so up to 4 kilometers, 50 students. Beyond 4 kilometers, 50 students. Clear? No. Just I'm 8 kilometers. Total distance is 8 kilometers, but classification, categorizing. That is there. What I mean is that is the total distance is 8. But here the fee, how they're collecting means the student, okay, up to beyond 4 kilometers, but how many kilometers it's traveling is like 4 kilometers. Okay, now, it's a classification. What I mean to say, it's a classification. Student coming up to 4 kilometers, student coming beyond 4 kilometers. He is traveling for 8 kilometers. But classification is, for namesake, I'm telling the two category of students are there. What is the 2 category of students means? Students come, whoever coming after 4 kilometers. Okay, now ignore interest. Since the charges are to be based on average cost, you are required to. So, and one more point here is, student coming beyond 4 kilometers are paying, student coming up to 4 kilometers are paying 50% fare of the students coming beyond 4 kilometers. If the student coming beyond 4 kilometers are paying X, how much will be paid by the up to 4 kilometers? 0.5x. Are you understanding? All of you. So here slightly confusing, only 3 50s are there. 50 students coming up to 4 kilometers, 50 students coming beyond 4 kilometers. That is one thing. Number 2, 50% of the fee will be paid compared to the students coming after 4 kilometers. Are you understanding? So what is the 50? See, if student coming beyond 4 kilometers pay X means up to 4 kilometers will pay 0.5x. Clear? Okay, now what they are asking? Prepare a statement showing expenses for the operating a single bus and fleet of 5 buses for the year. They just mentioned. So no confusion. Convert all the expenses to per year. And they are asking for single bus and 5 buses. Are you understanding? What we'll do? First we'll do it for single bus into 5 buses. All of you clear? That is the first one. Second one, work out the average cost per student per month in respect of student coming from distance up to 4 kilometers from the school and students coming from distance beyond 4 kilometers from the school. Are you understanding? So how to do this? First what we'll do? Driver salary. Each bus has single driver. Let me take only single bus now. First I'll take single bus. Now tell me how much is per month? Single bus per annum. I need to calculate single bus per annum. So 4,500 per month into 12. How much it comes to? 54,000 is the driver salary. Simple. 5 buses means we'll take into 5. I'm not going to do that. Just I'm telling you 5 buses means into 5. Are you understanding? Next. How many cleaners are there? One cleaner. For how many buses? 5 buses. How much salary is getting? 3,500 per month. So 3,500 into 12. 42,000 divided by 5 buses. 8,400. This is the cleaner salary. Are you understanding? Next. 8,400. Next. License fee taxes. 8,600 per bus per annum. Should we calculate anything? No. Directly you can take 8,600. Next. Insurance. 10,000 per bus per annum. Directly you can take 10,000. Repairs and maintenance. 35,000 per bus per annum. We can take 35,000. Using these three details, can you tell me the depreciation? Are you understanding? How to calculate depreciation? Asset value minus scrap value divided by n. Asset value is 15 lakhs. Scrap value is 3 lakhs. 15 lakhs minus 3 12 lakhs. 12 lakhs divided by 12 years. 12 lakhs divided by 12 years. 1 lakh. Clear? Next. Diesel cost. To calculate the diesel cost, we need to know how many kilometers traveled by the bus. In one trip, how many kilometers it travel? 16. Trip. Going and coming back. Are understanding? So 16 kilometers into how many trips in a day? 4 trips. Into how many days in a month? How many months in a year? 9 months. 12 months is there, but they are working only for 9 months. 12 months is for salary. Correct. 12 months is for salary. Here we are calculating diesel cost. So we need to calculate the running period. Okay. Now tell me how much it is. 14,400. Are you understanding? Totally distance traveled is 14,400 kilometers into 45 rupees for 4 kilometers. 45 rupees for 4 kilometers. So 45 divided by 4 kilometers you get per kilometer into 14,400 kilometers. How much it comes to? 1,62,000. 1,62,000 is the diesel cost. Are you understanding? Into 5 we'll get for the 5 buses. Okay, next. That's it. Make the total of this. 3 lakh? 3,78,000. This 3,78,000 rupees, are they expecting any profit by the school? Does the school is expecting any profit? Have they mentioned any point regarding the profit? No. School already makes huge profit with the name of fees. Correct? So many fees. Okay, 3,78,000 is total cost. This cost has to be collected from how many students? 100 students. This has to be collected from 100 students. Now tell me that the 100 students are paying the equal fee. No. There 50 students are paying X amount, means balance 50 students are paying 0.5x. Are you understanding? So what we'll do? 100 classify into 2. 50, 50. These people are paying X. These people are paying 0.5x. 50 into X, 50x. Plus 50 into 0.5, 25x. Total 75. Equivalent student is 75. Can you tell me per student? 3,78,000 divided by 75. 5,040 per annum. Correct? 5,040 per annum per equivalent student. Are you understanding? I'm going to call it as the equivalent student. All of you clear? Now what they are asking? Work out the average cost per student per month in respect of students coming up to 4 kilometers, beyond 4 kilometers. What we'll do? 5,040 is per annum. Per annum for each student. Now tell me, divided by 12, how much it comes to? 420 rupees per annum per student coming beyond 4 kilometers. Coming beyond 4 kilometers. Now up to 4 kilometers means 210. 210 per annum per student. Sorry, per month. Correct. Per month per student, per month per student. So the answer is 420, 210. Have you understand this? All of you? Okay, now. Look at this question number 7. This is based on the hotel, boarding and lodging. This is based on the boarding and lodging. Look at this question. A lodging home is being run in a small hill station with 100 single rooms. The home offers concessional rates during 6 off-season months in a year when the number of visitors are limited. During this period, half of the full room rent is charged. The management profit margin is targeted at 20% of the room rent. What is the page number of this? 12.26. Study material 12.26. Okay. Okay, I'm reading from the beginning. A lodging home is being run in a small hill station with 100 single rooms. The home offers concessional rates during 6 off-season months in a year when number of visitors are limited. During this season, half of the full room rent is charged. The management profit margin is treated at 20% of the room rent. The following are the cost estimates and other details for the year ending 31st March. So, what is the question? Question is about boarding and lodging, and how many rooms are there in the hotel? 100 rooms. 100 rooms are there in the hotel. This hotel is lying at hill station. This hotel is lying at hill station. Now tell me, hill station people prefer to go summer season or winter season? Hill station they prefer to go in the winter season, summer season. Summer season. Hill station they'll go in the summer season. Please understand. See, Himalayas. When you prefer to go? Summer season only. If you go in winter, it will become ice. Are you understanding? So, hill station they prefer to go in the summer season. So the season for this hotel is summer season. Summer season is the season. Many people will be coming to the hill stations in the summer seasons. Are you understanding? Next. The home offers concessional rates during 6 off-season months in a year. Okay, see here. They are giving some concessional rates during the 6 off-season months. Off-season is winter. Off-season is winter. Are you understanding? Now, when the number of visitors is limited, okay, during the winter season number of visitors are limited, so that they're giving some concession. Okay, next, during this period half of the full room rent is charged. During the winter season they're going to charge half of the full room rent. Next, the management profit margin is targeted at 20% of the room rent. They're expecting 20% profit. The following are the cost estimates and other details for the year ending 31st March. So what are the cost details given? Look at this. Assume a month to be how many days? 30 days. On an average, we'll take it as 30 days. Next. Occupancy during the season is 80%, while in the off season, it is only 40%. I understand. During the season, it is 80% occupancy. That means how many rooms occupied? 80 rooms. During the off seasons, it is 40% occupancy. How many rooms occupied? 40 rooms. Now, total investment in the home is 200 lakhs, of which 80% relate to building and balance for furniture and equipment. So please understand, total investment is 200 lakhs. Out of that, can you tell me building cost? 160 lakhs. Building cost is 160 lakhs. Balance in furniture and fixture. How much is the furniture and fixtures? 40 lakhs. Okay, next. Expenses. Staff salary excluding room attendant 5,50,000. Repairs to building 2,61,000. And one more thing, this is the information for the year ending 31st March. Everything is annual. Are you understanding? Next, repairs to the building 80,000. Interior 1,75,000. Miscellaneous expenses 1,90,800. Annual depreciation is to be provided for building at the rate of 5%, and on furniture and equipment at the rate of 15% on straight line basis. So point number 2 and point number 4 helps to calculate what? Depreciation. Point number 2 they give the value. Point number 4 they give the percentage of depreciation. So take these 2 points to calculate the depreciation. Are you understanding? Next, room attendants are paid 10 per room day on the basis of occupancy of the rooms in a month. So the room attendant wages depends upon room days. How to calculate room days? Number of rooms occupied into number of days. Number of rooms, don't take 100. We have to take the occupied, because occupied only will generate the revenue. Are you understanding? So number of rooms means don't take total rooms. Take the occupied rooms. So number of rooms occupied into number of days. We'll get the number of room days. Into 10 rupees, we'll get the room attendant salary. Clear? All of you? See, second point and fourth point helps to calculate depreciation. First point given the percentage of occupancy. Third point given the expenses. And point number 5 helps to calculate the room attendant salary. Point number 6 is about the lighting charges. Look at this. Point number 6 is about lighting charges. Monthly lighting charges is 120 per room, except in the 4 months in the winter, when it is 30 per room. During the winter season, it is 30 per room. Are you understanding? Now, you are required to work out the room rent chargeable per day, both during the season and off-season month, on the basis of the foregoing information. So, they are asking to calculate the room rent to be charged. Room rent to be charged. How to calculate room rent to be charged per per day, per month. They're asking. Room rent to be charged per day. They're asking to, sorry, I'm sorry. Room rent to be charged per day. Now what we are going to do? Total revenue divided by number of room days. Total revenue divided by number of room days. First we'll calculate the total revenue. How to calculate total revenue? Total cost plus profit. How much is the profit expected? 20%. 20% on 20% of the room rent. That means 20% on sales or cost of sales. Room rent is the revenue. Room rent is the sales for them. For those people, room rent is the sales. So they're asking 20% on sales. That is 20 by 100 on sales. On cost, 20 by 80. Are you understanding? Okay, now let's do one by one. First point, there is no cost details. First point, there is no cost details. Second point, second and fourth helps to calculate depreciation. Can you tell me depreciation of building? Depreciation of building. 160 lakhs. 160 lakhs into 5%. 8 lakhs. Next, 40 lakhs into 15%. Depreciation of furniture, 6 lakhs. Have you understand this point? Next, tell me the expenses, staff salary. Here the specific way excluding room attendant. It does not include the room attendant salary. We have to calculate that. Okay. Staff salary 5 lakh 50,000. Repairs to building 2 lakh 61,000. Laundry charges. Interior. Miscellaneous expenses. So this point is already considered. Now point number 5 is about room attendant wages. How to calculate number of, based on number of room days. Now here what happened? We have to take, see, we have to calculate the room days. How to calculate room days? Number of rooms into number of days. 6 months is the season, 6 months is the off season. During season, what is the occupancy? 80%. During the off season, 40%. So I'll take season. How many rooms? 100 rooms. Into occupancy, 80%. 80 rooms occupied. Are you understanding? Into how many days? 30 days month into 6 months. Are you understanding? So 100 into 80% into 30 into 6 months, which comes to 14,400 room days during the season. Same way during off season, 100 rooms. What is the occupancy? 40%. We'll get number of rooms into 30 days into 6 months. 7,200 room days. What is the total number of room days? 21,600 room days. Are you understanding? Now, how much is paid per room day to the room attendant? 10 rupees. So 10 rupees into 21,600. 2 lakh 16,000. This is the cost details. Apart from this, lighting charges. Let us calculate lighting charges. Listen. When it comes to lighting charges, it depends upon room months. Can I call it like that? Because monthly lighting charges are 120 per room. Means per room per month. Can I call it as room months? Are you understanding? Next. Except in 4 months in winter, when it is 30 per room. Now what we need to do, these lighting charges we need to divide into 2. Season, unseason. Season is summer, unseason is winter. Are you understanding? Now listen to me carefully. Here we need to calculate room months. We need to calculate room months. Number of rooms into number of months. During season, what is the occupancy? 80%. 100 into 80%. We'll get number of rooms into how many months? 6 months. We'll get room months. Are you understanding? I'll tell you. I'll come back to that. See, season is 6 months. Season is 6 months. Season is not 8 months, no? Season is 6 months only. Okay. Now, 100 into 80% will get number of rooms into 6 months. Into how much is the charges during the season, during summer? 120. Are you understanding? So, understand properly. Here the concept is room months. When it comes to lighting charges, concept is room months. How to calculate room month? Number of rooms into number of months. I am doing it for season. Season is for 6 months. Off season is for 6 months. Are you understanding? First I am doing it for season. Understand the season. Number of rooms is 100 into 80% is the occupancy. So 80 rooms into number of months is 6 months. We'll get room months into 120. How much you are getting? 57,600. Clear? Understood? Now the point is, except in 4 months in winter they are charging 30. So this winter is the unseason. Winter is the unseason. We need to classify into two. We need to classify into two. What the classification means? We can call it as 2 months separately and 4 months separately. 2 months separately, 4 months separately. This 2 months, this 4 months they are charging at what rate? 30 rupees. This 2 months charging at what rate? 120 rupees. Winter only they are classified into two, charging at 120 and charging at 40. Are you understanding? Now 120, tell me the calculation. 100 rooms into what is the occupancy? 40% into 2 months into 120. How much it comes to? 9,600. Same way, tell me calculate here. How many rooms? 100 rooms. What is the occupancy? 40%. Into how many months? 4 months. Into how much? 30. 4,800. Please do the calculation. 57,600 plus 9,600 plus 4,800. 72,000. Have you understand this? I hope the answer is also 72,000 only. Are you understanding? So the lighting charges is 72,000. Make the total 8 lakhs plus 6 lakh 14, 14 plus 5 lakh 50,000, 19 lakh 50,000, 19 lakh 50,000 plus 2 lakh 61,000, 22 lakh 11,000 plus 80,000, 22 lakh 91,000 plus 1 lakh 75,000 plus 1 lakh 90,800, 2 lakh 16,000, 7 lakh 72,000. 29 lakh 44,800 is the total cost. Clear? Now, what is the profit expected? 20% on sales. So 20 by 100 on sales. On cost 20 by 80. Do the calculation. How much is the profit? 7 lakh 200. Total revenue expected per annum is 36 lakh 81,000. Total revenue expected is 36 lakh 81,000. Clear? Divided by number of room days. But the problem here is, are they collecting same rent? No. During season, whatever rent they are collecting, in that 50% they are collecting in the off season. Are you understanding? So please understand. Season 14,400. Off season 7,200. That is what we calculate here. 14,400 room days. Sorry, 7,200. 14,400, 7,200. I'm taking the same thing. Here season, if they are collecting X, during off season they will collect 0.5x. Half of the money. So now tell me 14,400 x. Here it is 3,600 x. Total 18,000. 18,000 is the equivalent rooms, equivalent room days. Are you understanding? Now tell me 36 lakh 81,000 divided by 18,000. How much it comes to? 204.50. So that is for season. During season we'll charge 204.50. During off season we'll charge 102.25. Clear? Understanding? This is the answer for this question. Understanding? So this very simple chapter if you understand. If you don't, it will become difficult. So whenever there is a question from the service costing, you will be answerable easily. But you need to understand the background concept. It's simple valuation of the service. Hotel is providing service, we are evaluating that. School buses are providing service, we are evaluating that. That is what we are doing here. Clear? Okay, now. Let us start with the next topic called the budgetary control. Okay. Let us understand what we'll study in this chapter. Again, this chapter is also one of the easy chapter. What we are going to study in this chapter means how to prepare the budgets for the company. Normally, when we will prepare the budgets, beginning of the financial year, before starting with the period. Okay, Generally, I can tell you that beginning of the financial year, we are going to prepare the budgets. In our syllabus, see, there are different types of budgets. There are different types of budgets. In our syllabus, mainly we are going to focus on two types. One is flexible budget, and one more is fixed. Sorry, flexible or fixed. Flexible and fixed. Flexible and fixed budget. One more thing is functional budget. One more thing is functional budget. So please understand. First one is flexible budget or flexible budget and fixed budget. One more thing is functional budget. First, let us understand the flexible budget. So the point here is, whenever we need to do the flexible budget, we need to classify the cost into variable, fixed, semi-variable. We already discussed the nature of the variable, fixed, semi-variable. Can you tell me fixed cost is constant in what? Total. Fixed cost is constant in total. Variable cost is constant in per unit. This point you have to remember. Fixed cost is constant in total. Variable cost is constant in per unit. Semi-variable cost does not have the constant nature. Whenever they given the semi-variable cost, we need to classify into variable cost and fixed cost. How to classify that? Difference in cost divided by difference in units. We'll get the variable cost per unit. Into number of units, we'll get the total variable cost. Total cost minus variable cost, we'll get the fixed cost. All of you clear about this? No. Generally, what happens in flexible budget? In flexible budget, 7,000 units they'll give, which is called as 70% capacity of the company. They'll give the material, labor, all the details will be given. They will ask you to calculate for the 8,000 units, which is 80%, 9,000 units, which is 90%. They'll ask you to flex the budget. Are you understanding? Now, first of all, they given material 70,000 rupees, rent 1,40,000 rupees. These are the details given. First of all, tell me material 70,000, variable cost or fixed cost? Variable cost. It is constant per unit. Can you tell me per unit cost? 70,000 divided by 7,000. 70,000 divided by 7,000, 10 rupees. The 10 rupees is constant. Material cost per unit of 10 rupees will be constant because it's a variable cost. Now, can I take 10 rupees here also? If you want total, 10 into 8,000. 10 into 9,000. 90,000. This is how we fix the budget. When it comes to rent, variable or fixed? Fixed. Now 7,000 become 8,000. How much is the rent? 1,40,000. It will be constant in total. Are you understanding? Suppose they given salary of supervisor. Salary of supervisor. Here they given 1,10,000. Here they given 1,50,000. Now tell me, fix it up. Does this cost is fixed? No. By looking at these two. By looking at these two, is it fixed? No. It is not a fixed cost. Are you understanding? Or else let me take it as power charges, so that you will understand better. No confusion. Power charges. Tell me, by looking at these two, does the cost is fixed? No. Does the cost is variable? No. Why? Because per unit is also not constant. Total is not constant, per unit is not constant. What is this? Semi-variable cost. This is the semi-variable cost. We know that variable cost per unit equal to changing cost divided by change in units. What is the change in cost? 40,000. What is the change in units? 1,000. So 40,000 divided by 1,000, which equals to rupees 40 per unit. Variable cost per unit is 40 rupees per unit. Are you understanding? Now what we'll do? 40 rupees per unit is the variable cost. If it comes to 7,000, 40 into 7,000, how much it comes to? No. 40 into 7,000 here. 2,80,000. No? Okay. Let me take it as 1,20,000. Let me take it as 1,20,000. I'm sorry. This is 10,000 divided by 1,000, which comes to 10 rupees per unit. Which comes to 10 rupees per unit. Now tell me 10 into 7,000. 10 into 7,000. 70,000 is the variable cost. How much is the fixed cost? 40,000. Total is 1,10,000. Total is 1,10,000. 70,000 is the variable cost and 40,000 is the fixed cost. Clear? Now same way 10 rupees into 8,000. 80,000. How much is the fixed cost? 40,000. So 70,000 variable cost, 80,000 variable cost, 40,000 is the fixed cost. These will classify into variable cost and fixed cost. All of you understanding? All of you? Okay? Now. So next. So this is how we'll prepare the flexible budget. Here 7,000 units is called as the fixed budget. 8,000 and 9,000 is called as the flexible budget. 7,000 units is called as the fixed budget and 8,000 9,000 is called as the flexible budget. All of you clear? So this is about the flexible budget. Let us do one question based on this. Look at here. Action plan manufacturers normally produce 8,000 units of their product in a month in their machine shop. For the month of January, they had planned for a production of 10,000 units. Owing to a sudden cancellation of the contract in the middle of January, they could only produce 6,000 units in January. Normally, how many units they'll produce? 8,000. Plan to produce how many units in January? 10,000. But actually, how many units they produce? 6,000. That's the first paragraph. Indirect manufacturing costs are carefully planned and maintained in the machine shop, and the foreman of the shop is paid 10% of the savings as bonus when in any month the indirect manufacturing cost incurred is less than the budgeted provision. So what happened? They given the some of the policies, one of the bonus policy for the indirect manufacturing cost, and they offered some bonus to the foreman who is taking care of the repairs and maintenance department. They offered some bonus to the foreman. What they said, if you save any money compared to planning, you will be getting 10% bonus out of that. Whatever the planning made by the company, from that cost, when you compare with the actuals, if you make any savings, planning is 1 lakh, actual income is 90,000. How much is the savings in cost? 10,000. Planning is 1 lakh, actual incurred 90,000. How much is the savings? 10,000. If the 10th on the 10,000 rupees, 10% will be given as the bonus. That is what the bonus policy. Comparing planning with the actual. Are you understanding? Now, the foreman has put in a claim. The foreman has put in a claim that he should be paid bonus of 88 rupees 50 paisa. He is claiming the bonus of 88 rupees 50 paisa for the month of January. The works manager wonder. He is in shock. Why he is shocked? Planned is 10,000 units. But due to sudden cancellation of the contract, it came down to 6,000. He is sitting and crying like anything. We planned 10,000. What to answer to the management? He is sitting and crying. He is coming and give me the bonus. He got wondered. How can you ask the bonus when there is a sudden cancellation of the contract? Are you understanding? Now, he is claiming the bonus of 88 rupees 50 paisa for the month of January. The works manager wonders how anyone can claim a bonus when the company has lost a sizable contract. Now, the relevant figures are as under. So, look at this. Indirect manufacturing details. These are the details. Indirect manufacturing details. Next. Expenses for a normal month. Can you tell me these expense details given at how many units? 8,000 units. Planned for January, how many units? Actual in cost, how many units? 6,000. Have you understand this? So 8,000, 10,000, 6,000. Now let us understand on what basis he is claiming the bonus of 88 rupees 50 paisa. What the base means? He don't have much educational knowledge. So what he is doing? Sir, you planned 5,875. Actually, I am incurring 4,990. So 5,875 minus 4,990. How much I am saving? 885 rupees. Are you understanding? So pay me 10% of that. 10% of that is 88 rupees 50 paisa. This is the calculation made by the foreman. Now tell me the calculation what he made is correct or wrong? Wrong. Why? We cannot compare 10,000 units planned cost with 6,000 units actual cost, which is against to matching principle. That is what he is doing because he does not have much knowledge. Are you understanding? All of you. So what we need to do? This 6,000 units actual cost. 6,000 units actual cost should compare with 6,000 units budgeted cost. 6,000 units actual cost should compare with the 6,000 units budgeted cost. Had they given 6,000 units budgeted cost? No, they given the budgeted cost of 10,000 and 8,000. Both are budget only. Are you understanding? 6,000 is the actual cost. 6,000 is the actual cost. We should compare 6,000 units actual cost with the 6,000 units budgeted cost. Had they given 6,000 units budgeted cost means no. What they given is 8,000 units budgeted cost, 10,000 units budgeted cost. Using this 8,000 units budgeted cost and 10,000 units budgeted cost, we'll flex the budget to the 6,000 units. Are you understanding? And then we'll compare the flexed budget with the actual. Clear? Understanding? Okay, now see here. First of all, before going to the solution, you tell me one thing. Salary of 4 men. Variable or fixed? See, as of now, don't consider the actual. As of now, don't consider the actual. By considering these two, tell me, salary of 4 men, fixed or variable? Fixed. Indirect labor, fixed or variable? Huh? Indirect labor. 720 divided by 8,000. 0.09. 900 divided by 10,000. 0.09. Per unit is same. Variable cost. Are you understanding? Next, indirect material. Repairs and maintenance. Power. Tools consumed. Variable cost. Rates and taxes. Fixed. Depreciation. Insurance. Fixed. Actually, this classification is not given in the question. We are identifying by looking at the nature change in cost. By looking at the changing nature in cost, we are identifying into variable, fixed, and semi-variable. Are you understanding? Okay. Now what they are asking? Do you agree with the works manager? He got wondered how he can claim the bonus. They are asking, do you agree with the works manager? Next, is the foreman entitled to any bonus for the performance in January? Substantiate your answer with the facts and figures explained. So let us answer this question. As I told you, we cannot compare 6,000 units actual with the 8,000 or 9,000. We have to compare with the 6,000 units budget. Using these two, we are going to prepare the flexible budget of the 6,000 units. Are you understanding? Okay, now see here. Salary of foreman, nature, fixed. Expense for the normal month, that is 8,000 units. Planned month, 10,000 units. Expense as per flexible budget for how many units? 6,000. Actual expense for how many units? 6,000. Now we are going to compare these two columns. Are you understanding? And then we'll take the difference. Shall we start? Now, fixed 1,000, 1,000, 1,000. Here also they given 1,000. See, actuals given in the table. Actuals given in the table. The same values has been taken here. 1,000, 600, 700, 600, 740, 300, 150, 800, 100. The same values taken here. Are you understanding? This is the column which we are calculating. Second column, third column, fifth column given in the question. Fourth column we are calculating. Are you understanding? Okay, so tell me one by one. Only column what we are calculating is this actual expenses. Expense as per budgetary expense only for 6,000. Fourth column only we are calculating. Second, third, fifth given in the question. Now tell me fixed cost. 1,000 for 8,000, 1,000 for 10,000, and for 6,000 units how much it will be? 1,000. For 6,000 units it will be 1,000. Are you understanding? Next, indirect labor they given variable. 720, 900 they given in the question. For 6,000 units how to calculate that? 0.09 into 6,000, 540. Are you understanding? Now actual expenses 600. What is the difference? 60. Plan to incur how much? 540. Plan to incur 540, but actually incurring 600. There is the excess incurrence of 60. Are you understanding? Next, variable 800, 1,000, 600, 700. Difference is 100. There is the excess incurrence of 100. Understanding? Next, repairs and maintenance semi-variable cost. We know how to calculate that. We already discussed that. Okay, 600, 650. Here it is 550, 600. Excess incurrence of 50. Here 800, 875 given in the question. Difference is 15 rupees. Excess incurrence. 240, 300, 60 rupees excess incurrence. Same, 0, 0, 0. 285 rupees excess incurrence. When he is incurring excess amount, when he is incurring the excess amount, how he can claim the bonus? Are you understanding? Do you agree with the works manager? Works manager, who is claiming bonus? Who is claiming bonus? Foreman. Foreman is claiming bonus. Do you agree with the works manager? Yes. We'll agree with the works manager, disagree with the foreman. Agree with the works manager, disagree with the foreman. Are you understanding? Look at here. The above statement of flexible budget shows that concern expense in the month of January have increased by 285 rupees as compared to flexible budget. Under such circumstances, assuming expenses are controllable and based on the financial perspective, the foreman of the company should not be entitled for any performance bonus for the month of January. This was the answer for this question. Have you understand this? Yeah. Next question is based on functional budget. Let us understand the functional budget. Functional budget. Okay, now see what is this functional budget means. It is about estimation of the each and every function of the organization. Sales is one of the function, production is one more function, consumption is one more function, purchase is one more function, labor capacity is one more function. Like this, different functions are there in the organization. We need to estimate the each function. Now, how to estimate the function means, see here, before planning with the budget, first we need to fix what is the targeted profit of the organization. Every company, what they'll do, they'll always try to achieve more profit compared to last year. That is a cycle, that is a human psychology. This year, let me take an example. Ambani is making some 1 lakh crores as a profit. Next year, definitely he'll try to make more than that. So, and one more thing, apart from that, we need to consider marketing existing factors. How the market scenario is. Is it favor to the business or unfavorable to the business? Are you understanding? So, by taking all these factors into consideration, we need to fix the targeted profit. Let me take an example. Targeted profit equal to 10,000 rupees. Just example. I am taking the smaller values to better understand, for the better understanding. Targeted profit equal to rupees 10,000. Now, using this profit, we will calculate the sale units. How to calculate the sale units means, see here, each unit profit per unit equal to rupees 10. Profit per unit equal to 10. Can you tell me how many sale units, how many units they need to sell to make the profit of 10,000? 1,000. They have to make the sale of 1,000 units. Are you understanding? How we are getting that? 10,000 profit divided by profit per unit, 10 rupees. Profit divided by profit per unit, or you can take contribution divided by contribution per unit. Both will give the answer. Are you understanding? We get 1,000 units. Now, what is the sales to be made? What is the sales to be made? 1,000 units. Please respond. What is the sales to be made? 1,000 units. If they want to make the sale of 1,000 units, they need to produce 1,000 units. Are you understanding? That means using sales, what we can calculate is production. We can calculate the production units. Are you understanding? So, as I told you, the requirement is 1,000 units. The requirement is 1,000 units. Now, the management is already having, let me take like this. Sale units equal to 1,000 units. The company is already having opening stock. The company is okay, I'll take like this. The company is expecting to have the closing stock. The company is expecting to have the closing stock of 400 units. Please understand, sale units is 1,000. They want to make the sales of 1,000 units, so we have to produce 1,000. But company wants to maintain closing stock of 400 units. So what is the total production is? 1,000 of sales, plus closing stock to be maintained is 400. 1000 plus 400, 1400. Now, the management is thinking that already having the opening stock, they already have the opening stock of 200 units. Now tell me, what is the net number of units to be produced? 1200 units. Have you understand the logic behind this? Sales to be made is 1000. They want to maintain the closing stock of 400, so 1400. They already have the opening stock of 200, so the net production to be done is 1200 units. So this is the production. All of you clear about this? Now, if they want to produce 1200 units, they need to consume raw material, they need to consume labor hours, they require the machine hours, they require the overhead cost, they require the capacity. Are you understanding? So these that means using production, we can calculate raw material function, we can calculate labor hours requirement, machine hours requirement, overhead requirement. Are you understanding? So first I will discuss about the raw material. Listen. Using production, I am going to calculate consumption of raw material. Consumption of raw material per unit. Consumption of raw material per unit equal to 2 kgs. Can you tell me total consumption? Total consumption kgs. 2400 kgs. So 1200 units is the production. Consumption per unit is 2 kgs. So 2 kgs into 1200, 2400 kgs. All of you clear? So the consumption of raw material requirement is 2400. If they want to consume the raw material, what they need to do? Purchase. So using consumption, we are going to prepare the purchase budget. Are you understand? Just I am going by the sequence. We started with the profit. Using profit, we decided sales. Using sales, we decided production. Using production, we decided consumption. Using consumption, we are deciding purchase. Are you understanding? Now, here, consumption. What is the consumption requirement? 2400 kgs. Now, they want to maintain closing stock. The management is planning to maintain the closing stock of 600 kgs. The management wants to maintain the closing stock of 600 kgs. Now, they are thinking that they already have the opening stock of 1000 kgs. They already have the opening stock of 1000 kgs. So, how much is the purchase? How many kgs? 2000 kgs. How many kgs is the purchase? 2000 kgs. Are you understanding? So, by this we done with the preparation of the functional budget. And one more thing. Suppose each product require 3 labor hours. Each product require 3 labor hours. Can you tell me total labor hours required? 3600. 1200 into 3. 3600 hours. Each worker can work for 600 hours. Can you tell me how many workers required? 6. Are you understanding? So this is how we need to budget each and every one. Each product require 5 machine hours. Can you tell me total how many machine hours required? 6000. Each machine can operate for 2000 hours. How many machines required? 3. Are you understanding? So for everything, production is the base. Using production only we decided raw material. Using production only we decide labor. Using production only we decide the machine hours. Using production only we decide the overheads. But to calculate production, what is required? Sales. To calculate production, what is required? Sales. Sales will be decided on what basis? Profit. So profit is the starting point. When you prepare the functional budget, profit is the starting point. Using profit decide the sales, using sales decide the production, using production decide the consumption, using consumption decide the purchase. Using production decide the labor, using production decide the machine hours, using production decide the overheads. All of you clear about this? Understanding? Okay? Now, this is about the functional budget. Now, if you observe this format, it is exactly ulta to the cost sheet. In cost sheet, we start with the purchase, end with the profit. Here we are starting with the profit, ending with the purchase. And one more thing, in cost sheet, add opening stock less closing stock. In budget, add closing stock minus opening stock. If you remember like that, it will become easy. Are you understanding? Okay, now look at the illustration number 4. A single product company estimated its quarter-wise sales for the next year as under, When it comes to quarter 1, they're planning to sell 30,000 units. Quarter 2, they're planning to sell 37,500. Quarter 3, they're planning to sell 41,250. Quarter 4, 45,000. The opening stock of finished goods is 6,000 units, and the company expect to maintain the closing stock of finished goods at 12,250 units at the end of the year. So this opening stock, closing stock details is for the year. Agreed? This opening stock, closing stock details is for the year. Whereas sales is given yearly na quarterly na. Sales is given quarterly, but opening stock and closing stock is given yearly. Are understanding? Next. The production pattern in each quarter. See, the production pattern in each quarter is based on 80% of the sales of current quarter and 20% sales of the next quarter. Here production, they're not, see, they're basing the sales only, but not in the format that sales plus closing stock minus opening stock. They're taking certain percentage of the sales. Are understanding? So how to calculate production means production equal to 80% sales of current quarter plus 20% sales of next quarter. 80% sales of current quarter plus 20% sales of next quarter. Are understanding? When you're taking Q1, 80% of current quarter, Q1, what is 80% of current quarter? How many units? 24,000 units plus 20% of next quarter, 7,500. Total comes to 31,500. This is the production units of the Q1. Are you understanding? Like this, we'll calculate for Q2, Q3, Q4. Clear? Next. The company maintains this 20% of sales of next quarter as closing stock of current quarter. See, the company maintains 20% sales of next quarter as closing stock of the current quarter. Okay, this is the additional point. As closing stock of current quarter. Okay, fine. Next. The opening stock of raw materials in the beginning of the year is 10,000 kg. See, here what they get is 6,000 units finished goods. Next paragraph, what they speaking is about raw material. Are you understanding? Now, the opening stock of raw materials in the beginning of the year is 10,000 kgs and closing stock at the end of the year is required to be maintained at 5,000 kgs. Each unit of finished output required 2 kgs of raw material. So whatever the product gets produced, how many kgs required? 2 kgs. This 2 kgs helps to calculate what? Consumption. This 2 kg helps to calculate the consumption. Production into 2 kgs will get the consumption. That consumption helps to calculate the purchase. Are you understanding? Now look at here. The company proposes to purchase the entire annual requirement of raw materials in the first 3 quarters. See, when it comes to purchases, they are planning to purchase the entire requirement per annum. Entire requirement per annum in 3 quarters. In what proportion means? First quarter 30%, second quarter 50%, third quarter 20%. So please understand, purchases will be made only in the first 3 quarters. First we'll calculate purchases per annum. Out of annual purchases, 30% purchased on first quarter, 50% purchased on second quarter, 20% purchased on third quarter. And they given the prices 2 rupees, 3 rupees, 4 rupees. Quarter wise. Are you understanding? So here in this question, the confusing point is giving the data. Data what they given is quarterly given as well as annual base given. When it comes to production, quarterly given. Opening stock and closing stock given annually. When it comes to purchases, given quarterly. But opening stock, closing stock given annually. Look at here. Beginning of the year, ending of the year. Are you understanding? Next. The value of the opening stock of raw materials in the beginning of the year is 20,000. This is the opening stock value. That is the opening stock of raw material. Now, you are required to prepare the following for the next year quarter wise: production budget, raw material consumption budget, raw material purchase budget, and stores ledger. So first we need to prepare the production budget. Using the sales, we'll prepare the production budget. Using the production, we'll calculate the consumption. Using consumption, we'll calculate the purchase. Can we start discussing this? Okay, now, as I told you here, okay. Q1 we calculate 31,500. I think it is there. Okay, fine. Q1 we calculate 31,500. Next Q2. Same way, can you tell me 80% of current quarter and 20% of next quarter? Q2. What is the current Q2? How many units they are selling? 37,500. 37,500 into 80%. 30,000. 30,000 plus 8,250. Total comes to 38,250. Next Q3. 33,000 plus 9,000. Total comes to, when it comes to Q4, 80% of the current quarter can be calculated. 45,000 into 80%, which comes to 36,000. But the problem is, we don't know the next quarter. Are you understanding? What is the next quarter of the Q4? Q1 of the next year? Next quarter of the Q4 of the current year. Q4 of the current year. What is the next quarter for that means? Q1 of the next year. Have they given the next year details? No. Are you understanding? Then how to calculate this means, what we'll do, first of all, tell me what is the total sales? Total sales per annum. 153. 750. 153,750 is the full year sales. Full year sales is 153,750. Production equal to, we already discussed that, sales plus closing stock minus opening stock. Reverse. Sales plus closing stock minus opening stock. Sales is 1,53,750 per annum plus annual closing stock is 12,250 minus annual opening stock is 6,000, which equals to 1 lakh. Correct? Now 1,60,000 is the production per annum. First quarter produced 31,500. Second quarter produced 38,250. Third quarter produced 42,000. Can you tell me fourth quarter production? 1,60,000 minus 31,500 minus 38,250 minus 42,000. 48,250. In that, 36,000 is that. Next, can you tell me balance figure? 12,250. As a balance figure, we are calculating that. All of you clear? See what they are asking? They are asking to calculate purchase budget in units quarter wise. Purchase budget in units quarter wise. That's what we calculated here. 31,500, 38,250, 42,000, 48,250. Have you understand this? All of you? Okay. So by this, we're done with this. Next, what they're asking? They're asking production is done. Next, raw material consumption. Consumption is very simple. Per unit, how many kgs? 2 kgs. So 31,500 into 2, how much you get? 63,000 for the Q1. Next, Q2, 76,500. Q3, Q4. That is the answer. That is the answer for the consumption. Consumption budgeting quantity. Have you understand this? All of you. Next, they are asking raw material purchase budget in quantity and value. So purchases made on certain percentage basis. Are you understanding? Look at the wording. What they given here? Purchase of raw material percentage to total annual requirement in quantity. Total annual requirement in quantity. See, purchase of raw material percentage to total annual requirement. So annual purchase. Do we know the annual consumption? Yes, total of this how much? 3,20,000. This is the annual consumption. To the annual consumption, if you add the closing stock and reduce the opening stock, we'll get the annual purchase. How much it is? Annual closing stock is how much? Raw material closing stock is how much? 5,000. Raw material opening stock is how much? Reduce this. How much it comes to? 3,15,000 kgs. 3,15,000 kgs is the annual purchase. Out of this, how much percentage purchased in the Q1? 30%. How much it comes to? 94 500. 50% of 3 lakh 15,000. 1 lakh 57,000. Next 20%. 63,000. Are you understanding this? Okay. Now that is about this. Next. So quantity calculated. How to calculate value? Into 2, into 3, into 4. We will get the value. Understood? Okay. Now stores ledger card. They are asking to prepare the stores ledger card using first in first out method. They are asking to follow the first in first out method, P4. I hope you can manage with it. Okay. So by this, okay, there is one more question. This is also important. Take a break for 5 minutes. We'll continue. Okay. Look at this question. Concord Limited manufactured 2 products using 2 types of materials and 1 grade of labor. Shown below is an extract from the company's working papers for the next month's budget. They are producing 2 products A and B by using 2 types of material. This is very important. Listen. They are manufacturing 2 products using 2 types of raw materials and 1 grade of labor. 2 finished goods, 2 raw materials, 1 type of labor. What are the finished goods means? Product A, product B. They given budgeted sales 2,400, 3,600. Budgeted material consumption per unit in kgs, material X, 5 kgs, 3 kgs. Now tell me one thing. So let us discuss product A. Product A require how many kgs of material X? Product A require how many kgs of material X? 5. Product A require how many kgs of Y? How many labor hours? 3. Product B require how many kgs of X? How many kgs of Y? How many labor hours? 5. All of you clear on this? Next. Material X and Y cost 4 rupees, 6 rupees per kg and labors are paid 25 rupees per hour. They given the per kg cost of X, Y and per hour cost of the labor. Next. Overtime premium is 50% and is payable if worker work for more than 40 hours a week. There are 180 direct workers. So this clause, this sentence is regarding the overtime premium. What is the overtime premium in this question? What is the overtime premium percentage? 50%. Can you tell me overtime hourly rate? Overtime hourly rate. Overtime, I'm not asking overtime premium amount. Overtime hourly rate. 37.5. 25 plus 12.5, 37.5. Are you understanding? So, normal hourly rate, how much? Overtime hourly rate, how much? 37.5. All of you clear on this? 50% extra. Next. The target productivity ratio or efficiency ratio for the productive hours worked by the direct workers in actually manufacturing the products is 80%. Can you tell me formula for efficiency percentage? Standard hours divided by actual hours. Super. Standard hours divided by actual hours. That is a formula which helps to calculate the efficiency percentage. Okay, next. In addition, the non-productive downtime is budgeted at 20% of the productive hours worked. Let us understand this. See, the given company employees are working at what capacity means 80%. They are working at 80% efficiency. Next, in addition, the non-productive downtime is budgeted at 20% of the productive hours worked. So, non-productive downtime means what? No production will be carried on. Mission breakdown, power failure, floods. All these things are the non-productive downtime. How much is that? 20% of the productive hours worked. On hours worked. Are you understanding? Next. There are 4 5-day weeks in the budget period and it is anticipated that sales and production will occur evenly throughout the whole period. First of all, tell me how many days in the budget period? 20. 4 5-day week. 4 weeks of 5 days. That is the meaning of that. 4 5-day weeks means 4 weeks of 5 days. So 4 into 5? 20 days. Are you understanding this? Next. It is anticipated that stock at the beginning of the period will be what is it called? Opening stock. Product A 400, product B 200, material X 1000, material Y 500 kgs. The anticipated closing stock for budget period. This is the closing stock. Are as follows. Product A, instead of giving in units, they given in day sales. When it comes to raw material, instead of giving kgs, they given days consumption. Are you understanding? That means product A and product B based on sales. Material X and Y based on consumption. Are you understanding? Now, had they given the sales? Yes. How much is the sales? 2400. For how many days? 20 days. 2400 for 20 days. Listen. 2400 for 20 days. How many days sales they're maintaining the closing stock? 4 days sales. How much it comes to? 480. Same way, 3600. 3600 divided by 20 into 5 days. How much it comes to? 900. So this is the closing stock of A, closing stock of B. Same way we calculate after calculating consumption. After calculating consumption, we will calculate X and Y. All of you clear? Now. Required. Calculate the material purchase budget and wages budget for the direct. See, they are asking material purchase budget and wages budget for the direct workers, showing the quantities and values for the next month. They are asking two things. One is purchase budget, one more thing is wages budget. First of all, tell me, to calculate purchase, what is the base? To calculate purchase, what is the base? Consumption. To calculate purchase, consumption is the base. To calculate consumption, what is the base? Production. To calculate production, what is the base? Sales. Does they given sales in the question? Yes or no? 2400, 3600. So they given the sales. Using sales, calculate the production. Using production, calculate the consumption. Using consumption, calculate the purchase. We have to go by the sequence. They are asking purchase budget means directly you cannot prepare the purchase budget. To prepare the purchase budget, consumption is required. If they given consumption, we can calculate directly. But in the question, consumption is not given. What they given is sales. So start with the sales. Are you understanding? All of you? Okay, now listen to me. See here. What is the sales given? A, B. Particulars A, B. And one more thing. When you are giving the headings, that is most confusing thing. When you are giving the headings, sales and production is about finished goods. Consumption and purchase is about raw material. When you are doing sales and production budget, particulars finished goods. When you are doing consumption and purchase budget, particulars raw material. There is no change in the headings. You have to do it in the same format. Because many people confuse what to give the heading. Are you understanding? So here we are doing production budget. Finished goods. So I am taking A and B. Are you understanding? When I do the purchase budget, I'll take X and Y. Are you understanding? Okay, see here. Particulars A, B. What are the sale units of A? 2400. What are the sale units of B? 3600. Now, for this we need to add what? 480. Closing stock. We need to add closing stock. What is the closing stock of A? 480. What is the closing stock of B? 900. It is there on here only. Okay, now. Minus opening stock. What is the opening stock of A? 400. What is the opening stock of B? 200. Can you tell me production of A? 2480. Production of B? 4300. Have you understand this? All of you understand this? So production of A is 2480. Production of B is 4300. Look at here. 2480, 4300. All of you clear till now? No. Using production, what we will calculate now? Consumption. According to given information, what is the consumption per unit? To calculate consumption, listen, this is very, very important step. Listen to me very carefully. See here, I'll write here. Next is consumption budget. I'll do one thing. I'll do consumption and purchase budget in one statement. Consumption and purchase budget. Please tell me the headings first. Particulars. Raw material. Material X. Material Y. There is no change in the format. You have to do it in the same format. Are you understanding? When you are doing consumption and purchase, it's about raw material. What are the raw material names? Material X, material Y. Are you understanding? Now, material X is consuming by product A as well as product B. Material Y is consuming by product A as well as product B. Correct? What I'll do? First I'll take product A. Under particulars I'll take product A. How many units of product A we are producing? 2480. Correct? Now A require, look at this. A require how many kgs of X? How many kgs of Y? 4. What I'll do? I'll take 2480 into 5 kgs of X, 2480 into 4 kgs of Y. Are you understanding the calculation? Can you tell me the values? 12,400, 9,920. Product B. How many units of product B we are producing? 4,300. How many kgs of X it will consume? 3. How many kgs of Y it will consume? 6. So 4,300 into 3. 4,300 into 6. How much it comes to? 12,900. 25,800. Tell me what is the total of material X consumption? 25,300. Next, Y consumption. This is the consumption. This is the consumption. Have you understand this? Consumption of X is 12,400 by A, 12,900 by B. Total is 25,300. Consumption of Y is 9,920 by A, 25,800 by B. Total is 35,720. Are you understanding? Now, we know the consumption. We know how to calculate from consumption to purchase. What to do that? Add closing stock minus opening stock. Are you understanding? Closing stock given in days. Closing stock given in days. So, look at here. How many days of consumption they are holding material X? 10 days. 25,300 kgs. 25,300 kgs consumed in how many days? 20 days. Because the budget period is 20 days. So 25,300 divided by 20 into 10. 12,650. Same way 35,720 divided by 20 into 6. 6 days is the consumption. How much? 716. Opening stock given in the question. How many kgs? 1000 kgs of X, 500 kgs of Y. Now tell me how much it comes to. 36,950. 45,936. This is the purchase. This is the purchase. Are you understanding? Now 36,950. Where is that? 36,950. 45,936. All of you clear about this? Now they want in rupees. Into 4 into 6 will get in rupees. Clear? Now let us discuss about the wage budget. Let us discuss about the wage budget. Listen. Now, to prepare the wages budget, what is the base? Production. Production is the base for all. Production is the base for all. Okay. To prepare wage budget production. So here I'll take particulars and types of labors. Is there any different grades? There is only one grade. There is only one grade. What I am going to do? I will write here both. I am going to take hours and amount. I am going to take in the same column hours and amount. Are you understanding? First tell me production of A. How many units? 2,480. 2,480 into how many hours it require? 3. Whereas B require 5. So 2,480 into 3. 7,440. 7,440. Next, B allowed how many hours? See here. Standard labor hours allowed. What they given here is standard labor hours allowed or standard hours. Are you understanding? Standard labor hours permitted allowed is 3,5. I am doing 2,480 into 3, 7,440 and then 4,300 into 5. 21,500. Now tell me total. 28,940. Can I call it as standard hours? This is the total time permitted for the production. Are you understanding? Now I need to know actual hours. See, wages will be paid for the actual hours. Actual hours are standard hours. Actual hours. Wages will be paid for the actual hours. Why we will pay for the permitted hours? Are you understanding? Standard hours permitted for me is 18 hours for the crash course. Are you understanding, all of you? So it may deviate. When it comes to actual, it can be 17 or it can be 20. It depends. Okay, now the point is standard hours is 28,940. I need to calculate actual hours, which helps efficiency ratio. Efficiency equal to 80%. Efficiency formula is standard hours divided by actual hours, which equals to 80%. So I want actual hours. Actual hours equal to standard hours divided by 80%. So can you tell me 28,940 divided by 80%? 36? 175. This is the actual hours. Are you understanding? I can call it as actual hours worked. I can call it as actual hours worked. They have to work for 36,175 hours. All of you clear till now? No. Look at this. In addition, the non-productive downtime, which means they are not going to work. How much is that? 20% of the actual hours worked. They worked for how many hours? 36,175. To this, we need to add non-productive downtime, which is at the rate of 20%. How much it comes to? 7,235. Now tell me actual hours paid. How many hours? 40? 410? 43,410 is the actual hours paid. See, please understand, initially we calculate standard hours. Using efficiency percentage, we calculate actual hours worked. The efficiency depends upon actual hours worked only. The efficiency of the worker will be determined by the actual hours worked. I understand, we are getting actual hours worked, 36,175. For that, we are adding the non-productive downtime of 20%. We are getting actual hours worked is 36,175. We are adding non-productive downtime. That is 7,235. So that we get the actual hours paid. How many hours paid? 43,410 hours paid. In this 43,410 hours, we need to classify into two: normal hours, overtime hours. Are you understanding, all of you? Now, how to calculate normal hours? Look at here. They give information here. How many hours they're working? 40 hours in a week, correct? If a worker works for more than 40 hours a week, that will be considered as the overtime. How many weeks they're working? 4 weeks. So 40 into 4, 160 into how many workers? 180. 160 into 180? 28,800 is the normal time. Overtime? 14,610. Are you understanding? This 28,800 will be paid at the rate of 25. This 14,610 will be paid at the rate of 7 point. We'll get the labor cost. Have you understand this, all of you? Okay. So very important thing is first calculate the standard hours, and then calculate actual hours worked, and then calculate actual hours paid, and then calculate the amount. If you look at here, see, first standard hours, then productive hours required for production. Then by adding non-productive downtime, hours to be paid is 11,160, 32,250. Total comes to 43,410, what we calculated. Next, hours to be paid at normal rate, how many? 28,800. 28,800 is the normal time. That is what we written here. 28,800. Balance is overtime. All of you clear? Understood this? Okay. So by this we done with the budgetary control. Okay. Let us start with two more important topics. One is standard costing and marginal costing. Okay. Let's spend some time for that. Let us start with the standard costing. Look at here. Okay, now standard costing is also called as the variance analysis. Standard costing is also called as the variance analysis. Why they call it like that? First, let us understand what we are going to learn from the standard costing. Means every company, we discuss the budgetary control. They'll make the estimations at the beginning of the period. At the end of the period, they'll get to know the actuals. There'll be some difference in this too. There will be difference between the budgets and actuals. That difference is called what? Variance. That variance only we are going to study in the standard cost. Are you understanding? Mainly, they are going to start analyzing. They are going to start analyzing from where means profit. What is my targeted profit? What is my budgeted profit? Means 10 crores. The budgeted profit is 10 crores. What is the actual profit made means 8 crores. Big question mark will come now. The management planned to make 10 crores, but actually made only 8 crores. It is favorable or adverse? Adverse. Are you understanding? So please understand, the management is planning to make budgeted profit of 10 crores, but actual profit what they made is 8 crores. Now management wants to know due to what reason the profit has been decreased. Are you understanding? So they'll identify the reason, and whoever has, I mean, whosoever performance is less, they'll penalize them. They'll stop making payment of bonuses. They'll be depromote them. Are you understanding? Next, suppose in place of 8, they're making 12 crores. Plan to make 10 crores, but actually making 12 crores. Favorable or adverse? Favorable. And again, they need to identify the reason. Due to what reason there is excess profit of 2 crores? Because they need to reward those category of people. If it is because of the workers, means workers have to pay the bonus. Are you understanding? Okay, now. So this is how we are going to identify the variance, and we are going to report that whether it is favorable or adverse. Whether it is favorable or adverse. If the profit is increasing, favorable. If the profit is decreasing, adverse. All of you clear about this? So that means the topic is all about why there is a difference between profit, which is called as profit variance analysis. The topic is all about profit variance analysis. Are you understanding? So the main target is profit variance calculation. The main target is profit variance calculation. Now, in this profit variance, it can be affected. The profit can be mainly affected because of two reasons. What are the two reasons? Sales, cost. So it can get affected by the sales and cost. So to identify the reasons for the profit difference, to identify the variance for the profit, we need to do sales variance and cost variance. When it comes to cost, again it has three categories: material, labor, overhead. So that we call it a material variance, labor variance, overhead variance. When it comes to overheads, again it has two: variable overhead variance, fixed overhead variance. So totally we are going to discuss number 1 material variance, number 2 labor variance, number 3 variable overhead variance, number 4 fixed overhead variance, number 5 sales variance. So these are the variances which we are going to discuss the intermediate level. Now how to reconcile that, what are the corrective actions, how to implement the corrective actions, that we'll discuss in the final level. In our intermediate syllabus, it's all about variance calculation, how to calculate the variances, that's all. Are you understanding? So first one is material, second labor, third variable overhead, fourth fixed overhead, fifth one sales variance. Shall we start discussing? No. I don't know where you took the coaching or previously what are the knowledge that you are having. Slightly, I'm going to change the format. I'm going to use a specific format which is very helpful to solve the questions. Even in study material also, few questions solved in my format, few questions they solved in their own. But initially I start with my format. Slowly I'll tell you how to dilute that. Are you understanding? Now see here. Let me start with the material variances. If you want, you can copy this alone. This is very important because for future reference, you can copy this. Material variances, A. Computation table. A. Computation table. We will take material, Roman number 1, SQ into SP, Roman number 2, AQ into AP, Roman number 3, AQ into SP, Roman number 4, RAQ into SP. I'll take material A, material B. I'll take the values and then we'll calculate the amounts. We'll take the values and we'll calculate the amounts. What is SQ? What is SP? What is AQ? What is AP? What is RAQ? Revised actual quantity. See here. Before proceeding further, you need to understand a small point. Here, as I told you, when it comes to profit variance, I told you we are going to compare with the budget with the actual. Correct? But they given the topic name what? Standard cost. We need to understand what is standard cost. First, we need to understand what is standard cost. Listen to me. budgeted 1000 units at the rate of rupees 10, which equals to rupees 10,000. This is the budgeted cost. Actual 800 units cost what they given is 9,000. Planned is 10,000. Actually incurred is 9,000. 1,000 rupees favorable. Planned is 10,000. Actually incurred 9,000. 1,000 rupees decrease. So can I write 1,000 rupees favorable? Does this calculation is correct? Yes or no? Does this calculation is correct? Budgeted is 1,000. Actually is 800 units. How you can compare the budgeted cost of 1,000 units with 800 cost of actual cost? Sorry, 1,000 units budgeted cost. How can we compare with the 800 units of actual cost? Which is against to matching principle. Then what is the right way of comparison? 800 units actual cost should compare with the 800 units budgeted cost. Are you understanding? So what I need to do? I need to calculate budgeted cost of 800 units. Budgeted cost of 800 units at the rate of rupees 10. How much it comes to? 8,000. What is the actual cost? 9,000. Now planned is how much? 8,000. Actual incurred how much? 9,000. Excess incurred or savings in cost of? Excess incurred how much? 1,000. Favorable, adverse? Adverse. Are you understanding? Now, this is called as budgeted cost. The name given to this is standard cost. Are you understanding? So then what is budgeted cost? Means budgeted cost is for budgeted output. What is standard cost? Means budgeted cost for actual output. Difference is output. Here budgeted cost for budgeted output. Here budgeted cost for actual output. Are you understanding? So budgeted cost is budgeted cost for budgeted output. Standard cost is budgeted cost for actual output. In both the cases, cost is same. Both are budget only. What is different? Output. Are you understanding? Budget is also estimated. Standard is also estimated. But budget is for the budgeted output. Standard is for the actual output. Have you understand this? All of you. So same way, can you tell me standard quantity? What is standard quantity? What is standard quantity? Budgeted quantity for actual output. Can you tell me standard hours? Budgeted hours for actual output. Are you getting the logic behind this? All of you. So whenever we do the cost variance, this is the right way of doing. You should compare standard cost with the actual cost. You should not compare budgeted cost with the actual cost. You only told me this is wrong. Comparing budgeted cost with actual cost is wrong. What we need to compare? What we need to compare? Standard cost with actual cost. So that we are taking here SQ into SP, standard quantity into standard price, standard cost. I am not taking BQ into BP. Are you understanding? What I am taking is SQ into SP, which gives the standard cost. Next column is AQ into AP, which gives the actual cost. Next column is AQ into SP, which gives the actual quantity standard price. All of you understanding? Okay. So, if you want, you can copy this. Otherwise, you can write one line. Standard cost is nothing but budgeted cost for the actual output. Standard cost is nothing but budgeted cost for the actual output. This is wrong. What we done is wrong is correct. Compare standard with the actual. Don't compare budget with the actual. Because budgeted cost is for budgeted output. There is a difference in output. So convert that budgeted output into actual output, which is called standard cost. Clear? Now. This is the computation table. Now we'll calculate the variance. This is 1, this is 2, this is 3, this is 4. Let me take the numerical values 1, 2, 3, 4. Now, B computation table. B computation table. First one is material cost variance. What is the formula means? 1 minus 2. Next, material price variance. What is the formula means? 3 minus 2. Material usage variance. What is the formula means? 1 minus 3. This usage divided into 2. Material mix variance. What is the formula means? 4 minus 3. Material yield variance. What is the formula is? 1 minus 4. Okay. Material cost variance 1 minus 2. Material price variance 3 minus 2. Material usage variance 1 minus 3. Material mix variance 4 minus 3. Material yield variance 1 minus 4. These are the formula. First calculate the values and then substitute the values. You will get the answer. Are you understanding? Okay. Now, first let us understand the price variance. What is the formula? 3 minus 2. Correct? Listen to me. Third column, second column. These two columns, the value will be differed. The value will be differed because of quantity. Yeah. The difference is because of quantity. Look at this. Look at these two. Look at these two. The difference is because of quantity. Yeah. Look at these two formulas. The difference is because of what? Price. The quantity is actual quantity. Are you understanding? In both the cases, actual quantity. So here the difference is because of the price. And one more thing, when there is a multi-material, this concept is called as the multi-material variance because multiple products are there. There are two types, single material, multi-material. Single material means no mix variance because there is nothing to mix, only one type of material. When there is a multiple material, one more variance, what we need to calculate is mix variance. In what proportion they are mixing? Are you understanding? Now, generally, actual quantity will be in actual mix. Standard quantity will be in standard mix. This revised actual quantity means actual quantity in standard mix. Please be careful. Revised actual quantity means actual quantity in standard mix. Taking actual quantity standard mix. Normally standard quantity will be standard mix, actual quantity will be actual mix. But revised actual quantity means actual quantity in standard mix. All of you clear? Understanding? Okay now. No. Here actual quantity in actual mix. Here also actual quantity in actual mix. So quantity is same, mix is same. What is different? Price, purely price. Are understanding? So we are so 3 minus 2. 3 minus 2 will give you price variance. Due to price, how much it get deferred? All of you clear about this? Next. Material usage variance 1 minus 3. Material usage variance 1 minus 3. That is 1, 3. Here standard quantity is in standard mix. Actual quantity is in actual mix. Now tell me these two columns. Difference is because of price. Is it because of price? Quantity and mix. If you look at 1 and 3, difference is because of quantity. Standard quantity, actual quantity. And one more thing, mix. Standard mix, actual mix. Are you understanding? So that what I am doing, 1 minus 3 will get the usage variance. But this we bifurcate into 2. Why we bifurcate into 2? Because the difference is because of mix and because of the quantity, which is called yield. Are you understanding? 1 minus 3 difference is because of two reasons. One is because of mix and one more thing because of quantity. We need to know how much is because of mix and how much is because of quantity. Are you understanding? All of you. So here I am taking mix variance, here I am taking yield variance, which is called again quantity variance. Are you understanding? Now tell me mix variance 4 minus 3. Look at the fourth column and third column. Look at the fourth and third. Third, fourth. Here actual quantity in what mix? Actual mix. Now here actual quantity in standard mix. Very good. Actual quantity is standard mix. Now tell me the difference is because of price. Here also standard price. Here also standard price. The difference is not because of price. Now tell me that the difference is because of quantity. Third and fourth column, that the difference is because of quantity. Third column, what quantity we are taking? Fourth column, what quantity we are taking? Actual quantity. Revised, okay. Revised, we are giving the name because of change in proportion. But we are taking actual quantity only, na? Are you understand? I given the name revised because I am changing the proportion, mixed proportion. Third column also we are taking actual quantity. Fourth column also we are taking actual quantity. Are you understanding? See, when I am explaining, you may feel slightly difficulty, but when I am doing the question, it will become So easy. Because using the same format, I'm going to the labor. Using the same format, I'm going to the fixed. Using the same format, I'm going to the variable. Using the same format, we're going to do the sales. If you are able to learn this one thing, we can do all the variances. Are you understanding? Okay. Revise the actual quantity standard mix. Now the point is fourth and third column. The difference is not because of price. Both are standard price. The difference is not because of quantity. Both are actual quantity. The difference is purely because of mix. So here I am written 4 minus 3. What is the name given? Mix variance. Are you understanding? Now 1 minus 4. Last one 1 minus 4. Let us take the first column and fourth column. First column, fourth column. Now tell me standard quantity in what mix? Standard mix. Actual quantity in what mix? Huh? Standard mix. Revise it, na? Revise it. Standard mix. Okay. Now tell me 1 and 4. Does the difference is because of price? No. Does the difference is because of mix? No. Does the difference is because of quantity? Yes. So that here I written as 1 minus 4 as the yield variance. Are you understanding? So ultimately target is to calculate 3 variances. Ultimately target is to calculate 3 variances. Number 1, price variance. Number 2, mix variance. Number 3, yield variance. Usage only we classify into 2. Usage only we classify into 2, mix and yield. Whenever it comes to material cost variance, it is a combo of 3 variances. Material cost variance is a combo of 3 variances. What are the 3 variances means? Price, mix, yield. Are understanding? And one more thing, when there is only single type of raw material, when there is only single type of raw material, which variance will not be there? Mix variance will not be there. At the time, no need to write these two. Just take price and usage. When there is a single material. And no need to have this column. There is no change in mix proportion. Are you understanding? All of you. So this is about the raw material. If you really understand this, can you tell me labor variances? Labor cost variances. Again, we'll take Roman number 1, computation table. Can you tell me the columns? Okay, first I'll take labor type here. First I'll take labor type. First column, what is the formula? Standard hours into standard rate. Second column, actual hours into actual rate. Third column, actual hours into standard rate. Super. Fourth column, revised actual hours into standard rate. Have you understand this? There we are taking SQ into SP, here we are taking SH into SR. There we are taking AQ into AP, here we are taking AH into AR. Are you understanding? There quantity and price, here hours and rate. So labor type is skilled, unskilled. As an example, I am taking skilled, unskilled. We'll be getting the amounts. Clear? All of you understanding this? Next, Roman number 2, variance calculation. Roman number 2, variance calculation. Can you tell me the first variance? Labor cost variance. What is the formula? 1 minus 2. Formulas will not change. Okay. Next, labor rate variance. Labor rate variance. What is the formula? 3 minus 2. Next, labor efficiency variance, which is called difference in hours. 1 minus 3. Efficiency divided into 2. Labor mix variance or gang variance. One more name is gang variance. 4 minus 3. Next, labor yield variance. What is the formula? 1 minus 4. Formulas will remain same. 1 minus 2, 3 minus 2, 1 minus 3, 4 minus 3, 1 minus 4. Are you understanding? All of you. So this is the format for the labor variance. Clear? Now let us do the questions based on these two. Look at the illustration 3. In your book only, illustration 3. The standard cost of a chemical mixture is as follows. 40% material A at 20 per kg, 60% material B at 30 per kg. A standard loss of 10% of input is expected in production. The cost records for the period showed the following usage. 90 kgs of material A at a cost of rupees 18 per kg, 110 kgs of material B at a cost of rupees 34 per kg. The quantity produced was 182 kgs of good product. Calculate material cost variances, material price variances, material usage variances. They are asking 3 ways: cost, price, usage. but we will calculate mix and yield also, just for a practice sake. Okay. Now tell me how many types of materials are there? Two. What are the two? A and B. What is the standard mix proportion? 4:6 or 2:3? Can you tell me actual mix proportion? 90:2 or 90:11? We can take 9:11. Please understand, standard mix is 2:3, whereas actual mix is 9:11. There is a change in proportion, so there will be a mix variance. Are you understanding? What is the standard price of material A? 20. What is the standard price of material B? 30. What is the actual price of material A? 18. What is the actual price of material B? 34. Now tell me one thing. Material A planned to pay 20, actually paid 18. Price variance will be favorable or adverse? Favorable. Planned 20, actually paid 18. When it comes to material B, planned 30, actually 34, paid extra. Favorable, adverse? Adverse. Are you understanding, all of you? Next, what is the last percentage expected? 10%. The loss expected is 10%. Are you understanding? So these are the details given in the question. Now what we'll do? We'll close our eyes. We'll open the format. Just to open the format first, then substitute the values. Page number 13.19. So as I told you, computation table. How many columns? 4. First column is SQ into SP. Second column is AQ into AP. Third column is AQ into SP. Fourth column is RAQ into SP. We'll take A, B. First tell me standard price. What they given? 20, 30. Here also 20, 30. Here also 20, 30. Okay, maintain some space because we have to write the full values. I'll redo this. Sorry. I'll take here material A, B. First column SQ into SP. Second column AQ into AP. Third column AQ into SP. Fourth column RAQ into SP. Now standard price 20, 30. Here also standard price 20, 30. Here also standard price 20, 30. All of you understand till here? Now what is the actual price? 1834. So we written the prices. Now tell me what they given is actual quantity, correct? What they given in the question is actual quantity. How much is the actual quantity? 90, 110. 90, 110. What else to be calculated? Standard quantity and revised actual quantity. What is revised actual quantity? Actual quantity in standard mix. Revised actual quantity is nothing but actual quantity in standard mix. Look at here. RAQ. I will calculate the RAQ. What does it mean? Actual quantity in standard mix. Tell me, actual quantity equal to how many kgs? Total 200 kgs, na? Total actual quantity is 200 kgs. This 200 kgs will divide in the proportion of standard mix. What is the standard mix proportion? 2:2 or 40:60 or 2:3? A, B. How many kgs for A? 80. How many kgs for B? 120. I'll take here 80, 120. By this we done with the revised actual quantity. Have you understand this? Anyone want to explain this again? Okay, now. What is the one more thing? Standard quantity. What is standard quantity? Budgeted quantity for actual output. Standard quantity is nothing but budgeted quantity for actual output. What is the budgeted? Standard loss of 10% of input is expected in the production. Standard loss expectation is 10%. So what I mean to say, here I'll tell you one format, you follow that. I'll tell you that is input output. Always go by the format called as the input output. What is the standard loss percentage? 10%. What does it mean? If you give 100 kgs as input, you will get the output of 90 kgs. This is the budget. This is the permitted. For every 90 kgs, 100 kgs permitted. I understand. For every 90 kgs, 100 kgs permitted. How many units we produced? 182. So how many units? How many kgs will be permitted? 202.22 kgs. Are you understanding? According to standard laws, for every 90 kgs, 100 kgs permitted. I want to know how much is permitted for actual output, which is called a standard quantity. Standard quantity is nothing but quantity permitted by the management. For 90 kgs, 100 kgs permitted. Now I want to know for 182 kgs, how many kgs will be permitted? 202.22 kgs. This is the total quantity. This we need to bifurcate between A, B. In what proportion? Standard quantity in what proportion? No. Standard quantity in what proportion? Standard mix. What is the standard mix? 2:3. 40:60. 2:3. Can you tell me how many kgs for A and how many kgs for B? 80? 80.89 or 88. Okay, 80.88888. Next. 121.33. Okay, 33333. 80.88, 121.333. Are you understanding this too? So calculation of standard quantity, calculation of revised actual quantity is important. Revised actual very simple. Actual quantity standard mix. Standard quantity is nothing but quantity permitted, allowed, granted by the management. How to take that? We go by the format called as input output. They given the last percentage 10%. If you give 100 kgs input, you will get 90. That is one way of understanding. Another way of understanding is for every 90 kgs, 100 kgs permitted. For 182 kgs, how many kgs permitted me? 202.2222. That we are classifying between A and B. Clear? Understanding? Now, 80.88, 121.33. Now tell me one by one. 80.88 into 20. 1618. Okay, tell me the whole value. Don't tell me the decimals. Round up. 1618. 36. 36. 40. 1620. 37. 4. 0. 1800. 3300. 1600. 3600. So these are the values we calculated. Now we can calculate the variances. Shall we start doing that now? Listen. First, material cost variance. What is the formula? 1 minus 2. First I'll do it for A, material A. First column. Look at first column. 1618 minus second column. 1620. 1618 minus 1620. What is the meaning of this? Permitted is 1618. Actually incurred is 1620. They incurred more. How much more they incurred? 2 rupees. Next B. 3640 minus 3740, which equals to 100 rupees. See, 2 rupees adverse. Excess incurred na? Adverse, which is going to decrease the profit. Permitted is 1618. Actual incurred is 1620. Excess incurred is 2 rupees. Now, when it comes to B, permitted is 3640. Actual incurred is 3740. Excess incurred is 100 rupees adverse. What is the total adverse? 1 or 2 adverse. Does the answer is same in your material? What is the material cost variance? 1 or 2.222. That is rounding of difference. Have you understand this? All of you. So this is the material cost variance. Like this. Let us calculate the price variance. Material price variance. What is the formula? 3 minus 2. We'll do it for A first. What is 3 column? How much in the 3 column? Third column. 1800 minus how much in the second column? 1620, which equals to 180. Favorable, adverse? Favorable. Simply I am telling you positive, favorable, negative, adverse. Are you understanding? Positive is favorable, negative is adverse. Now B. Third column is 3300 minus 3740. 440 adverse. What is the net amount? 260 adverse. Are you getting the same answer? Yeah. Next, let us calculate material usage variance. What is the formula? 1 minus 3. First we'll do it for A. 1618 minus 3800, which equals to 182 adverse. B. 3640 minus 3300, which equals to 340 favorable. Net amount 158 favorable. Are you understanding, all of you? Next, same way, I think you can compare with your answers in the study material. You can compare with the answers in study material. Next, material mix variance 4 minus 3. What is the value in fourth column for A? 1600 minus 3, 1800, 200 rupees adverse. B, 3600 minus 3300, 300 rupees favorable, 100 rupees favorable. Are you getting the same answer? Huh? Not right. There is no solution for that. Okay, fine. So 100 rupees favorable. Same way you can calculate the yield variance. Have you understand this? So same way you can do it for labor, everything. I feel this format is little bit comfortable to solve the questions. First you calculate the SQ into SP, AQ into AP, AQ into SP, or AQ into SP. Then start doing the variances. It becomes so easy. All of you clear? Understood? So by this we done with the question number 1. Illustration 8. Take the illustration 8. The standard labor employment and the actual labor engaged in a week for a job are as under. This question is based on the labor variances. We already know the format. How many columns? 4 columns. What is the first column? What is the first column of labor variance? SH into SR. Second column? AH into AR. Third column? AH into SR. Fourth column? RAH into SR. SH into SR, AH into AR, AH into SR, RAH into SR. Are you understanding? Now, look at here. They given 3 categories: skilled, semi-skilled, unskilled. There are 3 types of labors. Standard number of workers in the gang 32, 12, 6. This is the standard number. Actual number of workers employed 28, 18, 4. Is there any mixed variance? Is there any mixed variance in this question? Yes or no? What is the standard? What is the standard number of employees? 32, 12, 6. What is the actual number of employees? 28, 18, 4. Is there any mixed variance? Yes, yeah. Mixed variance in the sense numbering. They plan to have 32 skilled workers, but how many workers they have? 28. They plan to have 12 semi-skilled, but how many workers are there? 18. They plan to have 6 unskilled, but how many workers are there? 4. There is a change in number, na? That means there is a change in mix. Are you understanding? Okay, now. Standard wage rate per hour, which is nothing but SR, 3, 2, 1. Actual wage rate per hour, which is nothing but AR. All of understanding? Next. During the 40 hours working week, the gang produced 1800 standard labor hours of work. Calculate. That 1800 is what? Standard labor hours. The 1800 is the standard labor hours. This 1800 we need to bifurcate between 3: skilled, semi-skilled, unskilled. Standard hours should be taken in what proportion? Standard mix. What is the standard mix proportion? 32 is to 12 is to 6. Can I take it as 16 is to 6 is to 3? Are you understanding? Now, are you understanding or not? Should I repeat this? So, they given standard hours straight away 1800 hours. That 1800 hours we need to apportion between skilled, semi-skilled, unskilled. In what proportion? Standard mix proportion. Standard mix proportion is 32 is to 12 is to 6. I think after getting to this chapters, the vibrance has been come down slightly. Are you not able to understand this? I mean, you might learn in the different format. Correct? So, but I'm telling you, just try this format once. See, if you are comfortable with your format, go with that format. But I always believe that the chance of making mistake is very less in this, because in computation table only we are calculating everything. Once you're done with the computation table, variance writing is just a clerical job. No need to apply the mind. Just take the difference, answer whether it is favorable or adverse. Are you understanding? Okay, now here they given the standard as 1800 hours. This we need to apportion between skilled, semi-skilled, unskilled. In what proportion? Standard mix proportion. Are you understanding? Can you please help out with this? 16 plus 6, 22, 22 plus 3, 25. So 1800 divided by 25 into 16. 1152. Next 1800 divided by 25 into 6. 432. 1800 divided by 25 into 3. 216. Have you understand the standard hours? No. So this is the standard hours. When it comes to actual hours, How to calculate actual hours? Skilled. How many workers are working? 28. How many hours in a week? 40. So 28 into 40 will get the actual hours of skilled. 1120. Are you understanding? Next, semi-skilled. 18 people are working, 40 hours. 18 into 40, 720. Unskilled, 4 into 40, 160. 4 into 40, 160. See, please understand, we know standard hours, we know actual hours, we know standard rate, we know actual rate. What else we need to know? Revised actual hours. How to calculate revised actual hours? Actual hours in standard mix. We're done with the question. Are you understanding? Let's do it fast. I'll do it here. First one, SH into SR. This is skilled, semi-skilled, unskilled. SH into SR. SH into SR. AH into AR. AH into SR. RAH into SR. First standard hours. 1152. 1152. 432. 216. Correct? That is what we calculate here. 1152, 432, 216. Are you understanding? Next, actual hours. 1120, 720, 160. 1120, 720, 160. What is the standard rate? What is the standard rate? 3, 2, 1. 3, 2, 1. 3, 2, 1. 3, 2, 1. What is the actual rate? 4, 3, 2. We know all the values except revised actual hours. How to calculate revised actual hours? Actual hours in standard mix. What is the total actual hours? 2000. If you add this, 2000. 2000 hours. 2000 hours in the standard mix. 2000 hours in the standard mix. Skilled, semi-skilled, unskilled. What is the proportion? 16 is to 6 is to 3. That is the standard mix proportion. Are you understanding? Now tell me 2000 divided by 25. You will get 40. 40 into 16. 280. 40 into 6. 480. 40 into 3. 120, no? No, 40 into 6 how much? 240. 120. 1280, 240, 120. It should not, no. Actual hours is 2000, correct? 2000 divided by 25 into 16. 1280. Divided by 25 into 6. 480, yeah, I'm sorry. Then I did mistake. 480, 240. Correct? All of you? Yeah. So, this is 1280. This is 480. This is 240. So, we know all the values. Just will calculate the values. 1152 into 3. 3, 4, 5, 6. 432 into 2. 8, 64. 216 into 1. 216. Next. 4000. 480. 2160. 320. 3360. Here? 40. 160. 240. Okay, 38. 40. 960. This is the value. We're done with the component table. We can easily calculate the variances. Are you understanding? Let me take an example. We need to calculate labor mix variance. What is the formula? 4 minus 3. Labor mix variance formula is 4 minus 3. Now, what is the first one? Skilled. What is the fourth column value of skilled? This is the fourth column. This is the third column. This is the second column. This is the first column. Skilled fourth column. 3840 minus third column. 3360. What is the difference? 480 favorable. Positive, favorable, negative, adverse. Are understanding? Next. Semi-skilled. 960 1,140. 180. 1,440. Yeah. Okay. 1,440, which equals to 480 adverse. Unskilled. 240 minus 160, which equals to 80 favorable. Are you understanding? If they ask you total, take the net. 480 minus 480 cancel, 80 favorable. This is the net amount. Are you understanding? If they ask you total mixed variance, 480 favorable, 480 adverse, cancel. Balance is 80 favorable. You can cross check with the solution. Are you understanding? Now, suppose if they ask you to calculate the labor efficiency variance. If they ask to calculate the labor efficiency variance, what is the formula? 1 minus 3. Labor efficiency variance 1 minus 3. Are you understanding? 1 minus 2, 3 minus 2, 1 minus 3, 4 minus 3, 1 minus 4. Are you understanding? Now 1 minus 2. First tell me 3456 minus 3360 equal to 96 favorable. Next 864 minus 1440 equals to 576 adverse. Next 216 minus 160 56 favorable. We can take the net amount. Like this we can calculate all the variances. Are you understanding? Clear about this? No. There is one more thing called as the ideal time variance. Whenever there is an ideal time, it has the effect on efficiency. Ideal time variance will have effect only on the efficiency variance. In this case, we will calculate the labor efficiency variance. Correct? This labor efficiency variance, okay, I'll tell you. Please understand. Here we calculate the labor efficiency variance. Efficiency variance bifurcated into mix and yield. Correct? So please remember labor efficiency variance in the presence of ideal time. Labor mix variance, labor yield variance, and one more thing called as the ideal time variance. Are you understanding? So now point is, here we need to have two things now. Whenever there is an ideal time, there are two things. What is that? Hours paid, hours worked. Hours paid is 2000. Hours worked is 1800. What is the meaning of this? 200 hours is the ideal time. Are you understanding? See, hours paid, hours worked. The difference is the ideal time. Hours paid is 2000. Hours worked is 1800. 200 hours is the ideal time. Whatever the payment made for the ideal time is favorable or adverse? Adverse. Obviously adverse. Are you understanding? Now the question mark is, when we calculate the labor cost variance, labor variances, listen, but please think before answering. When we calculate the labor variances, what is the right hours to consider? Hours paid, hours worked. See, my point is, when we calculate the labor variances, what is the cost to us? Hours paid is the cost, hours worked is the cost. Hours paid is the cost. Whatever the amount paid to the worker, that is our cost. We have to consider hours paid only. Are you understanding? All of you. So please understand, take the hours paid, calculate our computation table. Then you calculate labor cost variance, labor rate variance, labor efficiency variance. Stop there. Are you understanding? Now after that, what you will do? This labor efficiency divided into three categories: labor mix variance, labor yield variance, and then ideal time variance. Here the point is, when it comes to mix, yield, these two, we need to calculate based on the hours worked, not based on the hours paid. We have to calculate based on the hours worked. See, whenever they give you the ideal time, they'll give you both hours paid and hours worked. Don't worry. Whenever they give you the ideal time in the question, they'll give you both hours paid, hours worked. The difference on the ideal time. Are you understanding? So whenever there is an ideal time, please remember one thing, ideal time will impact only efficiency variance. Ideal time will have impact only on the efficiency variance, not only in the labor. In variable overhead, fixed overheads also, wherever you find efficiency, that efficiency variance will change. Are you understanding? How it will change? How it will change means, please understand, here when it comes to mixed variance, what is the formula? 4 minus 3. We will take RAH into SR minus AH into SR. Correct? This is the formula. 4 minus 3. Are you understanding? 4, what is the fourth column? RAH into SR. What is the third column? AH into SR. Here what we need to do, you have to take actual hours worked. Here we have to take actual hours worked. Till this 3, we take an actual hours paid. This is the confusing point. Whenever there is an ideal time, first 3 variances, cost, rate, efficiency, will be calculated based on hours paid. Are you understanding? Under efficiency, there are 3 variances: mix, yield, ideal time. Mix variance, yield variance will be calculated by taking hours worked. Sir, why you are taking like that? Because ideal time I separated. Ideal time variance I took it separately. When I took the ideal time separately, what is left out? Hours worked. Using that hours worked, we need to calculate these 2 variances. Are you understanding? Yes. All of you. See, it is complicated, but if you understand, you'll get that maja. Maja aega. Are you understand? The point is, whenever there is an ideal time, there are 2 things: hours paid, hours worked. Hours paid is the cost. There is no doubt in that. Hours paid is the cost. Take the hours paid, calculate cost, rate, efficiency. When you are classifying that efficiency into mix, yield, ideal time, that mix and yield, you have to calculate by taking hours worked. Are you understanding? So here it is revised actual hours worked, again actual hours worked. Calculate the variance. When it comes to yield variance, what is the formula? 1 minus 4. That is standard hours into standard rate minus actual hours into standard rate. Here no problem. Standard hours, it will be same. No change. What is going to change is actual hours worked. Wherever you get the actual hours worked. Are you understanding? All of you. Simple. In place of hours paid, take actual hours worked. When it comes to ideal time variance, how to calculate ideal time variance? Ideal time into standard rate. How to calculate ideal time variance? Ideal time into standard rate. Everything is adverse. Are you understanding? All of you. Okay, it's better we'll do one question based on this. Okay, I'll do that. Okay, now these are the details. Standard hours is 2000, actual hours is 1800, ideal time is 200 hours, standard rate is 10, actual rate is 12. Let me take this the information. Okay, listen to me. First, here single material variance. It is a single material variance, so there will be no mix and yield. Okay, we need to take down material, then only you get the clarity. Okay, I'll do one thing. I'm changing the example. Standard hours of skilled, unskilled. Skilled is 1200, unskilled is 800. Actual hours 1300, 900. Actual rate 10 rupees, 12 rupees. Standard rate 8 rupees, 14 rupees. Ideal time, it is 50. Yes. Okay. Okay, let it be. So these are the details. Standard hours, actual rate, standard rate, ideal time. Now what we need to do? First we need to calculate the labor cost variance. Correct? What is the formula for labor cost variance? 1 minus 2. The formula for the labor cost variance is 1 minus 2. So first column is SH into SR minus second column is AH into AR. First column is SH into SR, second column is AH into AR. So labor cost variance, labor rate variance, labor efficiency variance will be calculated based on hours paid. Are you understanding? Now, this is the actual hour speed. This is the actual hour speed. Now tell me, standard hours 1200, 800 into standard rate 8 rupees, 14 rupees. Can you tell me the amounts? 1200 into 8, 9600. 800 into 14, 11200. Minus actual hours paid 1300, 900 into actual rate 10, 12. This is 13,000. This is 10,800. So 9,600 minus 13,000. You will get 3,400 adverse. 11,200 minus 10,800. 400 favorable. This is the labor cost variance. Understanding? Next. Labor rate variance. What is the formula? 3 minus 2. What is the third column? AH into SR minus second column is AH into AR. Are you understanding? Now, here actual hours paid, that is 1300, 900 into standard rate 8, 14, which equals to 1300 into 8, 10,400, 900 into 14, 12,600 minus actual hours is 1300, 900 into actual rate 10, 12, which equals to 13,000, 10,800, which equals to 10,400 minus 13,000, 2,600 adverse, 1,800 favorable. Have you understand this? Next, labor efficiency variance. What is the formula? 1 minus 3. What is the first column? SH into SR. What is the third column? AH into SR. Just I am going by the format. SH into SR, AH into AR, AH into SR, RAH into SR. Are you understanding? First column is SH into SR. Third column is AH into SR. Here SR, standards. See, we already calculated SH into SR. 9,600, 11,200. Can I take the same thing? 9,600, 11,200. 9,600, 11,200. Minus AH into SR. We already calculated here. AH into SR. How much is that? 10,400, 12,600. Which equals to, difference is 800 rupees adverse. Here 1,400 adverse. We done with the labor efficiency variance. What is the total of this? 2,200 adverse. 2,200 adverse. All of it clear till now? Now the real point starts that. See, we calculate first three variances. When it comes to labor mix variance, formula is 4 minus 3. Fourth column is RAH into SR minus third column is AH into SR. But here what we need to do, revise the actual hours worked has to be taken. That is what I am doing. Impact is only on the efficiency variance. The efficiency variance we are going to classify into mix, yield and ideal time. So when I taken out the ideal time separately, what is left out? Actual hours worked. Using that we have to calculate the variances. Are you understanding? Now tell me, what is the actual hours worked by skilled? What is the actual hours worked by skilled? This is the actual hours paid. This is the ideal time. What is the actual hours worked? 1,250. What is the actual hours worked by unskilled? 850. So 1,250, 850. 1,250, 850. I write here 1,250, 850 the actual hours worked. Are you understanding? Now the same thing I have to take in standard proportion. 1,250 plus 850, which comes to 2,100. I have to take in the standard proportion. What is the standard proportion? 12 is to 800. That is 3 is to 2. Are you understanding? 1,200, 800. What is the proportion? 3 is to 2. Are you understanding? Revised actual. What is the meaning of revised actual hours? Actual hours in standard mix. Standard mix is 3 is to 2. Are you understanding? So I am taking here 3 is to 2. Now tell me, according to this proportion, how much is for skilled and how much is for unskilled? 1,400 for skilled, 700 for unskilled. Sorry, 3 is to 2, na? I'm sorry. Now tell me. 1260, 840. 1260, 840. Are you understanding? Now, I'll take here 1260, 840 into, what is the standard rate? 8 rupees, 14 rupees. 8 rupees, 14 rupees. So, how much it comes to? 10,080, 11,760. Here 10,000, 11,900. So which equals to 80 rupees favorable. Here 140 rupees, 140 adverse. Net amount 60 adverse. Have you understand this? All of you. Next. After this, what we need to calculate? Labor yield variance. Labor yield variance. What is the formula? 1 minus 4. SH into SR, which we already calculated, minus AH into SR. So here SH into SR, that is 9,600, 11,200, minus AH into SR means AHW. AHW, there are two things. AHW into SR, AH into SR. Sorry. AHW into SR and AH into SR. What we need to take is AHW, actual hours work, because we are taking idle time separately. Are you understanding? So AHW into SR is 10,000, 11,900. How much it comes to? 400 rupees adverse. Next. 700 adverse. What is the total? 1100 adverse. We done with the yield variance. Next. Ideal time variance. How to calculate that? Ideal time into standard rate. What is the ideal time of skilled? 50. What is the ideal time of unskilled? 50. Into standard rate. What is the standard rate? 8 and 14. So 8 into 50, 400. 14 into 50, 700. Total 1100. Correct. Adverse. But 60 extra we are getting. If you add these three, that should be equal to this. There is some mistake we done. If you add these three, that should be equal to 2200. Because efficiency variance we classify into three: mix, yield, idle time variance. 60, 2000 total. That's what I mean to say. 2260 we are getting, but here 2200. 60 rupees difference is coming. There is some mistake. 1260, 840 correct. Correct. 1250, 850 correct. Okay, fine. There is some mistake. I'm not able to track that. Oh, 1 minus 4 is RAH, na? I'm sorry. Correct. 1 minus 4 is RAH into SR. Correct. That is what the mistake. This is RAH into SR. Super. RAH into SR, how much? 10,080, 11,760. Now tell me the difference. First one is 560. First one First one 480 adverse, second one 560 adverse. Total 1040 adverse. Now to 1040. 1040. 1040 plus 1100 plus 60. Now it is matching. It should match. Okay, like this you can cross check the solution. When you do the mistake also we can track it. Are you understanding? Okay, it's a live example. So that's what I'm doing. Once you're done with the question, try to cross check. If you make these three things total, it should be equal. If you make efficiency and price, if you make the total of efficiency and rate, that should be equal to cost. 2200 plus 1800. 2200 plus 1800. How much it is? 2200 plus 1200. Sorry, 1800. 4000. I'm sorry. Total is what here? Net amount 800 rupees adverse. So total 3000 rupees adverse. Correct? Huh? So if you look at here, 3000 rupees adverse. Matching. 3400 adverse, 400 favorable. 3000 adverse. Here 800 rupees adverse, 2200 adverse. Total 3000 adverse. So like this you can cross check the solution. Are you understanding? So this is about the labor cost variance. In labor cost variance, one of the adjustment is ideal time. That ideal time will have impact only on the efficiency. Are you understanding? Yeah. So as I told you, how to do that? First we need to calculate the cost variance, rate variance, efficiency variance. When you are doing the mix and yield, take this actual hours worked. Shall we write the note for that? We'll write the note for that. It will be helpful for you. Just write note. Right? In the presence of ideal time, the labor cost variances or labor variances, should be calculated in the following approach. First point. Firstly, calculate labor cost variance, labor rate variance, labor usage variance. Labor efficiency, not usage, labor efficiency variance. Labor cost variance, rate variance, labor efficiency variance using actual hours paid, cost variance, rate variance, efficiency variance using actual hours paid. Then calculate labor mix variance, labor yield variance, ideal time variance. Okay, labor mix variance, labor yield variance using actual hours worked. Then calculate the ideal time variance. Separately. That is ideal time into standard rate. Then calculate the ideal time variance. That is ideal time into standard rate. I understand this. Okay, take a break. We'll continue. Okay, let's continue. We are done with the material variance and labor variance. Let us discuss about the variable overhead variances. Let us discuss about the variable overhead variances. First, we'll write the format. You can copy along with me. A. Calculation of standard rates. Standard rate per unit equal to budgeted variable overheads divided by budgeted output. Standard rate per hour equal to budgeted variable overheads divided by budgeted hours. Standard rate per unit equal to overheads divided by units, per hour equal to overhead divided by hours. B. Computation table. B computation table, that is number 1 SH into SR or AO into SR. Number 2 actual variable overheads. Number 3 AH into SR or SO into SR. These are the 3 columns. Actually, first column, third column, we have 2 formulas. First column is SH into SR, or you can take actual output into standard. AO stands for actual output. AO stands for actual output. We'll be getting the amounts. Second column AVOH, actual variable overheads. If you look at the first column, standard hours into standard rate or actual output into standard rate. Please be careful. If you take standard hours, take standard rate per hour. If you take actual output, take standard rate per unit. It depends upon what you are taking. If you are taking output per unit, if you are taking hours, take per hour. Are you understanding? Next. So this is the computation table. Next, C. Variance calculation. First one, variable overhead cost variance 1 minus 2. Variable overhead cost variance 1 minus 2. Variable overhead expenditure variance 3 minus 2. Variable overhead efficiency variance. Efficiency variance 1 minus 3. This is the format. Formulas is not going to change. 1 minus 2, 3 minus 2, 1 minus 3. But we have only 3 variances, so we are calculating the 3 variances. Same way, let us write for the fixed overhead variances, and then we'll do one question based on that. Give the heading fixed overhead variances. Right? A. Standard rates. Standard rates. Can you tell me the formulas? Standard rate per unit equal to, what is the formula? Budgeted fixed overheads divided by budgeted output. When we are taking variable overhead, take variable overhead. When we are calculating fixed overhead, take the fixed overheads. Okay, next. Standard rate per hour equal to budgeted fixed overheads divided by budgeted hours. Next, write B. Computation table. Actually, in this case, we are going to have the 5 columns. 1 SH into SR or AO into SR. 2 actual fixed overheads. 3 budgeted fixed overheads. 4 AH into SR or SO into SR. 5 PFOH, possible fixed overheads. SO stands for standard output. PFOH, possible fixed overheads. How to calculate that means budgeted fixed overheads into actual days divided by budgeted days. Totally 5 columns are there. SH into SR or AO into SR. AFOH, actual fixed overheads. BFOH, budgeted fixed overheads. AH into SR or SO into SR. SO stands for standard output. At last, possible fixed overheads. How to calculate that means budgeted fixed overheads into AD divided by BD, actual days divided by budgeted days. Okay, now, right, see. Variance calculation. Variance calculation. First we'll calculate fixed overhead cost variance 1 minus 2. Fixed overhead expenditure variance 3 minus 2. Fixed overhead volume variance 1 minus 3. Volume variance divided into 3 categories. Fixed overhead capacity variance 4 minus 5. Slightly changed. Normally we take 4 minus 3, but here we are taking 4 minus 5. Next, fixed overhead calendar variance. Calendar variance 5 minus 3. Fixed overhead efficiency variance 1 minus 4 as usual. So the formula changed from 4 minus 3 to 4 minus 5, and calendar variance we are taking 5 minus 3. That's all. Completed? Okay, now let us do one question based on this. Look at the question number 13. The following information was obtained from the records of a manufacturing unit using standard costing system. The given standard actual. Here the point is, see, normally what is standard cost? What is standard cost? Budgeted cost for actual output. Budgeted cost for actual output. Correct? What is the output here? 3800. If it is standard, here also it should be actual output only. Are you understanding? Whatever the data given here, try to understand. What is the page number? 4. Page number 13.47. That is the page number. Okay, now listen to me. Actual output is 3800 units. Here standard again 4000 units. Please understand, standard cost is nothing but budgeted cost for the actual output. Output 3800 means here also it should be 3800. If it is a standard, they use the word standard, but please understand this is not standard, this is budgets. Are you understanding? And one more thing I can tell you. One more thing I can tell you why they use that kind of wording means we are doing for the fixed overhead variances. Correct? When you are doing the fixed overhead variances from 3800 out, budget is 4000. Budget is 4000. Actual output is 3800. Now tell me, standard cost is budgeted cost for actual output. Budgeted cost is budgeted cost for budgeted output. Let me take an example. Fixed overhead 4 lakhs. Budgeted cost for budgeted output is 4 lakhs. Budgeted cost for actual output. By changing the output with the fixed cost changes, it should be 4 lakhs only. Standard will be equal to budget in case of fixed overheads. Are you understanding? So what I mean to say, ultimately the conclusion is the data what they given here is not standard, that is budget. That is budgets. But they'll use the wording standard also because both are equal. Budgeted cost equal to standard cost in case of fixed overheads. Are you understanding? All of you clear about this? Now, then the budget. Now tell me, what is the budgeted production? What is the budgeted production? 4,000. What is the actual production? 3800. Working days 20, 21. Plan to work for 20, but actually working for 21 days. Now tell me, calendar variance will be favorable or adverse? Favorable. It will be favorable because plan to work for 20, but actually work for 21 days, 1 day extra. Which is favorable in the calendar variance. Understanding? Next, machine hours. Budgeted hours is 8000. Actual hours is 7800. Factory overheads 4 lakhs is the planned. Actual income 3,90,000. Variable overheads planned 1,20,000. Actual 1,20,000. So these are the details given. You are required to calculate following overhead variances: variable overhead variances, fixed overhead variances. Are you understanding? Shall we start doing this? We know the formats. Just to close your eyes, just to go by the format, you will get the right answers. Okay, now let's do this. Now, You tell me, I'll write it here. I'll write it this format only. Now tell me, you know, answer is with you. Answer is with you. Now tell me, don't look at the answer. I mean to say, don't copy the answer. Your answer is with you. Now tell me, budgeted variable overheads. How much is the budgeted variable overheads? 1,20,000. What is the budgeted output? 4,000. How much it comes to? 30. Budgeted variable overheads. 1,20,000. Budgeted hours. How much it comes to? 15. Now, so we know standard rate per unit, standard rate per hour. Are you understanding? Next. Listen. If you look at the first column, either we have to use standard hours or we have to use actual output, which is readily available. Standard hours, that is not standard, that is budgeted hours. Please remember, please, that is not standard, that is budgeted hours. Now tell me, which is readily available? Standard hours or actual output? Actual output. How much is the actual output? 3,800 into. Should we take standard rate per unit or standard rate per hour? Standard rate per unit, because you're taking actual output. Because you are taking actual output, you have to take standard rate per unit. How much is standard rate per unit? 30. Are you understanding? All of you. Now, next, actual variable overheads. How much? Actual hours standard output, which is readily available. Actual hours. How many hours? 7,000 into standard rate per hour. 15. Amount. 3,800 into 30. 1,14,000. 1,14,000. 1,20,000. Next. 1,17,000. Now, variable overhead cost variance 1 minus 2. 1,14,000 minus 1,20,000. 6,000. What? Adverse or favorable? Adverse. Negative adverse. Are you understanding? Next. Expenditure variance 3 minus 2. 1,17,000 minus 1,20,000. 3,000 adverse. Variable overhead efficiency variance 1 minus 3. 1,14,000 minus 1,17,000. 3,000 adverse. Done with the variable overhead variances. Are you understanding? Next. Fixed overhead variances. Budgeted fixed overheads. Budgeted fixed overheads 4 lakhs. Budgeted output. 4,000. How much it comes to? 100. Budgeted fixed overheads 4 lakhs. Budgeted hours 8,000, which equals to rupees 50. Have you understand this? All of you? Next. Here. Okay. Actual output. What is the actual output? 3,800 into star rate per unit is 100. Correct? Look at here. Star rate per unit is 100. Okay. Next. Actual fixed overheads. 3,90,000. Budgeted fixed overheads. Actual hours into standard rate per hour 50. Here budgeted fixed overheads into actual days divided by budgeted days. Budgeted fixed overheads is 4 lakhs into actual days 21. Budgeted days 20. How much it comes to? 4 lakh 40,000 20,000. Okay, 4 lakh 20,000. 4 lakh 20,000. Here it is 3 lakh 80,000. Here it is 3 lakh 90,000. 4 lakhs 3 lakh 90,000. Now 1 minus 2. You'll get 10,000 rupees adverse. Next 3 minus 2 favorable. 1 minus 3 20,000 adverse. 4 minus 5 30,000 adverse. Capacity variance adverse. Next calendar variance 5 minus 3. I told you enough it will be favorable. 20,000 favorable. Efficiency variance 1 minus 4 10,000 adverse. Look at this. 10,000 adverse, 30,000 adverse, 40,000 adverse, minus 20,000 favorable, 20,000 adverse. 20,000 adverse, 10,000 favorable, 10,000 adverse. This is how we need to calculate the variable overhead variances, fixed overhead variances. All of it. See, if you go by the format comfortably, you can solve the question. You can check with the answers in the study material also. They'll give the same answers. Are you understanding? So you go by the format approach. Okay. Now, last one. Sales variance. There is only one question based on this. Just I'll tell you the format. A computation table. If you want, you can copy this format. Computation table. There are 4 columns. One, okay. Here I'll write product. There are 2 products. Product A, product B. First column is BQ into BP. Second column is AQ into AP. Third column is AQ into BP. Fourth column is RAQ into BP. BQ stands for budgeted quantity, BP stands for budgeted price. AQ stands for actual quantity, AP stands for actual price. RAQ, revised actual quantity into budgeted price. Okay, we'll get the amounts. So this is the computation table. Next, B, variance calculation. Variance calculation. What is the variance calculation means? Total sales variance. First we'll write total sales variance 1 minus 2. This divide into 2. Selling price variance. Selling price variance 3 minus 2. Sales volume variance 1 minus 3. This volume variance divided into 2. Sales mix variance 4 minus 3. Sales productivity variance 1 minus 4. That's all. Just follow the format, you'll get the answers. Total sales variance 1 minus 2. Selling price variance 3 minus 2. Sales volume variance 1 minus 3. Sales mix variance 4 minus 3. Sales productivity variance 1 minus 4. Completed. So by this we're done with the standard costing. Let us start with the last concept called the marginal costing. Marginal costing. So in this, majorly we are going to discuss, first I'll tell you what are the topics that we are going to discuss. Number 1, CVP analysis. Number 2, indifference point. Number 3, limiting factor. I'm not going to discuss marginal costing versus absorption costing, which requires so much of time. It's not that important from the exam point of view. Okay. I'm going to discuss CVP analysis, indifference point, limiting factor. Okay. Let us start with CVP analysis. First, CVP. C stands for cost, V stands for volume, P stands for profit. This entire chapter, most major portion has been covered by the CVP analysis. What we are going to study, sir, in this CVP analysis, what we are going to study means how the sales volume will impact the cost and will impact the profit. Volume is the hero of this chapter. All the techniques, all the discussion, whatever we are making, it is related to volume, sales volume. Volume is the hero. Cost and profit is the heroines. We are going to see how the hero is going to influence the heroines. Around there is a villain also. Fixed cost is the villain of this chapter. Okay. So what I mean to say, how the volume is going to impact the cost and how the volume is going to impact the profit. That is the discussion. Are you understanding? There are multiple techniques like break-even sales, marginal safety. You would have come across all these things. PV ratio, variable cost ratio. So first let us understand the basics of the CVP analysis. I'll take one example. To understand this, I'll take one example. Let me take an example. Selling price equal to rupees 10. variable cost per unit equal to rupees 6. Fixed cost equal to 200 rupees. Units sold equal to 100. Prepare and calculate. Prepare and calculate. A. Income statement. B. PVR slash VCR. C. Break even sales. D. Margin of safety sales. E. Profit calculation. F. Sales at desired profit. Sales at desired profit. So these are the things which we are going to discuss. Number one, income share. And one more thing, when it comes to marginal costing, it is also called as the decision making. This chapter is also called as the decision making. When the purpose is decision making, the major classification of the cost is variable cost and fixed cost. This entire chapter we are going to have the classification of variable and fixed. We will never have the classification of manufacturing, administration, selling and distribution. Are you understanding? Our classification is variable cost and fixed cost. Are you understanding? Okay, now on the base of variable cost and fixed cost classification, first we will discuss the income statement. A. Income statement. I hope you copy these facts. 10 rupees, 6 rupees, 200 rupees, 100 rupees. Just at least copy these 4 facts. At least copy these 4 facts. Selling price is 10 rupees, variable cost per unit is 6 rupees, fixed cost is 200, units sold is 100. Now, let us prepare the income statement. What is the format of income statement? Sales minus variable cost will get contribution minus fixed cost will get profit. So, particulars amount. First I'll take sales. How many units? 100 into price 10. How much it comes to? 1000. Next variable cost minus variable cost 100 into 6. How much it comes to? 600. If you reduce this, we'll get contribution. How much is the contribution? 400 minus fixed cost. How much is the fixed cost? 200. If you reduce this, we'll get 200. So this is the format of the income statement. Now we need to understand why we need to prepare the income statement in this format. Sir, how it will be helpful? This income statement helps to calculate change in profit with the change in sales. Straight away we can say what is the change in profit with the change in sales. Sir, how to mention that? I'll tell you the example. See, in this question, sorry, in this example, what is the selling price? 10 rupees. What is the variable cost? 6 rupees. I am selling this product. Let me take an example. I am selling this product for the 10 rupees. To manufacture this product, how much I am spending? 6 rupees. Specific cost. Specific cost incurred for this product is 6 rupees. Variable cost is product based. Variable cost is product based. That means for this product specifically I am incurring 6 rupees. I am selling at what rate? 10 rupees. So I am receiving 10 rupees. I am setting off my incurred cost of 6 rupees. The balance left out is contribution. First we need to understand why we call it as contribution. The reason is because it contributes. Sir, how it is contributing? For what it is contributing means initially it contributes towards fixed cost. Once the fixed cost is recovered, then it will contribute towards profit. Are you understanding? See, as I told you the example, 10 rupees is the selling price, 6 rupees is the variable cost, 4 rupees is the contribution. Using that 4 rupees, when I sell the product 1, I am receiving 4 rupees contribution. That 4 rupees is not my profit. I am yet to recover the fixed cost. 10 minus 6, I am reducing only variable cost. I haven't reduced the fixed cost. I cannot call that 4 rupees as the profit. That 4 rupees is the contribution. Initially, it contributed fixed cost. According to our example, how much is the fixed cost? 200 rupees. Each unit is giving me 4 rupees contribution. Tell me how many units I need to sell to get the 200 rupees. 50 units. 200 divided by 4 rupees. That 50 units is called break-even sales. The units which helps to recover the fixed cost is called break-even sales. What is the total sales according to my example? 100 units. Out of 100 units, 50 units are contributing towards fixed cost. Balance 50 units is going to make the profit. 50 into 4 is 200 rupees. How much is the profit you are getting? 200 rupees. Are you understanding? See, that 4 rupees is a contribution. Why we call it as contribution? Because it contributes. Initially, it helps to recover the fixed cost. Once you recover the entire fixed cost, then it helps to make the profit. Are you understanding? All of you. So that means in this case, 4 rupees is the contribution I'm getting. Correct? Now the point is, let me take an example. I took 100 units here. I took 100 units. Let me take 200 units. Let me take the amount there. Can you tell me 200 into 10? 2000. Just I'm calculating for 200 units. Initially I calculated for 100 units. Now I'm calculating for the 200 units. Now 200 into 10, 10,000. 200 into 6, 1,200. How much is the contribution? 800. How much is the fixed cost? 200 or 400? 200. It is not going to change. How much is the contribution? Sorry, how much is the profit? 600. All of you clear on this? Now tell me one thing. What is the change in sales? What is the change in variable cost? Now, what is the change in contribution? What is the change in fixed cost? What is the change in profit? 400. Here we need to understand one thing. Change in contribution is exactly equal to change in profit. Why? Why it is happening like that? Fixed cost is constant. In between those two, fixed cost is not changing. Are you understanding? That means because the contribution increases by 400 rupees, profit also increases by 400. If contribution decreases by 10 rupees, profit also decreases by 10 rupees. If contribution increases by 1 rupee, profit will increase by 1 rupee. Because in between those two, fixed cost will be constant. It will never change. Are you understanding? That is the assumption of the marginal costing. Fixed cost will never change according to marginal costing. Are you understanding? So change in contribution is always equal to change in profit. Clear? If you know the change in contribution, we can calculate the change in contribution. Sorry, change in profit. Now tell me one thing. 100 units become 110 units. 100 units become 110 units. What is the increase in units? 10 units. Each unit will give the contribution how much? Each unit will give the contribution how much? 4 rupees. 10 units into 4 rupees. How much is the contribution? 40. Changing contribution is 40. Profit will change by 40. This 400 will become 440. 200 will become 240. Are you understanding? Suppose sale units decreased by 20. Can you tell me decrease in profit? 20 into 4, how much? 80. That's it. So the usefulness of this income statement is we can straight away calculate. We can straight away calculate change in profit with the change in sales. Sales increased by 50 units. Sales increased by 50 units. How much is the profit increase? 200 rupees. 50 into 4, 200. Are you understanding? Sales decreased by 30 units. What is the decrease in profit? 120. 30 into 4, 120. Are you understand? That is the usefulness of this income statement. So one thing what we need to understand here is change in contribution is equal to change in profit. Change in contribution is always equal to change in profit because in between those two fixed cost is constant. Clear on this? All of you? Next. B. PVR. What is the full form of PVR? Profit volume ratio. What is the one more name? Contribution sales ratio. One more name is contribution sales ratio, CSR. PVR or CSR, both one and the same. Profit volume ratio is also called as the contribution sales ratio. Now let us see how to calculate this. I am telling you 4 formulas. There are 4 formulas to calculate this. Number 1, contribution divided by sales. Number 2, contribution per unit divided by selling price. Number 3, change in contribution divided by change in sales. Change in contribution divided by change in sales. Last one, change in profit divided by change in sales. These are the 4 formulas. So contribution divided by sales, contribution per unit divided by selling price, change in contribution divided by change in sales, change in profit divided by change in sales. So PV ratio calculation is very, very important in this chapter. That is the centric point. Once you calculate the PV ratio, it's easy to do the question. Are you understanding? So I have given you 4 formulas now. 2 more formulas is there. We'll write that later. I have given you 4 formulas. First formula is change in contribution. Contribution divided by sales. If they given the total values, take the first one. If they given per unit values, take the second one. If they given the comparison between the periods, then take change in contribution or change in profit. If they given profit, take change in profit. If they given contribution, take change in contribution. Divided by change in sales. Are you understanding? All the formulas will give the same answer. Now, according to our calculation, contribution is 400, sales is 1000, which equals to 40%. Correct? According to our calculation, look at here, 400, 1000. Contribution divided by sales. This is the base what we taken. Are you understanding? Next, per unit. Per unit contribution is 4 rupees. Selling price is 10 rupees, which is 40% into 100. Are you understanding? Next, change in contribution. We already discussed 400. Change in sales 1000. When I'm increasing from 100 to 200, when I'm increasing from 100 to 200, what is the change in contribution? 400. What is the change in sales? 1000. Are you understanding? So 400 divided by 1000 into 100, how much you will get? 40%. Next, change in profit, that is also 400. Change in sales, 1000, which is 40%. You can use any formula, you will get the same answer. Are you understanding? Now, one more point. When it comes to PV ratio, PV ratio is constant as how the fixed cost is constant. Are you understanding? It will changes when there is a change in selling price or variable cost per unit. Tell me one thing. Can you tell me PV ratio at 100 units? 400 divided by 1000, how much it is? 40%. At 200 units, 800 divided by 2000, how much it is? 40%. PVR will be constant at all the sales. PVR will be constant at all the sales. It changes when there is a change in selling price. Are understanding? See, 10, 6, 4. How much is the contribution? 4 rupees. How much is the selling price? 10. 4 divided by 10, 40%. Let me take an example. Selling price decreased by 10%. Then how much it is? 9. Then it is 6. How much is the profit? Sorry, contribution. 3. 3 by 9, 33.333%. When there is a change in sales, no change. When there is a selling price change, change is happening. Are you understanding? So what I mean to say, PV ratio is constant as how the fixed cost is constant at all the levels of sales. But subject to condition is selling price and variable cost per unit should be constant. Then only the PV ratio will be constant. Otherwise, PV ratio also changes. Have you understand this? Should I repeat? Okay, now look at here. Note, PV ratio is constant. PV ratio is constant at all the level of sales. At all the level of sales, subject to selling price and variable cost per unit. Selling price and variable cost per unit should be constant. Selling price and variable cost per unit should be constant. I hope you all understand this point. Okay, next. Leave some 4 lines gap. Two more formulas are there that we'll write there. Next. What is the next one? VCR. Can you tell me the formula for VCR? What is VCR? Variable cost ratio. Listen. Variable cost per unit divided by selling price or variable cost divided by sales. Variable cost per unit divided by selling price or variable cost divided by sales. Listen, per unit is 6, price is 10, which equals to 60%. Correct? Total is 600, sales is 1000 into 100, 60%. All of you understanding? Now the point is, here I'll give you one equation, very important equation. PVR plus VCR equal to 100%. PVR plus VCR equal to 100%. Why? PVR is contribution divided by sales. VCR is variable cost divided by sales. If I take common sales, contribution plus variable cost, if you add these two, sales by sales, which equals to 100%. PVR plus VCR equal to 100%. If the question they mentioned that VCR 70%, how much is PVR? 30%. PVR 25%, how much is VCR? 75%. VCR 50%, how much is PVR? 50%. Are you understanding? Because they'll give you the information where require PVR, but they'll give the VCR in the question. They'll frame the question in such a way where the requirement is PVR, but they'll give the VCR in the question. Use the VCR and calculate the PVR. Are you understanding? All of you. So PVR plus VCR equal to 100%. You can change the interchanging values. We can take the interchanging values. All of you clear about this? So next. That is about VCR. Third one, C, break-even sales. What is this break-even sales? What is the break-even sales? What is the specialty of that sales? What is the specialty of that sales? No profit, no loss. Our profit equal to 0. At that sales, profit equal to 0. Any startup companies will struggle a lot to reach the break-even. They'll be in the losses. I told you now. See, they're making the sales, but the sales is eating up by the fixed cost. That sales is eating up by the fixed cost. They have to push themselves like anything. There are companies where they push themselves by 5 to 6 years to get into the profits. Or understanding till the time the entire profit is eating up by fixed cost. The entire contribution is eating up by fixed cost. Break-even sales. What is the specialty of that sales means? At that sales, profit is 0. Are you understanding? How to calculate that? When I asked you the units, you said 50 units. How you got that 50 units in our example? 200 divided by 4. 200 divided by 4. What is the 200? Fixed cost. What is it 4? Contribution per unit. Are you understanding? So, what is break-even sales means? The sales at where profit is 0. The sales at where profit is 0. The sales at where profit is 0. So, we have two formulas. We can calculate in units as well as we can calculate in rupees. We can calculate in units as well as in rupees. In units, fixed cost divided by contribution per unit. In units, fixed cost divided by contribution per unit. In rupees, fixed cost divided by PVR. This is universal law. Fixed cost, see, whenever you want in units, divide with contribution per unit. Whenever you want in rupees, divide with PV ratio. Not only for break-even sales, marginal safety, indifference point, shutdown point, whatever it is. I don't know, if you want in unit, divide with contribution per unit. If you want to calculate in rupees, calculate in PVR. Sorry, divide with PVR. One more formula is break-even point units into selling price. Can I write like this? To get into rupees, units into price, we'll get rupees. Units into price, we'll get rupees. Are you understanding? Yes, now, how much is the fixed cost? According to our example, 200. How much is the contribution per unit? 4, which equals to 50 units. If you want in rupees, 200 divided by PV ratio, how much you calculated? 40%, which equals to 500. Are understanding? Next, break-even point units. How many units? 50 units into price, 10 rupees, which equals to rupees 500. Both will give the same answer. Either you can use fixed cost divided by PVR or we can use break-even point units into selling price. Are you understanding? All of you now. Now the point is, by changing the sales, will the break-even sales changes? 1000 become 2000, 2000 become 2 lakh, 2 lakh become 4 lakh. When the sales changes, break-even sales changes? Yes or no? Answer is no. Why? Because break-even sales equal to fixed cost divided by PVR. This is the formula. Now tell me, by changing the sales, will the fixed cost changes? By changing the sales, will the PV ratio changes? No. If these two factors do not change, how the break-even sales changes? It will also not changes. So break-even sales is also constant as how the fixed cost is constant. Subject to selling price and variable cost per unit and fixed cost should be constant. I don't understand it. Subject to conditions are very important. Don't have the imagination that all the time break-even sales is constant. Yes, it is constant. Subject to condition is selling price and variable cost per unit and fixed cost should be constant. Then break-even sales will be constant. Why? Because if the selling price or variable cost per unit changes, what is going to change? PV ratio. If PV ratio changes, break-even sales changes. If fixed cost changes, break-even sales changes. Are you understanding? All of you? Okay, now right. Note. Break-even sales is also constant. Break-even sales is also constant at all the level of sales. At all the level of sales. Subject to selling price, comma, variable cost per unit and fixed cost are constant. Fixed cost are constant. Subject to selling price, comma, variable cost per unit and fixed cost are constant. Okay, now one more thing. Here we written the formula. Break even sales equal to fixed cost divided by PVR. Correct? Now, can I write PVR equal to fixed cost divided by break-even sales? Can I write PVR equal to fixed cost divided by break-even sales? This is the fifth formula for the PVR. This is the fifth formula for the PVR. I'll write here. I told you to leave the space. I told you to leave two line space. PVR equal to fixed cost divided by break-even sales. This is the fifth one. This is the fifth formula. PVR is very, very important. When it comes to CV panels, if you are able to calculate PV ratio, you're done with the half of the solution. Major things will be interlinked to PVR. So that I'm telling you all the possible formulas. All the possible formulas is 6 formulas. There is one more formula, I'll tell you that. Otherwise, you can write now only PVR equal to profit divided by margin of safety. This is the last one. Profit divided by margin of safety. These are the 6 formulas. These are the 6 formulas. You have to remember. It depends upon the information what they given in the question. Accordingly, you have to choose the formula. Done. So by this we done with the break-even sales. Next, D, margin of safety sales. Margin of safety sales. See, what is margin of safety sales means? Can I call it as profit generating sales? Can I call the margin of safety as the profit generating sales? I already told you, break-even sales helps to recover the fixed cost. Margin of safety will contribute towards profit. Can I call it a profit generating sales? Or can I call it as sales above the break-even sales? Once you touch the break-even point, 0. Once you touch the break-even point, 0. 50 units is the break-even point. 51st unit. When you sell the 51st unit, you will get 4 rupees. That 4 rupees contribute towards profit. That means from 51st unit, you are going to make the profit. 51st unit, your profit is 4 rupees. 52nd unit you sold, your profit is 8 rupees. Your 53rd unit sold, your profit is 12 rupees. From 50 above 50 units only, you are going to make the profit. 51st, 4 rupees. 52nd, 8 rupees. 53rd, 12 rupees. 54th, 16 rupees. Are you understanding? So, marginal safety is the profit generating sales are above the break-even sales. All of you understanding? Now, margin of safety are the profit generating sales or sales above the BES. Because they'll ask you in the examination, calculate profit generating sales. They'll ask you to calculate sales above the break-even sales. Nothing but marginal safety. It's better to have the idea about the different names. Understanding? Yeah. So that is about marginal safety. Next. So this is also the sales. Marginal safety is also the sales. Profit generating sales. We can calculate in units. We can calculate in units as well as we can calculate in rupees. In units formula, can you tell me the formula? Profit divided by contribution per unit. Or else we'll do one thing. Let me write 2 formulas. We can write 2 formulas. Profit divided by contribution per unit. One more formula is total sale units minus break-even sale units. Total sales minus break-even sales. We'll get the marginal safety. Are you understanding? Profit 200. Contribution per unit 4, which is equal to 50 units. Total sales 100. Total sale units 100. Break-even sale units 50. So net is 50. Same way in rupees. We can write 3 formulas. First one, profit divided by PVR. Super. Profit divided by PVR. Second one, total sales into break-even sales. Or we can write marginal safety units into selling price. Or total sales into break-even sales. Sorry, total sales minus break-even sales. Let us substitute one by one. 200 divided by PVR 40%. How much you will get? 500. Marginal safety units 50 into selling price 10. 500. Total sales 1000. Break-even sales 500. Net is 500. All will give the same answer. These are the different formulas possible. I have given you all the possible formulas because they will frame question in such a way where if you use these formulas, you'll be able to get the answer. Sometimes they'll give you total sales, break-even sales, ask to calculate marginal safety. Sometimes they'll give you profit and PVR, ask to calculate marginal safety. Are you understanding? They just see conceptually, it is like marginal safety, profit generating sales, break-even sales means recovering of the fixed cost. That is the concept. But they'll twist the question in such a way with different factors. These are all the formulas possible. If you remember these formulas, you are able to link to one formula out of this. Whenever the requirement is marginal safety, immediately flash should be these formulas. Are you understanding? I'm trying to give you all the possible formulas. That's it. Nothing else. Okay, next. E, profit calculation. E, profit calculation. Now, first of all, the first possible formula is, can I write sales minus total cost? First possible formula, can I write sales minus total cost? Can you tell me one more formula? Contribution minus fixed cost. Third formula, margin of safety units into contribution per unit. Fourth formula, margin of safety rupees into PVR. Simple here. Margin of safety units formula is what? Profit divided by contribution per unit. I want profit, so I'm writing profit equal to margin of safety units into contribution per unit. Here the same thing. Margin of safety rupees formula is profit divided by PVR. I want profit, so margin of safety rupees into PVR. Nothing new. Are you understanding? Okay, now tell me sales 1000 minus total cost. Variable cost is 600. Fixed cost is fixed cost is 200. 600 plus 200, 800. Profit is 200. Contribution 400. Fixed cost is 200. Profit is 200. Margin of safety units 50. Contribution per unit 4, which equals to 200. Margin of safety rupees 500. PV ratio 40%, which equals to 200. All the forms will give the same answer. All of you clear about this? Next. So by this we done with the profit calculation. At last I'll give you one formula which helps to calculate profit, at the given level of sales, or calculate sales at the required profit. They'll sometimes try to link sales with the profit or profit with the sales. Interlinking these two, I'll give you one formula. Sales at desired profit. Generally I'll call it as sales at desired profit. What does that means? In this case also we have two formulas. In units, in rupees. In units, sale units equal to fixed cost plus profit divided by contribution per unit. In rupees, sales rupees equal to fixed cost plus profit divided by PVR. These are the formulas which helps to link sales and profit directly. Required profit. They may tell you what is the sales to make the profit of 20,000. What is the sales to make the profit of 40,000? These are the basic formulas which is under the CVP analysis. Shall we do one question based on this? Yeah. Look at this question. You are given the following data. For the year 21-22, sales is 1,20,000, profit is 8,000. For the year 22-23, sales is 1,40,000, profit is 13,000. Find out PV ratio. Can you tell me which formula we can use? We have totally 6 formulas. Change in profit divided by change in sales. The formula which we can use is, that's what I told you, it depends on data. Change in profit divided by change in sales. What is the change in profit? 5,000. What is the change in sales? 20,000 into 100. What is the percentage? 25%. So PVR is 25%. Have you understand this? Next, they're asking break-even point. Which formula you can see? Whenever it comes to break-even point, immediately we have to think about the fixed cost. Okay, let me tell that also. See what happens whenever I say, okay, what is her name? Radhika Pandit. When I say Radhika Pandit, who will come into mind? Yes, correct. Whenever I say Radhika Pandit is the name, yes, wife. When I say Radhika Pandit, you will get S into mind, correct? When I say Aishwarya Rai, who will come into mind? Abhishek Bachchan. I should say, okay, Abhishek Bachchan. Okay. Next, like let's see, there are some famous pairs, correct? Same way, Swami Saranam. Same way, whenever I say sales, you have to think about contribution. Whenever I say sales, you have to think about contribution. And one more point, sales can be classified into two: break-even sales, margin of safety. Correct? So please understand, break-even sales plus margin of safety equal to 100%. This is one more equation. Break-even sales plus margin of safety equal to 100%. Suppose break-even sales is 70%, margin of safety is 30%. Margin of safety is 20%, break-even sales is 80%. Are you understanding? The entire sales will classify into two categories: break-even sales and margin of safety. If you add this to 100% sales, are you understanding? Now, whenever I say sales, think about contribution. Whenever I say break-even sales, see, contribution can be divided into two: fixed cost and profit. It contributes initially towards fixed cost, then towards profit. So the famous page is sales means contribution, break-even sales means fixed cost, marginal sales means profit. Whenever the requirement is break-even sales, immediately you have to look into the fixed cost. Your mind should go to the fixed cost. You have to search for the fixed cost. Whenever the requirement is marginal safety, immediately search for the profit. If they didn't given, we'll see how to calculate that. Are you understanding? So these are the three famous pages: sales and contribution, break-even sales and fixed cost, marginal safety and profit. Clear? All of you? Now, here what they are asking? Break-even point. So I have to look for fixed cost. Have they given the fixed cost? No. How to calculate? PV ratio? Sales into PVR will get contribution minus profit will get fixed cost. Sales into, so I'll write here, fixed cost equal to sales into PVR minus profit. Sales into PVR minus profit. Sales into PVR is contribution. Minus profit is fixed cost. When you reduce fixed cost, you're getting profit. Now reduce the profit, you get the fixed cost. Are you understanding? All of you. They give two sales, 21, 22, 22, 23. Either you can take 21, 22 or you can take 22, 23. Your answer is not going to change. Let me take 21, 22. How much is the sales? 1,20,000. How much is the PVR? 25. How much is the profit? 8,000. Net net is 22,000. So fixed cost is 22,000. Now what they are asking? Break-even point. Fixed cost divided by PV ratio. It comes to 88,000. This is the break-even sales. Are you understanding? All of you? Okay, done. Next. Profit when sales are 1,80,000. I told you, profit and sales intrigue. What is the formula? That's it. Fixed cost plus profit divided by PVR. Linking profit to sales or sales to profit. Use the formula fixed cost plus profit divided by PVR. Are you understanding? Now, they are asking to calculate profit. Sales given. How much is sales? 1,80,000. So, sales equal to 1,80,000 equal to fixed cost plus profit divided by PVR. So, 1,80,000 equal to fixed cost. How much is the fixed cost? 22,000 plus profit is the requirement divided by 25%. You will get profit equal to 1,80,000 into 25% minus 22,000. How much it comes to? 23,000 is the profit. Are you understanding? All of you? Next. Sales required to earn the profit of 12,000. They are asking sales. Fixed cost plus profit divided by PVR. Which you got fixed cost is 22,000. Profit is 12,000. Divided by PV ratio is 25%. So 1,36,000. All of you clear? All of you understanding? No. So this is the calculation. Last one. Look at the last one. What is the requirement? Marginal safety. You have to look into profit. Which year? 22-23. What is the profit in 22-23? 13,000. So margin of safety equal to what is the formula? Profit divided by PVR. So 13,000 divided by 25%, which is equal to 52,000. Are you understanding? Okay, so this is how we need to calculate. Very important question. Many times asked in the examination. Many times asked in the examination. Okay, yeah. Next, these are the types of break-even point. Let me explain the types of break-even point. Types of break-even sales. We know that. What is the break-even sales? At that sales profit? At the sales profit? 0. At break-even sales profit is 0. We know that. But there are certain types of break-even sales. What does that means? Number 1, cash break-even sales. Number 2, multi-product break-even sales. Number 3, graphical presentation. Let us understand this. Cash break-even sales. Can you tell me the formula for cash break-even sales? Cash fixed cost divided by PVR. Cash fixed cost divided by PVR or contribution per unit. Are you understanding? Oh, okay. Now, in our example, fixed cost is 200. Correct? In our example, fixed cost is 200. Let me take an example. This includes two things: cash fixed cost, non-cash fixed cost. Cash fixed cost is, just I'm taking the example, non-cash fixed cost is 50. So cash fixed cost is 150. Are you understanding? Okay, let me take like this. Cash fixed cost is 160, non-cash fixed cost is 40. Okay. Now we need to calculate cash break-even sales. How to calculate cash break-even sales? Cash fixed cost 160 divided by contribution per unit 4 rupees. How many units? 40 units. Are you understanding? Can you tell me the examples for non-cash fixed cost? Depreciation and amortization are the examples. Depreciation and amortization are the examples for the non-cash fixed cost. Are you understanding? Now, management will think first to achieve the first to recover the cash fixed cost. That means they'll try to achieve the cash break-even sales. Once they achieve the cash break-even sales, then they'll try for the break-even sales. Then they'll start making the profit. I understand. Now tell me the point. At the cash break-even sales, will the profit be zero? Yes or no? At cash break-even sales, will the profit be zero? Answer is no. Loss or profit? Loss, which is exactly equal to non-cash fixed cost. Which is exactly equal to non-cash fixed cost. I'll tell you. See, 40 units. 40 into 10. How much you'll get? 400. Minus variable cost. 40 into 6. How much it is? 240. How much you're getting? 160 contribution. Minus total fixed cost is 200. How much is the loss? 40. How much is the non-cash fixed cost? 40. Are you understanding? Your loss will be exactly equal to non-cash fixed cost. There are two things: cash break-even sales, break-even sales. Cash break-even sales recover only cash fixed cost. You'll be end up with the loss, which is exactly equal to non-cash fixed cost. See, choose the correct answers are there. They may twist you. They may ask these kind of questions, logical questions. Are you understanding? All of you, okay? Now, so that is about the cash break-even sales. Simple cash fixed cost divided by PVR or contribution per unit. Clear? Now, one more thing. Multi-product break-even sales. What is this multi-product break-even sales? Let me take an example. XYZ Limited. There is a company called as the XYZ Limited. It is having two products, M, N. It is having two products, M and N. Selling price is 10 rupees. Variable cost is 6 rupees. Whereas here 15, 12. 15 rupees, 12 rupees. Now tell me how much is the contribution per unit? 4 rupees, 3 rupees. Total fixed cost equal to 2000. Sales proportion equal to 2:1. These are the details. Understanding what is happening here? There are two products. M, N. Contribution per unit of M is 4 rupees. Contribution per unit of N is 3 rupees. Fixed cost is how much? 2000. Selling price per unit is, sales proportion. SP stands for sales proportion or sales mix proportion. 2:1. M and N. If 2 units of M sold, 1 unit of N will be sold. Are you understanding? Now the point is, they'll ask you to calculate break-even sales of XYZ Limited. Break-even sales equal to, we know the formula, fixed cost divided by contribution per unit. Fixed cost is 2000 divided by contribution per unit. If there is only one contribution per unit, no confusion. But here there are multiple contribution per unit. We have to take, what we need to do now? Average. Take the average. I don't understand. What average? Weighted average. Don't take the simple average. Take the weighted average. Because the recovery of fixed cost depends upon contribution per unit and how many units we are selling. Two factors will determine the recovery of fixed cost. Are you understanding? Two factors will determine the recovery of fixed cost. So what we need to do? We need to take both the factors. How to do that? 4 into 2 plus 3 into 1 divided by 2 plus 1, which equals to 8 plus 3, 11. 11 divided by 3, how much it comes to? 11 divided by 3. 3.66666 divided by 3.66666. How much it comes to? You just take fixed cost as 5,000. How much it will come?
1,363.66.
Again decimal. So okay, fine. 1,000.666 units. Are you understanding? Now the point is, this 1,363 is the break-even sales, total break-even sales. I need to know how many units of M, how many units of N. So we need to divide it with which proportion? 2:1. So can you tell me M?
909.
9? 1 454.55. 454.55. So the break-even sales of M is 909. Break-even sales of N is 455. All of you clear about this? This is how we need to calculate the multi-product break-even sales. Fixed cost divided by contribution per unit, but take the average contribution per unit, what average, weighted average, and then split into products. Have you understand this? All of you. So this is the multi-product break-even point. Last one, graphical presentation. Sometimes they may ask you that also. Graphical presentation. What is this graphical presentation? See here. I will take x-axis, y-axis, 0. Here I am going to take the fixed cost first. On x-axis I will take units. Okay. One time. X-axis, y-axis, 0. On x-axis I will take units, on y-axis I will take the cost. Now, first one, fixed cost line. You tell me one thing, when the units are keep on increasing, will there be any change in the fixed cost? No. If fixed cost is here means it will be constant. This is the fixed cost line. Fixed cost line will be parallel to the x-axis. Fixed cost line will be parallel to the x-axis. Cost is not cost I am taken on the y-axis. 10,000 means it will be 10,000 only all the time. All of you clear about this? Next. Let me take the variable cost. Let me take the variable cost. Tell me, if the number of units is 0, how much is the variable cost? 0. If the units keep on increases, variable cost keep on increases. So it will start from 0 and it will be keep on increasing. This is the variable cost line. This is the fixed cost line. Are you understanding? All of you. Next. Now tell me one thing, total cost line. Total cost. When I say total cost, it is sum of variable cost and fixed cost. When the units are 0, will the total cost be 0? No, equal to fixed cost. Super. It will be equal to fixed cost. That means the total cost will start from fixed cost and then keep on increases. Are you understanding? This is the total cost line. Clear? Next. Let me take the sales. When the units are 0, sales 0. When the number of units are 0, sales is 0. Then again keep on increases. This is the sales line. I hope now you understand all the lines. Fixed cost, variable cost, total cost, sales. Are you understanding? Now, we need to draw the graph of break-even sales. At break-even sales, profit 0. When the profit will be 0, sales equal to total cost. Total cost. When sales equal to total, then only profit 0. Are you understanding? That means we need to see sales equal to total cost. We need to take sales total cost line. Wherever these two will cross, that crossing point is called as the break-even sales. That intersection point is the break-even sales. Are you understanding? So I'll draw that. X-axis, y-axis, 0. X-axis will take units and y-axis will take cost as well as sales. I'll take both. Now what happens? This is the fixed cost line. Correct? All of you. This is the total cost line. This is the total cost line. And this is the sales line. This point of intersection, if you draw it to the x-axis, this units will be there. That units is the break-even sales units. Are you understanding? Next, if you take it onto the y-axis, that is the break-even sales rupees. Because on y-axis we are taking rupees, cost and sales. Are you understanding? Now, this point is the break-even sales, means sales equal to total cost. Are you understanding? Now, if you observe below that, which line is upper? Which line is upper in this zone? Cost line is upper. Cost line is on upside, sales line is on downside. See, means cost is more than sales. We are making profit or loss. This is the loss making zone. Are you understanding? Above that, which line is upper? Sales line is upper, cost line is downward. That means we are making profit. So this is the profit zone. This is the loss zone. This is the profit zone. Are you understanding? So this is the break-even sales. This is how we need to see. Suppose you see what I'm discussing is related to concept only. In the examination, when they ask you to draw the graph, what they'll do? They'll give fixed cost equal to 2 lakhs, contribution per unit equal to rupees 20. Calculate break-even sales and present in graph. Present in graph. This is the question. What you need to do? First to calculate the break-even sales. What is the formula? Fixed cost divided by contribution per unit, which equals to 10,000 units. You're done with the calculation. They ask you to present the graph. What you do? You first draw the graph. Don't think much. You just draw the graph. Tuck, 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 tuck. Done. Then what you do? You just draw the line. You mention it as 10,000 units. Done with the graph. This is what the break-even sales graph. Are you understanding? All of you. Just they want to know how it will present. Clear? All of you. So there are three types of break-even sales. Number one, cash break-even sales, multi-product break-even sales, graphical presentation. Cash break-even sales. What is the formula? Cash fixed cost divided by contribution per unit or PVR. Multiple break-even point means fixed cost divided by average contribution per unit. Fixed cost divided by average contribution per unit. Which average? What average? Weighted average. When they ask you to present the graph, just draw the graph and point the break-even sales. Clear? Understood? So this is the break-even sales types. So if you look at this question, look at the question. The product mix of Gamma Limited is as under. The product mix of Gamma Limited is as under product M, product N. Look at this. The product mix of Gamma Limited is as under product M, product N. Units 54,000, 18,000. Selling price, variable cost given. So the selling price and variable cost helps to calculate what? Contribution per unit. What is the contribution per unit of M? 1.50, 1 rupee 50 paisa. What is the contribution per unit of N? 10 rupees 50 paisa. Are understanding? M is 1 rupee 50 paisa, N is 10 rupee 50 paisa. All of you clear? Next. Find the break-even point in units if the company discontinues product M and replace with product O. This is very important point. They are discontinuing the M and replacing with O. For the O, they given quantity. Product O is 9,000 units and its selling price and variable cost respectively are 18 and 9. Fixed cost is 15,000. So ultimately they are asking to calculate the break-even point. What type of break-even point sales is this? Multi-product break-even point. Now tell me, what are the products that we need to consider? What are the products that we need to consider? M is discontinued. So we have to take the O. I understand. M is discontinued. Don't take the M. What they're in place of M, what they're replacing? O. How many units of O? How many? What is the selling price? What is the variable cost? 9. Here contribution per unit is 10.50. Here contribution per unit is 9 rupees. What is the proportion between these two? What is the proportion between these two? Sales proportion. 2:1. Are you understanding? What is the fixed cost? 15,000. Now what we'll do? Break-even sales equal to fixed cost divided by average contribution per unit. Fixed cost is 15,000. Average contribution per unit equal to 2 into 10.5. 2 into 10.5 plus 1 into 9 divided by 3. 10. If you take 10,500, this divide into N and O in proportion of 2:1. So 1000 units of N, 500 units of O. Are you understanding? This is the break-even sales of O and N and O. This is the break-even sales of N and O. Are you understanding? All of you? Okay. It is also study material question. What is the page number? I think 8. 4 point 14 point by 3. Answer is same now, 1500. It will be same. Why to worry? Okay. Clear on this? All of you? Understanding? Yeah. Let us start with the indifference point sales. Let us start with the indifference point sales. Let us start with the indifference point sales. What is the specialty of this sales? What is the specialty of this sales? Okay. What is the meaning of indifferent? What is the meaning of indifference? When you will be indifferent? When you find two options which give same benefit. Are understanding? Laddu on one hand and sweet on another hand. You will find you don't know what to choose. You are indifferent. When you are loving, you are the sweet lover means you will be indifferent. Are you understanding? So what is indifferent? And when you compare with both the options are in favor of you and costing you same. Then you are indifferent. So what is this indifference point sales means? The sales at where two options will give same benefit or same cost. Are you understanding? When the same sales means you are indifferent. Same cost, then also you will be indifferent. So what is the specialty of the? That's what I told you. All the techniques related to sales, break-even sales, profit is break-even sales, profit is zero. Marginal safety, which gives the profit, the sales which generate the profit. Indifference point, the sales at where both the options will have same cost or same benefit. Are you understanding? See, this entire topic, full marginal costing is about analyzing of the sales. Are you understanding? Now, what is the specialty of the sales means? The sales which has same cost or benefit at two options, or the sales at where two options have the same benefit or same cost is called as the IDP. Is called as IDP. Indifference point. Okay, now, but this technique can be applied if following conditions satisfied. If following conditions satisfied. Conditions satisfied. This technique can be applied if the following conditions satisfied. Number one, it can be applied only in between two options at a time. It can be applied only in between two options. See, there might be the three options. But what we have to do, there is a B, C. When there is three options, you cannot apply at a time indifference point between all the three options. You have to need to do first apply between A, B, then apply between B, C, then apply between C, A. Are you understanding? This is how we need to do when there is a more than two options. That is I written here. It can be applied only in between two options at a time. Clear? Next, second point. One of the option should have low variable cost, comma, high fixed cost. Low variable cost, comma, high fixed cost, and another option should have high variable cost, comma, low fixed cost. See, one of the options should have low variable cost, high fixed cost. Another option should have high variable cost, low fixed cost. Okay, then only we can apply the should have high variable cost, low fixed cost. Then only we can apply the indifference point. Last condition, the selling price under both the options should be same. Same. If these three conditions satisfied, we can apply the indifference point technique. Are you understanding, all of you? Now, to understand this better, let me take the example. There are two machines, machine 1, machine 2. There are two machines, machine 1 and machine 2. If they purchase machine 1 to produce the product, variable cost is 5 rupees. Variable cost is 5 rupees, whereas fixed cost is 1000 rupees. Just I am taking the example. If you purchase the machine 1, your variable cost will be 5 rupees per unit, whereas fixed cost is 1000 rupees. If you purchase machine 2, your variable cost is 3 rupees per unit, whereas fixed cost is 5000 rupees. Are understanding? If you compare these two options, machine 1 has low variable cost or high variable cost? High variable cost compared to machine 2, where fixed cost is low. When it comes to machine 2, low variable cost, high fixed cost. Can we apply the indifference point? Answer is yes. One option has high variable cost, low fixed cost. Another option has low variable cost, high fixed cost. That is the second point. Are you understanding? Okay, now the point is, here the problem is, they can see machine 1 is good because fixed cost is less. Machine 2 is good because variable cost is less. Now they are in dilemma. Which machine to purchase? Are you understanding, all of you? If you go by the machine 1, point is fixed cost is less, but variable cost is more. If you go by the machine 2, variable cost is less, but fixed cost is more. So the management is confused state. How to purchase? Whether they're in the confused state to decide. Now how to decide this based on sale units? Are you understanding? I'll tell you. Let me take an example. Company is producing and selling 1000 units. Company is producing and selling 1000 units. Now tell me, machine 1, how much it cost? Variable cost. Just to see, are you understanding the situation? See, the problem is, if you look at this information, the management is in dilemma position. They are not in a position to take the call. What is happening there? Machine 1, variable cost is more, but fixed cost is less. When it comes to machine 2, fixed cost is more, but variable cost is less. They are not in a position to take the decision. Then how to decide? That means based on how many units they are expecting to produce and sell. Based on how many units they are expecting to produce and sell. As an example, I taken 1000 units. Now tell me, how much is the variable cost? How much is the fixed cost? What is the total? If you go by machine 2, how much is the variable cost? How much is the fixed cost? How much is the total? Which is better? In this case, machine 1 is better. When the production is 1000 units, machine 1 is better. Are you understanding, all of you? Next. Instead of 1000, they decide to produce 3000 units. Can you tell me machine 1 cost? 15,000. Fixed cost. Total. Under machine 2. Fixed cost. Total. Machine 2 is better. When they are producing 1000 units, machine 1 is better. When they are producing 3000 units, machine 2 is better. At certain number of units, both will be same. That certain number of units is called indifference point. Are understanding? The sales at where two machines have the same benefit or same cost. In this case, it is same cost. When they are producing 1000, machine 1 is better. When they are producing 3000, machine 2 is better. But at certain number of units, both the machines will have the same cost. Are understanding? The units at where both the units have the same cost is called as what? Indifference point. Are you understanding, all of you? So let me take an example. Indifference point as x units. We don't know, so that I'm taking it as x units. Now tell me cost under machine 1, machine 2. X into 5. 5x is the variable cost. How much is the fixed cost? 1000. Total comes to 5x plus 1000. Machine 2. How much is the variable cost? 3x. How much is the fixed cost? 5000. Total comes to 3x plus 5000. Are you understanding? At this indifference point, both are equal. Correct? Huh? So 5x plus 1000 equal to 3x plus 5000. What will do? 5x minus 3x equal to 5000 minus 1000. Can I write like this? Just I am rearranging the values. Now x into 5 minus 3 equal to 5000 minus 1000. X equal to 5000 minus 1000 divided by 5 minus 3, which equals to x equal to 4000 divided by 2, which equals to 2000 units. That means 2000 units is the indifference point. At 2000 units, both the machines will cost same. Let us check that. Check. If you take 2000 units, machine 1, how much is the cost? 2000 into 5. Fixed cost, total 11,000. 2000 into 3, 5,000. Total 11,000. Both will have the same cost. So this 2000 units is the indifference point. Are you understanding? Because both the machines costing same. Now which machine is better means dilemma. That is called indifference. Whereas here no dilemma. We go for the machine 1. Here also no dilemma. We'll go for machine 2. But whereas here we are in dilemma position, which is called indifferent. Are you understanding? All of you. Indifference point means the sales at where both the options have same cost or same benefit. All of you clear about this? Now the question mark is all the time we cannot calculate like this. We require the formula. How we are getting this 2000 units? 4000 divided by 2. How we are getting 4000? 5000 minus 1000. That means difference in fixed cost. Are you understanding? 5000 and 1000 is the fixed cost. No? We are taking difference there. So difference in fixed cost divided by 5 and 3 is what? Variable cost per unit. So difference in variable cost per unit. This is the formula. Difference in fixed cost divided by difference in variable cost per unit. Are you understanding? All of you. Now, I told you one more thing. What is that? What is the third condition? Selling price should be same. Let me take an example. Here the selling price is 10 rupees. Here the selling price is 10 rupees. Now can you tell me contribution per unit in the machine 1? 5. Contribution per unit on machine 2? 7. What is the difference? 2. What is the difference? 2. When the selling price is same, difference of variable cost equal to difference of contribution per unit. Are you understanding? So here I am writing difference in variable cost per unit. What I am going to do now? Difference in fixed cost divided by difference in contribution per unit. Two formulas to calculate the indifference point. Either you can use variable cost per unit or you can use contribution per unit. It depends upon as how they given the information. Are you understanding? So ultimately, formulas in units, in rupees, in units, in rupees, in units. Can you tell me the first formula? Variable cost per unit. Difference in fixed cost divided by difference in variable cost per unit. Next, second formula. Difference in fixed cost divided by difference in contribution per unit. Difference in units. Difference in fixed cost divided by difference in variable cost per unit or difference in fixed cost divided by difference in contribution per unit. Correct? Now tell me in rupees. Difference in fixed cost divided by difference in PV ratio. Whenever there is a contribution per unit, take the PV ratio. Are you understanding? All of you. Next, difference in variable cost per unit has been taken now here. Now tell me difference in fixed cost divided by difference in VCR. Are you understanding? So these are the two formulas to calculate in rupees and these are the two formulas to calculate in units. Clear? Understanding? Next. Understood? Okay, now. So in our example, difference in fixed cost is 4,000. Difference in fixed cost is 4,000. Difference in variable cost per unit is 2 rupees, which equals to 2,000 units is the indifference point. Are you understanding? Using this, let us understand how to make the decision. Using these 2,000 units, let us understand how to make the decision. Are you understanding? Now, I'll take here sale units. Okay. Situation, decision. Situation, decision. Or else you can write as sales only. Sales expected to made by management. Sales expected to made by management and decision. Now, if it is less than indifference point, Sales expected to made by management is less than indifference point. Listen, go back to here. Indifference point, how many units? 2000. If it is less than 2000, means 1000 I can take. If it is less than 2000, I can take 1000. Which option is better, mission 1 or mission 2? Mission 1. Why mission 1 is better? Because of variable cost of fixed cost. Because of variable cost of fixed cost. Look, see here. When it is less than 2000, okay. When it is less than 2000, just I'm taking example 1000. At 1000, which mission is better? Mission 1. My question is, mission 1 become better because of variable cost of fixed cost. Fixed cost. Look at there. Variable cost is 3000, 5000 more, but fixed cost is less. The cost becomes 6000 because of fixed cost, because of low fixed cost. Are you understanding? Okay. So whenever the sales is less than fixed cost, go for the option which is having low fixed cost. Can I write like that? All of you. So sales expected by the management, sales expected to made by management is less than indifference point. Less than indifference point means decision is option with low fixed cost. Option with low fixed cost. All of you clear? Next. When it is greater than indifference point, when the management is expecting greater than indifference point, out of these two, which mission is better? Machine 2. Why mission 2 is better? Because of fixed cost or variable cost? Variable cost. Because of low variable cost. Are you understanding? All of you. So when it is greater than indifference point, option with what? Low variable cost. Are you understanding? Now, option with low variable cost means, can I call it as option with high fixed cost? Can I write like that? Low variable cost means fixed cost is more only. Are you understanding? So how to remember this means less than indifference point, low fixed cost, greater than indifference point, high fixed cost. You just remember like that. When the sales is less than indifference point, go for the option with low fixed cost. When the sales is greater than indifference point, go for the option with high fixed cost. Are you understanding? This is how we need to select. Sometimes they'll give you the question to calculate the indifference point, and then they'll ask you to make the decision. At the time, the decision making will be helpful. All of you clear? Understanding? Now, equal to indifference point, either of the option. Either of the option. Equal to indifference point, either of the option. Clear? Now, let us do one question based on this. Look at this question. The following are cost data for 3 alternative ways of processing the clerical work for cases brought before the LC court system. So, the question is for the court, LC court system. Okay, now, here they given 3 options. What are the 3 options? What is the page number? 14.57. Page number 14.57 in study material. Now, there are 3 options. Option 1, option 2, option 3. What is the option 1? Manual, doing the work manually. Option 2, semi-automatic. Option C, fully automatic. These are the 3 options. Under 3 options, they given first fixed cost details, and then they given the variable cost details. Fixed cost details, they given the breakup. Make the total. Fixed cost details, they given the breakup. What is the breakup? Occupancy, maintenance contract, equipment lease. Now make the total. What is the total here? 15,000 here. 45,000 here. 1,25,000. This is the fixed cost. Next, variable cost, that is also given breakup. Tell me the total. 240, 140, 40. This is the variable cost. We know the variable cost, we know the fixed cost. Now tell me the formula which we can use to calculate the indifference point. Difference in fixed cost divided by difference in variable cost per unit. Are you understanding? Here they given unit variable cost. means variable का per unit only na. Are you understanding? They give it as unit variable का, nothing but variable का per unit. 4 formulas are there. Difference in fixed cost divided by difference in variable cost per unit. Second, difference in fixed cost divided by difference in contribution per unit. Difference in fixed cost divided by difference in VCR. Difference in fixed cost divided by difference in PVR. All of you clear? So here they given variable cost per unit, so that we are taking variable cost per unit. In some questions they'll give PV ratio. In some questions they'll give VC ratio. So based on the information you have to pick the formula. Are you understanding? Now what we'll do? Here there are 3 alternatives: A, B, C. A, B, C. Now what we need to do? First do it between A, B, then between B, C, then between C, A. Shall we start? Now. First tell me A, B. Between A, B. What is the difference in fixed cost? 30,000. What is the difference in variable cost per unit? 100. So which is equal to 300 cases? Am I correct? Next. Tell me. Okay, I'll write here. Now. Equal to 300 cases. Tell me BC. Difference in fixed cost. BC 80,000 divided by difference in variable cost 100. How many cases? 800 cases. Tell me CA. What is the difference? 1,10,000 divided by difference in variable cost 200. So how many cases? 550 cases. There are 3 indifference points: 300, 550, 800. Correct? There are 3 indifference points: 300, 550, 800. All of you clear? What they are asking? Calculate cost indifference point, interpret your result. Interpretation in the sense we have to mention how to make the decision. That is the interpretation. Interpretation means nothing but how to make the decision. Are you understanding? Now, what we'll do? There are 3 indifference points. What are the 3 indifference points? Look at here. 300, 550, 800. What we'll do now? Less than 300, greater than 800. We'll classify like that. Next, greater than is equal to 300, less than or equal to 800. So ultimately what we are going to do? Situation or number of cases. Number of cases, decision. Situation is less than 300. Less than 300 cases, nothing but less than indifference point. We have to go for which option? Less fixed cost. Less fixed cost. Which option has the less fixed cost? Which option has the less fixed cost? A. Are you understanding? So decision is go with A. Are you understanding? Next, greater than 800 cases. That means greater than indifference point. High fixed cost only. Less than indifference point, less fixed cost. Greater than indifference point, greater fixed cost. Are you understanding? Which option has the greater fixed cost? C. Go with the C. Are you understanding? Greater than or equal to 300, less than or equal to 800. Which option is better? B. That's all. Are you understanding? We have 3 indifference points, taking less than 300, greater than 800, in between that. Are you understanding? All of you? So this is how we have to go. Next. This is the interpretation. Let it be. Now, if the present case load is 600 cases, and it is expected to go up to 850 cases in near future, select most appropriate on cost considerations. They are asked to select which option is most appropriate. Tell me 600 cases, which option is better? Look at this. When there is a 600 cases, which option is better? B. Because in between 300 and 800. When it is 850 cases, which option is better? C. Greater than 800. Are you understanding? This is how we need to make the decision. All of you clear about this? So first calculate the indifference point, then write the interpretation, then make the decision. Clear? All of you? Okay? Now, there is one question, application oriented, important question. I took the solution also. Look at this. Just two more questions. Look at this. XY Limited makes two products X and Y whose respective fixed costs are F1 and F2. Let me write this. See here. There are two products. What are the two products? X, Y. What is the fixed cost of X? F1. What is the fixed cost of Y? F2. You are given that the unit contribution of Y is 1/5 less than the unit contribution of X. So they are interlinking Y and X. What they are mentioning? Unit contribution of Y is less by 1/4 of the sorry 1/5. I'm sorry. Unit contribution of Y is 1/5 less than the unit contribution of X. Suppose if I take contribution, okay, contribution per unit contribution in the sense contribution per unit of X as X. Can you tell me how much is Y? 4/5 of X. 1/5 is less. Means balance is what? 4/5 of Cx. Okay, this I am taking it as contribution of X. Contribution of X. Y is 4/5 of Cx. Are you understanding? Next. And then they given less than contribution. Okay. Contribution of X. That the total of F1 and F2 is 1,50,000. Total of F1 and F2 is 1,50,000. Next. That the break-even of X is 8,800 units per break-even point of X. F2 is not considered. Okay. This is only X. X means they will consider only F1. Why they will consider F2? Are understanding? So what they are mentioning that the break-even point of X is 1,800 units. Let me take that point. Break-even point equal to 1,800 units. Break-even point equal to 1,800 units. Now tell me formula for break-even point units. What is the formula? Fixed cost divided by contribution per unit equal to 1,800. Can I write fixed cost divided by this 1,800 belongs to X? That means can I write it as X, Cx? Can I write it as Cx? Okay. What is the fixed cost of X? F1. So F1 divided by Cx equal to 1,800. Can I write F1 equal to 1,800 Cx? Are you understanding? All of you? Next. F2 is not, and that 3,000 units is the indifference point between X and Y. That is, X and Y make equal profits at 3,000 units volume, considering their irrespective fixed cost. So 3,000 units is the indifference point. At that indifference point, profits are same. That is what they are mentioning. Both X and Y have the same profit. Are you understanding? So how to calculate profit? One of the formula is contribution minus fixed cost. One of the formula is contribution minus fixed cost. Are you understanding? Now, at 3,000 units, profit of X equal to profit of Y. That is what they mentioned. Correct? How to calculate profit of X? Contribution minus fixed cost equal to contribution minus fixed cost. What is the contribution of product X? 3,000 units into Cx. Per unit is Cx, na? Into how many units? 3,000 units. We are doing at 3,000 units here. Are you understanding? So 3,000 into Cx, 3,000 Cx minus F1. Correct? Which equals to, what is the contribution of 3,000 into 4/5 of Cx minus F2. Are you understanding? Now what I'll do? 3,000 Cx minus F1 equal to, this is how much? 2,400 Cx minus F2. In place of F2, can I write 1,50,000 minus F1? Are you understanding? All of you? Now, 3,000 Cx minus F1 equal to 2,400 Cx minus 1,50,000 minus of minus plus. Plus in place of F1 I will write 1,800 Cx. 1,800 Cx. Are you understanding? Now 3,000 Cx minus F1 equal to 2,400 plus 1,800. How much it comes to? 4,200 Cx minus 1,50,000. Correct? Now, oh sorry. Here also 1,800, na? Okay. 3,000 cx minus 1800 cx equal to 4200 cx minus 1,50,000. Let's take cx on one side. Now tell me what is the net value of this? 1200 cx equal to 4200 cx minus 1,50,000. Now if you take on the, if you interchange these values, 3000 cx equal to 1,50,000. So cx equal to 50, yeah, correct? Cx equal to 50. 4/5 of cx is 40. So 50, where is that 40? Therefore 40. Are you understanding? That's what they calculated. It is application of the break-even point and indifference point. This question is the application of the break-even point and indifference point. If you don't know these two concepts, you cannot solve this question. Are you understanding? You need to have the background understanding of the indifference point as well as the break-even point. All of you clear about this? So this is one of the application-oriented question. Again, important. There is a chance to come in the examination. Clear? All of you? Okay. Now, there is one concept called as the limiting factor. Last concept. Let us understand the concept of limiting factor. Now, limiting factor is also called as the key factor. One more name for this is key factor. What is this limiting factor means? Okay. What is this limiting factor? See here, whenever they want to produce the product, there are multiple resources required. Correct? What all the resources required? Raw material, labor force is required, machine force is required, overhead cost is required. There should be capacity in the company. Are you understanding? So there are multiple resources required to produce any product. Let me take an example. The resources whatever required is raw material, labor hours, mission hours, capacity, overheads. These are the resources required. Suppose raw material is not available. Can you produce the product? Then raw material is the limiting factor. Are understanding? Raw material is available. Mission hours is not available. Then what is the limiting factor? Mission hours. Limiting factor means the resource which limits the production. The resource which limits the production is called as the limiting factor. Are you understanding? All of you. So, and one more thing. See here. Production required is 2000 units. Hours per unit equal to 2 hours. Hours per unit equal to 2 hours. Are you understanding? Now tell me one thing. To produce 2000 units, how many hours required? 4000 hours. But the available is 3000 hours. Required is 4000. Available is 3000 hours. With the 3000 hours, how many units we can produce? 1500. But what is the requirement? 2000. There is a reduction of 500. Because of what? Hours. So hours is the limiting factor. Are you understanding? All of you. So what is limiting factor means? The resource which controls the production, which limits the production, which reduces the production is called as the limiting factor or key factor. It can be raw material, it can be machine hours, it can be labor hours, it can be production units, production capacity, or it can be overheads. All of you understanding? Okay, now let me take one example. There are two products A, B. There are two products A, B. Selling price 10 rupees, 15 rupees. Variable cost per unit. Selling price 10 rupees, 15 rupees. Variable cost per unit 6 rupees, 9 rupees. Can you tell me contribution per unit? 4, 6. Now tell me which product you will produce. Which product you will produce? B. Why you are not producing A? But it's not giving the loss, na? What I mean to say, it is not giving the loss. The answer is both. Because both are giving positive contribution. When, if all the resources are available. Are you understanding? If everything is available, I'll produce both. I'll comfortably produce both. You answered B, but please understand, A is not making loss. It's a profit-making product. 4 rupees it is making per every 1 unit. So the answer is both the products we are going to produce if all the resources available. Are you understanding? If I ask you the question, which product you will produce first? My question is what? First initial what I asked, which product you will produce? Both. Which product you will produce first means B, because B is giving more contribution. Are you understanding now? So let me develop the examples here. Demand 1000 units, 1000 units. Kgs per unit. It require 1 kg, it require 2 kgs. Now, to fulfill the demand of A, to satisfy the demand of A, how many kgs of raw material required? Huh? Why? 1000 kgs. Demand is 1000 units. Each unit require 1 kg. So 1000 into 1000 kgs. To fulfill the demand of B, how many kgs required? 2000. What is the total raw material required? 3000 kgs. But available equal to 2500 kgs. Are you understanding? Requirement is 3000 kgs. Available is 2000. That means there is a limiting factor. What is the limiting factor? Raw material. Are you understanding? Now we need to decide which product to be produced first. Are you understanding? If everything available, both the products. Comfortably you can produce both the products. Are you understanding? Now when there is a availability is less compared to requirement, then we need to decide which product to be produced first. How to decide? That means based on contribution per limiting factor. We have to decide based on contribution per limiting factor. Kgs is the limiting factor. So you have to decide based on contribution per kg. Are you understanding? Per unit how much? A. Per unit how much? Contribution per unit. 4 rupees. How many kgs required? 1 kg. So 4 by 1 kg. 4 rupees. Contribution per kg. Contribution per kg. 4 by 1 kg rupees. 4 rupees per kg. Can you tell me for B? Rupees 3 rupees per kg. A is giving by taking 1 kg. How much contribution? 4 rupees. B is giving by taking 1 kg. How much contribution? 3. Which you will produce first? A, because A is giving more for the per kg contribution. Are you understanding? So whenever there is a limiting factor, you have to decide based on the contribution per limiting factor. Kgs is the limiting factor, so calculating contribution per kg. Suppose labor hours is the limiting factor, then you will calculate contribution per labor hour. If machine hours is the limiting factor, then calculate contribution per machine hour. If overheads is the limiting factor, calculate contribution per rupee, because overheads is in rupees. Are you understanding? All of you understanding? It's okay. So we'll rank. First rank is given to A, second rank is given to B. So first we'll produce A, then we'll produce B. Clear? Now tell me what is the available raw material kgs? 2500 kgs. Out of 2500 kgs, how many kgs taken by A? 1000 into 1 kg equal to 1000 kgs. What is the balance? 1500 kgs. By taking this 1500 kgs, B can produce how many units? 750. B can produce 750 units by taking 2 kgs. That is 1500. It will become 0. That means how many units of A we are producing? 1000. How many units of B we are producing? 750. So optimal product mix. Optimal product mix equal to 1000 units of A. Okay, I'll write here. Optimal product mix A is to B equal to 1000 is to 750. Optimal product mix A is to B equal to 1000 is to 750. Are you understanding? All of you? Okay. So what is this optimal product mix mean? We can make the maximum profit. This is the mix which we can make the maximum profit. So this is the application of the limiting factor. So first what we need to do, we need to identify the limiting factor. First we need to identify the limiting factor. Calculate contribution per limiting factor. Then decide the product mix. All of you clear about this? Understanding? Okay. Let's do one question based on that. Question number 12. Question number 12. XY Limited supplies spare parts to an aircraft company Y Limited. The production capacity of X Limited facilitates production of any one spare part for a particular period of time. The following are the cost and other information for the production of, what is the page number? 10 point? 14.39. Okay, now. X Limited is into manufacturing of the aircraft spare parts to the aircraft company Y Limited. The production capacity of X Limited facilitate production of any one spare part. The X Limited has the capacity to produce only any one spare part for a particular period of time. The following are the cost and other information for the production of the two different spare parts A and B. They given two spare parts A, B, but company has the capacity to produce only one spare part. Are you understanding? They given both A and B, but company has the capacity to produce only one spare part. Are you understanding? Now, if you take A, how many kgs of alloy required? 1.6 kgs. How many hours of machine? Sorry, how many hours of machine P required? 0.6. How many hours of machine Q required? 0.5. When it comes to part B, how many kgs of alloy required? 1.6. How many hours of machine P required? 0.25. How many hours of machine Q required? 0.55 hours. Are you understanding? Next, they given target price of A 145, target price of B 115. Total hours available machine P 4000. Total hours of machine Q 4500. Total alloy available 13,000 kgs. Are you understanding? See, actually, in this question, according to given information, how many resources required to produce the part A and part B? What are the resources required? 3 resources. What are the 3 resources? Alloy. Alloy is the raw material. Alloy usage. This is the raw material. Are you understanding? Alloy, machine P time, machine Q time. These are the 3 requirements. Nothing else is given. Are you understanding? The requirement is raw material, machine P, machine Q. All of you clear? Now, machine P, totally how many hours available? 4,000. Machine Q, totally how many hours available? 4,500. Alloy, how many kgs available? 13,000. And what is the price of alloy? 12.5 per kg. Variable overhead per machine hour. Machine P. Machine P hourly rate is 80 per hour. Machine Q hourly rate is 100 per hour. All of you understand the information? Now look at the requirement. Identify the spare part which will optimize contribution at the offered price. They are asking which part, which is spare part, can optimize the contribution. When you say optimized contribution, more contribution or less contribution? More. Optimize means which is in favor of us. We'll think to increase the contribution or decrease the contribution. Increase the contribution. So optimized contribution means which spare part will give the more contribution. So to answer this, we need to calculate contribution of spare part A, contribution of spare part B. Are you understanding? All of you. How to calculate contribution per unit? Selling price minus variable cost per unit. Are you understanding? Selling price minus variable cost per unit. Are you understanding? Now, what is the selling price of spare part A? What is the selling price of spare part B? 115. Now we need to calculate variable cost. When I say variable cost, alloy, machine P, machine Q. Alloy, tell me part A, how many kgs is required? 1.6. See, I'll do for part A only. We'll discuss B later. Part A, selling price is 145. This is the sale price. Now I'm calculating variable cost. When it comes to variable cost, first alloy. How many kgs of alloy required? 1.6 kgs per unit. Into what is the selling price? Sorry, what is the purchase price of alloy? 12.50. Can you tell me the alloy cost? Next, machine P. How many hours required? 0.6 into hourly rate is 80. How much is the value? 48. Correct? Q. 0.5 into 100. 50. Now can you tell me contribution per unit? 27. Have you understand this? All of next. B. What is the selling price? 115. Can you tell me alloy cost? 20 only. 1.6 into 12.5. You will get 20. Next. P. 0.25 into 80. 20. 0.55 into 100. 55. Can you tell me the contribution per unit? 20. So when it comes to A 27, when it comes to A 27, when it comes to B 20, into number of units, we'll get the contribution. Are you understanding? Now we need to calculate the number of units. How to calculate number of units? Tell me one thing. Totally, how many kgs of alloy available? 13,000. Each spare part of A require how many kgs? 1.6. Can you tell me how many units can be produced with the available alloy? 8,125. Are you understanding? 13,000 divided by 1.6. Total available alloy is 13,000. Number of kgs required is 1.6. 13,000 divided by 1.6, 8,125 units of spare part A. Same way, can you tell me how many hours of machine P is available? How many hours of machine P? 4,000 hours. Each spare part of A require how many hours? 0.6. Can you tell me how many units we can produce? 6,666. That is 4,000 divided by 0.6. Are you understanding? Same way, can you tell me Q? We can produce 9,000. Now tell me, with the alloy we can produce 8,125. With the P we can produce 6,666. With the Q we can produce 9,000. But to produce spare part A, we require all the three. Now tell me, according to the requirement of all the three, how many units we can produce? 6,666. Simply I can say least of the above. Are you understanding? All of you? Now, suppose company decided to produce, they are taking decision to produce 9,000. What is the limiting factor? Mission P and alloy. Both are limiting factor only. They cannot produce 9,000. They want to produce 9,000. But mission P and alloy will not support. Those two are the limiting factors. Are you understanding? Suppose if they decide to produce 8,125, what is the limiting factor? Only P. Q supports 9,000, but requirement is only 8,125. Are you understanding? All of you. Okay, this question is based on limiting factor only, but not straightforward question, application oriented. This question is based on limiting factor only, but application oriented. Now, how many units of P can be produced? How many units of, sorry, total how many units can be produced means 6,666. Are you understanding? Into, what is the contribution per unit of A? 27. What is the total contribution? 900. 1,79,982 is the contribution of spare part A. Same way we need to calculate B. First tell me the units. This is for A. Tell me the units of B. 8,125 because 13,000 divided by 1.6. Better. Next. 4,000 divided by 0.25. 16,000. Next. 4,500 divided by 0.55. 182 or 81. Okay, leave it. Now tell me B. With all the three resources, how many units we can produce? 8,125. What is the contribution per unit? What is the value? 1,52,000? 1,62,500. Okay, 1,62,500. Now tell me, here what they are asking. Identify the spare part which can optimize the contribution, means which can maximize the contribution. Spare part A, 1,79,982. Spare part B, 1,62,500. Which spare part you recommend? Here is the answer. Have you understand till here? All of you. Next. Roman number 2. If, see, I think they are also given the same thing. 1,79,982, 1,62,500. So first they calculated units and then they calculated contribution per unit. But we calculate contribution per unit first and then we calculate the units. Nothing wrong with that. We can do that. Are you understanding? Next. Look at the second requirement. Look at the second requirement. If Y Limited reduces target price by 10% and offers 60 per hour of unutilized machine hour, calculate the total contribution from the spare part identified above. What is the spare part identified above? A. And what is the contribution? 1,79,982. 1,79,982. They are asking the question about the spare part identified above. What we identified is A. So no need to discuss anything about B. Are you understanding? Now the point is targeted price reduced by 10%. Targeted price reduced by 10%. And one more thing, 1,79,982 we are getting by multiplying 6,666 into 27. Do you remember? So units is 6,666, contribution per unit is 27. Now the point is they are asking two changes made. Number one, reduces target price by 10%. When the price decreased, contribution decreases or increases? Decreases. Are you understand? What is the decrease in price? 10%. What is the spare part price? Spare part A price 145. 10% of that 14.5. Are you understanding? That means price is decreasing by 14.5. So due to decrease in price, how much is the contribution decreases means 6,666 into 14.5. How much it decreases? 96,657 will be decreased. Correct? Next, there is one more adjustment. Offer 60 per hour of unutilized machine hour. If there is any unutilized machine hour, they are going to pay 60 rupees per hour. Are you understanding? Now look at here. We are discussing about A. Is there any unutilized time of P? Is there any unutilized time of P? Okay. Machine P, totally how many hours available? 4,000. Divide by 0.6. Divide by 0.6. 6,666. So total time utilized. There is no unutilized time of machine P. Are you understanding? Now, machine Q. We are producing 6,666. Correct? Into how much time of machine Q require? 0.5 into 0.5. How much it comes to? 3,333. What is the total time available? 4,500. 4,500 is the total time available. Now tell me unutilized time. 1,167. 1,167 into what is the compensation? 60. This is the compensation benefit getting by the company. We need to add that. Now tell me the value. 70,020. They are asking calculate the total contribution from the spare part identified above. They are asking to calculate revised contribution. So now calculate 1,79,982 minus 96,657 plus 70,020. 345. That is the answer. 1,53,345. Have you understand this? So these are the three concepts which is important in the marginal costing. What I didn't discuss is shutdown point and one more thing, marginal costing versus absorption costing, that is not much important for the examination. So that because it will be so complicated, even if I explain, you're not in a position to receive. Not required also. Only one time asked in the examination. The maximum possible is majority of the time they are asking the CVP. Majority of the time they are asking the CVP. Are you understanding, all of you? Okay. Now